of whether headline inflation or core inflation should be used for policy making. If this debate leads to softening of the broader banking policy environment, it may cause a turnaround in the fortunes of lagging banking sector stocks. The potential negative impact of rate cuts driving net interest margin compression and EPS cuts would likely be more than offset by easier liquidity and easier banking sector regulations. They remain overweight banks and financials.
Okay, let's move on macros. Shantanu Sengupta of Goldman Sachs says resilient domestic growth along with elevated food inflation has kept the RBI from easing policy rates until now. They're of the view that RBI will ease by a total 50 basis points going forward. That is 25 basis points each in December of this year and February next year on the back of easing food inflation and slowing growth.
All right, well, that's the macro market call coming in on inflation. Well, let's welcome in Lynn Alden, founder at Lynn Alden Investment Strategy. Lynn, great to have you with us here back on the program. Thank you for your time. Prashant here. Just a quick word, Lynn, on the roadmap for global equities from here as you see it. Do you see enough there to sustain a bit of a move, a rally here, or you think it's a bit tricky here?
I would be cautious until we see new highs on major indices. I think the biggest variable to watch right now actually probably ties to Chinese economic policy. In terms of both fiscal and monetary policy, that's probably the biggest lever right now. Their sluggish kind of domestic economy continues to weigh on commodity sectors, continues to weigh on a number of industries. And they have the tools to reverse that should the pain of the current situation offset some of their other goals that they're pursuing. But overall, across their fiscal and monetary sector, I think that's probably the biggest variable. And until we have more clarity on some of that, as well as some other variables, I think we're in more of a neutral zone right now for a lot of different risk assets.
Okay. Lynn, hi, morning. So what's the sense for Wall Street now if we get the rate cut as planned? First of all, what camp are you in? 25 basis points, 50? And if it's 25 and there is a semi-Goldilocks scenario still playing out, is it still, a risk-on market that we're looking at?
Right, so I lean toward 25, but I don't have a strong conviction on what this one rate cut's going to be. I do think we're going to see a series of rate cuts. My expectation is that it's not going to be particularly impactful for the U.S. economy because so much debt is locked in at much lower fixed rates. I think around the margins, it's more impactful for financial assets at these levels when we're talking about 25 or 50 basis points, as well as powerful for the dollar index. And global markets. And so that's a variable that I'm watching, but it's actually not the biggest variable on my radar right now. I think right now the Fed is kind of overstated in terms of how much emphasis people are putting on it. And there are other variables in the economy, global economy, that I think are currently understated.
All right. Hi, Lynn. Good morning and good to see you in. This is Nigel on this side. Well, you have mentioned this in the past and it's known, right, that if there are rate cuts, then we'll have to look at emerging markets and some of them could potentially gain. How are you placed in a market like India?
Yeah, I'm broadly bullish on a number of different markets. So India, Latin America, China around the margins. There's a number of different markets that I think are good. I have some near-term concerns because the dollar index could be showing signs of a short-term bottom, a little bit oversold in the intermediate term. So when we look forward a little bit, I have a little bit of concern around, say, gold being overbought and the dollar being a little bit oversold. So once we get through that and get a little bit more clarity, I'm still structurally bullish on emerging markets and various anti-dollar plays as the Fed goes through a longer-term cutting cycle.
Lynn, we'll leave it there. Thank you very much for your time. Appreciate it here on CNBC TV18. As always, quick conversation with Lynn Alden, founder at Lynn Alden Investment Strategy. Lots of stocks to discuss, and we'll just tease it out for you in our top 10 segment, which is coming right up. Hero MotoCorp, GMR Airports. We have Tata Power, Dixon Tech, Action Construction Equipment, IRB Infrastructure, Ahluwalia Contractors, HG Infra, BKG Foods, and Gopal Snacks are stocks which perhaps should open in the green. There is none which is likely to open in the red this morning, at least essentially. It's news-based, news-related names. So that's what's coming up here on the other side with the research team. Top 10. Stay with us.
Good morning. We've been telling you that it's a little quiet across Asia, but there's a lot of stock-specific action that we're going to have our eye on, and our research team is standing by with the CNBC-TV18 list of top stocks to watch. And kicking things off is Vinny, who is our new in-house expert on all things transportation, among other things and other sectors. Vinny, so kick it away. I guess we're talking about EVs, and Hero is going to be in focus because of that.
Absolutely. Specifically keeping an eye out on Hero Motor, we could be expecting a positive move. Why? Because Ather Energy, which is backed by Hero Motor Corp, has filed for DRHP just last evening. Now, Hero Motor Corp holds around a 37.2% stake in the company. They're not going to be selling any of their stake which they're holding. Among the sellers, and this is an OFS that we're seeing. So yes, what we're going to be seeing, seller is going to be Caladium Investment, which is GIC Ventures subsidiary. They will be selling around 47.8% of the total offer of issue that is going to be there. And other than that, we'll have Tiger Global as well as 3 Straight Ventures, which will also be offloading some bit of a stake. Now, obviously, we've seen a lot of interest that's been building in terms of the EV side and EV industry. Ola Electric had a good IPO, and that is why we're expecting value unlocking that will be coming in for Hero Motor Corp, given that there's so much interest in the market for the EV space. So keeping an eye out on Hero Motor, a positive move is what we could expect today in the stock.
Okay, all right, Vinny, good to have you on board, and thanks a lot for that. Well, let's hop across to Vivek. He's tracking a whole host of stocks, including GMR as well as Tata Power. Morning, Vivek.
Well, good morning. Very interesting deal coming in from GMR Airports. Now, remember the company that held 64% stake in DIAL, which is the Delhi International Airport. Now, yesterday has announced that it plans to go ahead and acquire an additional 10% stake from a minority shareholder that was holding 10%. The minority shareholder was Fraport AG Frankfurt Airport Services. Now, this particular stake buy will be done at a valuation of $126 million, thereby valuing the airport arm at $1.26 billion. So, post the acquisition, what will be the shareholding of DIAL? Our minority shareholders, that is GMR Airports, will be holding 74%. The remaining 26% will be held by Airports Authority of India. Remember, the deal is subject to AI's approval as well as the approval of shareholders. The company expects to conclude the deal in the next 180 days. Now, talking about Tata Power has mentioned yesterday that they have commenced solar cell production at the 4.3 gigawatt solar cell as well as the module manufacturing facility that they have in Tamil Nadu. The positive development, the company also expects to go ahead and ramp up production with the remaining 2 gigawatt capacity. So 2 gigawatt is operational, another 2 gigawatt is expected to be operational over the next 4 to 6 weeks. Remember, the company had committed close to 4,300 crore of capex to go ahead and manufacture both cells as well as modules from this particular facility.
All right, thanks very much, Vivek, for that. Well, let's talk about Dixon and Action Construction Equipment as well. Upasana's details here. Upasana, morning.
Good morning. First up, let me start with Dixon Technologies. Company's wholly owned subsidiary, that is Paget Electronics, has entered into a MOU with HP India Sales Private Limited to manufacture notebooks, desktops and all-in-one PCs. Company says it will be able to bring a range of HP personal systems to Indian customers, and mind you, HP is the leading global provider of personal computing and other digital access devices. Next up is AC. On the back of the order win, the company has received order from Ministry of Defence for the supply of 99 forklifts. Hence, even this stock will be in focus. So all in all, I expect both these stocks to open in green today.
Okay, Upasana, thank you very much for that. Let's head back to Vivek. He's watching out for a couple more names, including IRB Infra. Vivek, tell us more.
Well, that's right. Whole host of infra companies will be in focus today. First on the list is IRB Infra. Remember, for the month of August, the company has gone ahead and reported the operational toll collection update for both IRB Infra as well as its InvIT. So the collections have come in quite strong, 502 crore versus 417 crore on a year-on-year basis, which is showing a growth of a little over 20% on a year-on-year basis. So strong collections. Company also says that they expect the positive momentum to continue, and they in fact expect it to strengthen with the approaching festive season in the coming months. In the month gone by, the company says that there was quite a lot of disruptions on account of adverse weather conditions. Talking about Ahluwalia contracts, the order win coming in, the company has got 2 two group housing projects at Gurugram. The order values are at 1,144 and 1,163 crore respectively. Remember, the company's order book now stands at a little over 13,140 crore and anticipating an order inflow in the range of 25 to 3,500 crore. So this goes a long way in going ahead and ensuring the company meets its FY25 target. Talking about HG Infra, the company has received a letter of award from MORTH for a road project in Gujarat. The company's bid was at close to 781 crore and the construction period is for 2.5 years. The company's order book currently stands at 15,640 and HG Infra expects order inflow in the range of 11 to 12,000 crore in FY25.
Okay, all right. Thanks a lot for that, Vivek. Well, let's wind this down then with Manglam, who's joining in to tell us about a couple of those namkeen snack companies. Hey, Manglam.
Good morning. So, let's put the clarification out from what has happened in the GST Council meet yesterday. They've gone ahead and cut the rate from 18% to 12% on extruded namkeen snacks. Now, for those who are believing that this would make our bhujiyas and all the other namkeens cheaper, perhaps not, because this is only on extruded namkeen snacks. GST on namkeen and other savory items like fruit and vegetable chips, bhujiyas, snack foods, etc. are already at 12%. So what does extruded snacks include? It is, the likes of your cheese puffs or potato puffs or something like a kurkure, etc. Those may get, aligned from 18% to 12% as all the others are trading at. This rate cut is basically ratification of the earlier discrepancy, so does not mean an immediate benefit for everyone. There would be a sentiment uptick that we would see on names like Bikaji, Pratap Snacks and Gopal Snacks, but the long-term beneficiary of this would be extruded snacks makers, the likes of Britannia and the unlisted players, the ones who make kurkure, etc.
Okay, all right, got it. Well, that's definitely going to be an appetizing piece of news to watch out for all the Bhujia fans out there. Thanks, Manglam. Let's quickly recap our list of top stocks to watch. The ones that have positive news flow around them are Hero Moto, GMR Airports Infra, Tata Power, Dixon Tech, Action Construction, RB Infra, Ahluwalia Contracts, HG Infra, Bikaji Foods and Gopal Snacks. There's no stock actually on the radar that could open up in the red just purely on the back of news flow. So going with an all-green list today. That's on the equity side. What about the world of commodities? We have Manisha Gupta to join in for a quick wrap of all the overnight action. Manisha, good morning.
Morning, Sylvie. Thank you so much for that. Well, I'll start with the crude oil prices, where we have seen 1% of gains in the overnight market. Remember, last week was a 10% decline, and the third quarter till time is 15% down for the crude oil prices. The latest surge of gains or opportunity buying comes in because of supply disruption concerns from tropical storm Francine. Now, the National Hurricane Center has forecasted that this will strengthen into a Category 2 hurricane before making a landfall on Wednesday. And a lot of facilities there have been shut, evacuated ahead of this, and that is what has added premium to prices. In any case, it was slightly oversold with the kind of declines that we had seen. So some buying is what you are seeing in crude. But there is a bit of a buying that you are seeing across precious metals also. Gold is back above 2,500. Silver prices gained up 2% overnight. There is a higher chance of 25 basis point rate cut. But ahead of that, you have the U.S. inflation data coming in on this week. You have the CPI numbers on Wednesday and the producer price index on Thursday. So that will keep the markets volatile. Within the base metal prices, it's only perhaps tin which is trading in the positive, copper a bit as well, but aluminum continues to hold around 2-month lows. Iron ore prices near a year low as well. So it's a mixed bag when it comes to the industrial metals.
All right, Manisha, thank you very much for that. So, some big moves as far as commodities are concerned. Of course, the large one is iron ore prices, which are now below $90. For the first time in 2 years now. We'll take a break. Amnish Agarwal of Prabhudas Leader will be joining in with some fundamental stock conversation. That's coming up in just a bit.
If you look at our multi-asset allocation fund, our net equity exposure can come down to a minimum of 20. It can go up to a maximum of 80%. Currently, we are less than at the halfway mark at about 45%. So in a way, it is an underweight equity stance in the context of asset allocation that we make in that scheme. In terms of sectors which are attractive, honestly, there's only one sector top down that we find reasonably attractive at this point of time. It's a combination of above average fundamentals with below average valuations, and that, roughly speaking, is the banking and financial services sector. So though that's the one sector where I have absolute comfort.
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get
Welcome back. Well, hope you're having a good morning. Well, let's get into some fundamental analysis. And to help us out with that, we have Abneesh Agarwal, Head of Research at Prabhudas Lilladher, who joins us on the show. Hi, Abneesh. Thanks a lot for joining in and good to see you. And as always, wanted your view on this entire EV play. We had the management of Ola who was sounding very aggressive the last couple of days or so ago with regard to market share, with regard to profitability as well. And we could potentially have a new kid on the block, which will be Ather. How are you viewing this space? We have the incumbents, the larger names like Bajaj, who are making good inroads and are in fact gaining market share as we have seen in the last 5 to 6 months. So your view?
You see, the space actually looks very interesting more from the two-wheeler angle. Because in two-wheeler, you see, people usually look at economy and EVs actually provide a very good economic value as far as your consumers are concerned. Now, coming to the stock specific, I think your EV players, they have been gaining ground except for last year when due to the FAME subsidy issues, the sales growth was not that high. But having said that, whether it is Ather, which is backed by, say, your Hero, or whether these are players like TVS and Bajaj, they are also making, you can say, big inroads into it. And given the fact that these guys already have huge distribution muscle with them, I think over a period of time, all the existing your players will also make a significant inroads into the EV segment. So per se, the outlook on, you can say, EV companies look positive. But having said that, as the larger players like Bajaj, Hero, TVS, they have started making big inroads into the segment. I think among the new players which have entered the segment, I think only a few will actually be profitable and sustain in the long term.
Okay, so which ones do you like, Abneesh, then? How do you play it?
You see, the main thing is that if you look at, say, last 15 to 18 months, people have been trying to play it more through some auto angles. But I think always direct play is always better. So as of now, I think we have got only one direct play, which is Ola, which I think seems to be not cheap, but in the long term, I think being the largest player, it seems very well placed. And even Ather, I think the losses are high, the losses are mounting. But given the fact that it is backed by Hero at some point of time, I think the company will also start gaining traction. So I think there are two ways to play. One will be to, you can say, bank on players, whether it is TVS, Bajaj or Hero, which are making a sizable inroads into this segment. Or the second is if you want to go for a pure play, as of now, I think it is only Ola Electric. And around, say, 100, 105, 10, the stock looks reasonably interesting.
Got that. No, fair enough. I just want to pull up Paytm. Paytm had a sharp move yesterday, ended about 4-5% higher. And that block is going to happen. I mean, and we put that out on Chatter as well with Nimesh. That block is very much sort of on the anvil over the next 1 or 2 days. Will that be a sort of, a clearing event for the stock, and then it kind of looks ahead in a more sustained fashion? We will see. But in the last 20 minutes, it moved about 20 rupees. Any thoughts here, Amnish? I don't know if you have coverage or any thoughts on this one.
You see, Paytm, one can only say that the things are improving. For example, they got a big cut in their revenues and all when when this entire payment banks, they got some, you can say, thrash from RBI and it got banned. But I think in their existing business, which the otherwise your payments business, which they are doing, I think they are very well placed there and they are growing. So in terms of profitability, may take at least say 3 more years, but I think at the EBITDA level, they are growing over there. And one can only say that from these levels, I think the worst might be over for the company in terms of say numbers or in terms of news flows as of now. And in the medium to long term, I think the stock price will be a reflection of how they actually grow their remaining businesses and if there is any way back, if they can get, you can say, compliant in the part of the business which they have been asked to stop by RBI.
Oh, okay. So that's Paytm. Let's see if there's any kind of favorable development. Of course, Nimesh has been telling us that maybe there could be some sort of interesting investor action in Paytm. He's been picking that up in D Street Chatter. Amnish, hi. So the snack makers have something to cheer about today with this lowering of GST. Any interest in these names? Pratap, Bikaji, Gopal Snacks? Any views here?
You see, among all these companies, if you look at, say, the Pratap and particularly your Gopal, so they are more centered on, you can say, rupee 5, 10, 15 kind of a packs in the snacking category. Whereas Bikaji is more on, you can say, family packs, more on sweets and all those things. So to that extent, I think the plays are very, very different in these two kind of companies. But having said that, in the longer term, the sustainability of Bikaji looks better than the other two because when you are selling more of a 5, 10 rupee packs, then your margins fluctuate a lot with the fluctuation in the raw material prices because you don't want to lose that 5 rupee or 10 rupee price point. So difficult for me to take a call specifically, but structurally, I think Bikaji seems to be better placed as of now.
Amnish, final question before we let you go. Crude oil prices have come down. We have seen price hikes that have been taken by some of these paint companies, and the paint companies actually have been big underperformers, the incumbents. Berger, Asian, Kansai as well. In the last 1 year, virtually unmoved, and the Nifty is up 25%. Do you think the time has come now to give them a look? Quality companies, the new player has come in there, and it seems there are a couple of tailwinds as well. Your take?
You see, 1Q was not good for the paint companies, and the reason why they underperformed in the last 12 months was predominantly because people feared that Grazim will come, the competitive intensity will increase, and so the profitability of many of these companies will get impacted. Now, two things here. First being that as far as your margins are concerned, their margins, you can presume, literally peaked out in FY24. Now, with the 1Q, there was some sort of a margin hit. But having said that, with the price increase which has happened in the crude, which has softened, the benefit will be seen in the third quarter of this year. But having said that, people are of the view that the increase in the intensity post Grazim's entry or the impact of Grazim as of now is not that much. And while 2Q due to rains and all might not be great, 3Q would be something to watch out for. But our take is that the impact of Grazim is not going to say be visible or fade away in the next 1 quarter or 2 quarters. It's a very long game, and the paint is a category where you need to build it brick by brick. So even now, I will not say rule out Grazim. You can say hitting back in the long term because it's a marathon. But having said that, some of these stocks, they were big underperformers, but from the bottom, they have also rallied by 20%. So there still might be some steam left in many of these stocks. But particularly, I think maybe Kansai and some of the other sector, you can say the mid-sized companies, they are cheaper. But many of these large companies, they are not very cheap, given by the fact that the 1Q was not very good. So I would say still very cautious in making fresh entry into many of these names because post the run-up which has happened in the last, say, 3 to 4 months in particular, I think we might be looking at in the near term maybe max 5, 7% or 10% more from you.
Okay. Amnish, stay on. We'll come back to you for some more questions. The next company on our radar is EPAC Durables. The stock has surged actually more than 35% in the current year, 2024 so far. The company reported quite a strong set of numbers for the first quarter as well. The management foresees new business opportunities with diversified new and existing customer base perhaps in focus. To talk about this, we have with us Ajay Singhania, Managing Director and CEO at EPAC Durables. Thanks very much, Mr. Singhania, for joining in. So you had a first, good first quarter, right? We're talking about a sales growth of, I believe, about 77%, margins at about 6.7%, and now we are approaching the festive season with Ganesh Chaturthi kicking off the festivities, right? So just tell us, what is the expectation you're working with? What is the channel inventory like? And like to like, last festive over this festive, what is the growth that you're hoping to achieve?
Yeah, so good morning. So first of all, especially the main product we are into air conditions, we have seen phenomenal growth at 77% in Q1, and the journey still continues. So even Q2 seems to be a very good track, and the channel inventory is at bare minimum. So the momentum continues for AC growth and AC sales, and we foresee that this growth would still continue in Q3 and Q4 onwards. So overall, AC, the market, we expect to grow at almost 30% plus this year, and we will definitely surpass the market growth. So at a company side, we're looking at a growth of almost 50%, 45 to 50% growth we are looking at overall compared to last year. And in terms of festivity, the small appliances, the small domestic appliances we are into, so probably there was some slowdown last year, but this year we are seeing again a phenomenal growth even in the small domestic appliances. So be it mixer, grinders, induction cooktop, every product we see good traction, and the order book is really good.
Mr. Singhania, good morning. So for the full year, what kind of growth are we expecting, sir?
So we are looking at something around 45 to 50% growth.
Overall top line growth?
Yes, yeah.
And this, and for smaller, across the board, there is no discounting as such, right? Or is there a fair bit of discounting which is already which you can see as we get into the festive period?
No, so this is like the current month, August, September, and October, the peak months for the festive sales. So definitely the growth is much more than what we saw last year. So we are again looking at a growth of almost, let's say, 60-70% this quarter.
Okay. Now, I meant discounting, or there isn't that much which is underway.
So, especially for us as an OEM, we work on the commodity prices. So the commodity and decrease in commodity gets passed on. So for us, there is nothing called discounting.
Okay.
All right. Hi, Ajay. Good morning. Good to see you in. What would it mean in terms of margins? 45 to 50% growth on the top line. And what is the margin band we should work with? And also, you're trying to diversify a little bit. I think currently RAC contributes 80% of your total mix, which you're likely to see it come down a little bit. Are you on track by FY26? Does it come down to that 70% odd?
Yeah. So FY26, yeah, we're definitely looking to bring down the dependence on AC as a whole. So probably 26, we should be somewhere between 70 to 75%, and the small appliances components put together contributing almost more than 25%. So that's the ideal picture we are looking at currently, and we are on track. The new appliances we've added, especially washing machine, is now completely ready, and we have started the pilot production in our facility in Sri City South, and we are very hopeful that from October onwards we'll start rolling out the product to the customers. Okay, all right. And you were giving us the margin band as well? Yeah. So on margin side at EBITDA levels, see, last year we achieved almost 8.1% of EBITDA margins. So although we aspire to continue the same momentum, but at the same time, since we're investing a lot into the future products and we are ramping up the teams to get ready for the next leap. So, but anywhere between 7.75 to 8 is ideally the band we are looking at in terms of EBITDA margins. Okay, all right. And just one more word, since you're entering a new segment, which is washing machine, what kind of capacity do you have? How does it fit into the industry capacity? This is especially for us, getting into washing machine is a strategic decision, because most of our capacity is created for AC. The manufacturing capacity I'm talking about are largely ideal during the non-AC season. And this is the time when washing machine really picks up. So for us, washing machine is a strategic product in terms of utilizing the overall manufacturing capacity. So, in terms of the capacity what we put up, it's almost currently we are starting with 40 to 50,000 units a month, and we'll gradually ramp it up to almost 150,000 in next 3 to 4 quarters. So this is what we are looking at. And see,
so fit into Mr. Singhania, go on. So
fit into the market. See, AC and washing machine both are under-penetrated currently in India. So AC is anywhere between 7 to 8% is the penetration, whereas washing machine is 10 to 12%. So there's a lot of room to grow, and especially fully automatic is one product which we are entering into with. So there is a lot of conversion which is happening, premiumization. So people are moving from semi-auto to fully auto. So this is where we see a gap in the market.
All right, Mr. Singhania, we'll leave it there. Thank you very much. Appreciate you joining in, and thank you for sharing those details with us. Let's put the focus back on the market itself. Anuj is here with what he's making of things. Anuj, good morning.
Good morning, Prashant, Nigel, Surbhi. The market is showing signs that perhaps it's ready for a new swing. It's been a perfect market for long-term trend followers. Had a rally from 23,900 to 25,300 in August. After that, had a bit of a retracement, and that retracement lasted for almost 35% or thereabout, which normally is a good indicator of a market ready for a next swing. So yesterday's low of 24,750 now becomes a bit of a line in the sand. The Bank Nifty again defended 100 exponential moving average and had a big rally yesterday, closed right at the 20-day. In fact, both Nifty and Bank Nifty closed at a 20-day exponential moving average. So today is crucial because we need to see if today we can close at day's high. If that happens, that would mark the end of the correction and perhaps start of a new swing. For today, you can also focus on metals and chemicals because my sense is the market will now start to bet on 50 basis point rate cut next week, which is when you have the Fed meeting, and because of that, you might see some rally in global commodities. In terms of levels to watch on the Nifty, the first support is 24,750 to 24,800, which is where yesterday's low is placed, and the options data is also placed. And the bigger support is 24,500 to 24,600, the 50-day exponential moving average. The resistance, where we would actually start, 24,930 to 25,025, the 20 and 10-day exponential moving average, and then 25,083 to 25,150 based on the call writer zone. On the Bank Nifty, it's interesting because we have the Fin Nifty's expiry today, and we close at 10 and 20-day exponential moving average. In fact, right in the middle of those levels of 51,111, which is the 10-day, and 51,122, which is the 20-day exponential moving average. So it's a bit of a make or break zone for Bank Nifty. The resistance would come at 51,380, which was Friday's high, which is when it looked like the Bank Nifty was ending its underperformance, and then 51,591 based on the options data. And the support comes in at 57,50 to 5850 options zone, and then 5350 to 5450, which is where the last 2 days low is placed. I leave you with the quote of the day. It's an anonymous quote, but good one. In a couple of years, you won't care about how long it took. You'll just be glad that you never gave up.
Inspiring as always. Thank you very much, Anuj. Really appreciate you bringing us, of course, all the data points in the market as well as some of those great thoughts. We will take a break on that note, come back on the other side, and now Mitesh Thakkar as well as Sudarshan Sukhani will join in with some trading ideas.
With Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
To stop the war.
It is making us traumatized, and it is very difficult us to study.
We have heard that there is a drop of bomb in the village of Maitays.
People are getting being like a monster.
This is a very critical situation for Maitai community. We, all the students of it, to stop the war to stop the prevailing situations in Manipur, and we have heard that there is a drop of bomb in the village of Maitays, and this is a very critical situation for Maitai community. And for the students of HRD Academy, from the students of HRD Academy, I would like to say that our minds have been distracted from this all situations and all. So we would like to stop this.
We want to stop all the wars that is happening between Maitai and Kuki tribes, and it is making us traumatized, and it is very difficult us to study, and then people are getting being like a monster, and we don't want that. So we are just making a human chain on that. On behalf of that, all our HRD students are here to make human chain.
Okay, welcome back. There's about 13 minutes to go for the pre-open session, and we'll have first rates starting to come up in that time. Let's just address a few other stocks which have been in focus. Yesterday, of course, private financials, banks did very well. And that actually was the reason why the broader market looked a little buoyant and there was that bounce. The Bank Nifty, by the way, ending about 1% higher. It ended above the 20-day moving average yesterday, technically speaking. Amnish is still with us. Amnish, what looks best here as far as private financials go?
You see, as far as private financials go, I think all the frontline private banks, as we have been talking earlier also, that if you look at the last couple of years, so PSUs rallied very sharply, and today most of the private banks, whether it is ICICI I think is an exception, HDFC, Axis, IndusInd, Kotak, so they are trading way below where your long-term price to book values are. It doesn't mean essentially that HDFC will again go back to 3.5, 4, or even IndusInd will go, but definitely the way these companies are poised, I think there is some room for them to catch up. Maybe say another 10-15% over the next 15 to 18 months can't be ruled out. But having said that, I think in terms of numbers, one should not expect a bit too much because your deposit rates are rising, the interest rate cut is round the corner, and in the initial phase of interest rate cut, banks actually will see some more compression coming on their NIMs. So it is, I think, purely, I would term it as you can say, the sectoral rotation which is coming in, and a sector which has, or a segment, I would say rather, which has underperformed in the last 15 to 18 months. I think there is catch-up in the banks which can happen, but it would be more in the medium term. It's not that on an everyday basis the banks will just continue to move.
Okay, so that's a view on banks. Amnish, any thoughts on Easy Trip Planners? I don't know if the company or the stock is on under your coverage or not, but there's so much news flow, right? They're getting into EV buses manufacturing, and now apparently there's a board meeting later this week to consider more acquisitions. Any views?
You see, we are tracking the tourism space, but I'm not on top of what is happening on the, you can say, new forays of the company.
Okay, so since you mentioned tourism, is it hotels? What is the best play for you if we are looking at anyone who wants to add a bit of tourism to the portfolio? Now there is a tourism index and there are passive products on that as well, but individual stocks, what would you pick?
You see, there are actually several ways to play tourism today. For example, hotel stocks last 2-3 years, they have rallied. Still, I think in the coming, this quarter, I would say mixed, but in the coming quarters, I think the bookings and all, they have been pretty strong for all the hotel companies. So I think hotel companies look good from here. From here on, not multi-bagger, but I would say some sort of a secular, you can say low to mid-teen kind of returns can come over the next 2 to 3 years. Then one can also play it through something like, you can say, aviation, where Indigo has been doing very well, more like a consolidated market. So Indigo is, I think, one stock we have been very positive about. In addition to it, your Shelley and Lemon Tree are the two other stocks which look good, quite interesting to us. IRCTC is another stock which we cover, but I think it is in a zone where the profit growth is not that high and the valuations don't have much scope to re-rate from the current levels. So I think one is your aviation and the second is hotel. These two segments look good as far as tourism is concerned.
Absolutely. There used to be a time when we used to talk about these Apple events and Apple launches just for the sort of, just because the products are fancy and very desirable, right? I mean, but it's not just that anymore. Apple and the Make in India that Apple is doing here in the country is actually quite large. The stated aim, of course, is for Apple to make 25% of everything it does out of India over the next couple of years or so. Already we are looking at tens of billions of dollars worth of output coming in from the country. So last night we had Apple coming out with its new product range, Apple the iPhone 16 and a bunch of other things as well. Also Apple Intelligence, which is the AI launch, which will happen in its beta form next month. Let's quickly get you a quick sort of update with what was done. This is Steve Kovac of CNBC with the details of what was announced and said.
Apple's going all in on artificial intelligence features for its new iPhones, but it's going to be several more months before we see if it's going to pay off. First, let's go over the new iPhone 16 lineup. Like last year, there are 4 models, 2 sizes of the regular iPhone 16 and 2 sizes for the 16 Pro. The big new hardware feature, a button on the side for controlling the camera shutter and other camera features. And speaking of the camera, the iPhone 16 is getting an exclusive AI feature later this year called Visual Intelligence that lets you point the camera at something in the real world and get more information. It's similar to features already found in products from Google, Meta, and OpenAI. Other than that, it's your standard iPhone upgrade. The screens are a little larger, the battery life is better, and the new processors help the phones run those upcoming AI features. As for the rollout of Apple Intelligence, Apple made it clear it's going to be a slow one over the next several months. The iPhone 16 will get the first AI update this fall with a limited set of features like summaries of your text messages. But the best AI features, like a more powerful version of Siri and integration with ChatGPT, won't come until later, and some won't happen until 2025. Apple did give some more hints about the AI rollout outside of its initial U.S. English launch this year. It'll come to other English-speaking countries like Australia and Canada at first, and more languages like Chinese and Spanish are coming next year. But overall, we did not learn too much new about Apple's AI plans. Besides the iPhone 16, 2 other product categories updates launching, a new version of the Apple Watch with a larger screen and thinner design, and a new version of AirPods Pro that can be used as a over-the-counter hearing aids. All of the products go on sale September 20th, giving Apple a few days of new product sales to end its quarter. But it's going to be many months after that before we find out if Apple's bet on AI pays off.
Okay, so that was Apple's big event and all the new snazzy launches announced overnight. By the way, that trade data that I was talking about, that's finally come out in China. Numbers just trickling in, and it's really strong, a lot better than expectations, because the export growth in August is 8.7%. The poll was 6.5%. And that's led to a bit of a rebound on the Hang Seng. Hang Seng was negative when we started the show, this conversation with you at 8 a.m. And now the Hong Kong markets flipped into positive territory. In fact, let's look at Shanghai. It's still down, but Hong Kong is the one that has turned around. So good export numbers out of China right now. More data trickling through. Well, with that, let's head across to our tech experts for a view on trade today. Mitesh Thakkar and Sudarshan Sukhani are joining in. Gentlemen, good morning to both of you. Mitesh, so let's talk index first. Do you see higher levels given the rebound that we saw yesterday? What's the view?
So, the one positive thing which happened was that the markets did not record a closing below this 24,800, 820 support zone. And while we had a recovery, it wasn't showing very strong signs of reversal. So my sense is that there could be a struggle for one, two more sessions around this level. In case we don't break below it, then I think, we will start this consolidation process, which I thought initially will happen between 24,800 to about 25,150 or maybe even 25,300. But in case we start breaking below 24,800, then I would be worried and cautious on the market. So for the time being, I'm watching the index closely. The good thing was the recovery in the bank Nifty, and a lot of banking stocks have turned the tide on the positive side. So my sense is that it might take another session or so. But if we can manage to, just hold above this level of 24,800, I think then the market should see a stronger bounce.
All right, Mitesh, very valid point. In fact, earlier today as well, we have made this point about the Nifty Bank. The recovery was very encouraging. But what are the levels you're looking out there? Because yesterday it made a low at around that 50,300, but the bounce was phenomenal. Tell us the levels you're tracking.
So, Nigel, on the downside, while the intraday low was around 50,370, the actual support level for me is around 50,400. So basically, you met the support level, had an intraday penetration, and then kind of came up again. On the upside, 51,400 has some kind of minor pivot on the 2-hourly charts, and then 51,700, 800 was the high, which 750 was the high, which the Bank Nifty made on the 3rd of September. So I think these are two targets on the upside, 51,400 followed by 51,750.
Okay. All right, gentlemen, stay on and we'll come back, get some trading ideas with you in terms of individual stocks as well. Quick break right now. We'll come back. We'll also have the pre-opening rates, as well as we'll connect with Abneesh Roy of Nuvama Institutional Equities as the government slash GST rates on namkeen. So what does that mean for some of the snack stocks?
does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com.
Welcome back. Well, in a few minutes, we'll get the pre-open rates. For the time being, let's go back to our technical experts who are with us. Sudarshan, I wanted your view on trade today, how you are approaching trade, the levels that you're tracking, and also you could fill us in with your stock picks.
Yeah, good morning. See, yesterday we had a small mild rally. Now the problem is that these rallies could be dead cat bounces or they could be the beginning of a new uptrend. Unfortunately, we cannot know in advance. So I am assuming that this market is likely to build a base, consolidate, and then only give us a sign that the bull market is resuming. So for today, the trade is to be carefully looking at a buying opportunity only on a dip. The fact that you buy on a dip brings your, say, risk lower. So if you get an intraday dip, take a chance and be prepared that it may or may not work out. As usual, I do not recommend any short positions at all. Now for the Nifty. Now my individual stock picks. SEC is a buy with a stop under 23.90. Power Finance Corporation, which has rallied significantly, is now an intraday short with a stop above 540. Tata Motors also is giving signs of distribution. Look to go for an intraday short, stop above 1050. And finally, Metropolis Healthcare is a positional buy with a stop below 2120.
Mitesh, good morning. Sudarshan, good morning to you also. Mitesh, what would your individual stock calls be for the morning?
Morning, Nima. I have more of buy calls, couple of FMCG names and a banking name features on the list. So I have a buy on Dabur. It made a fresh swing high. A good setup on the short-term charts. So keep a stop below 654. Look for a first target of 680. Britannia is the other one from the FMCG sector. Keep a stop at 5850. Look for targets of around 4100. And HDFC Bank makes the final buy call, which is a buy with a stop at 1633 for targets of 1680. One sell call though, which is Cummins India. Keep a slightly higher stop at 3755. Look for a target of around 3500.
Okay, all right. Thanks a lot for that, gentlemen. We'll come back to you for your 9-10 call. For the time being, let's get in some strategies, derivative strategies from Soni Patnaik of JM Financial. Hi, Soni. Good morning. Good to see you. And as always, what's on your radar today and how are you approaching trade?
Good morning, Nigel, Reema, Prashant. Thank you for having me on the show. So I think for Nifty, intraday resistance is somewhere around 25,050. Only above that, we can see a 50 to 70 points of a short covering. Important crucial level for Nifty to watch out would be 24,800, below which fresh round of selling can be seen. For Bank Nifty, the intraday resistance is around 51,250. Above that, we can see a small short covering on intraday basis towards 51,600 to 51,700. I think these are the key levels to watch out for when it comes to indices. But it does not stop us from tracking good stock movements. We can see fresh breakouts coming in FMCG space. I think Dabur is a stock to clearly look out for. It has built up very fresh long positions and has given a very strong breakout. So we recommend a buy in Dabur at around current levels of 662 and on very small declines up to 656, keeping a stop loss of 645 and a positional target of 695 to 700 can be seen. A short-term intraday play can be seen in Sun TV, which has given a good option chain breakout yesterday by closing above 800. So Sun TV is a buy for intraday or a short-term movement. One can buy it around 810 and on small declines up to 806, keeping a stop loss of 797 and a target of 830 and 840 can be seen.
Thank you very much for that. Let's get to the Momentumizer stock of the day. Vamakshi now joins in. Hi, Vamakshi. Good morning.
Well, good morning, Reema. Alembic Pharma is the stock that I'm watching out for. Keep in mind that the stock was up nearly 9% in the trading session yesterday at a time when the Nifty Pharma index was down nearly 0.2%. In fact, on a 3-month year-to-date as well as 1-year basis, the stock has managed to outperform the Nifty Pharma index. But the last 1 month has been some sort of an exception, because in the last 1 month, the stock has declined by around 1%. At the same time, Nifty Pharma index has surged by almost 4%. In fact, the stock hit an all-time high of around 1,285 on August 8th, but since then it has corrected by over 20% and hit a low of 1,025 on August 29th. Since then, it has managed to recover most of its losses, and it is now attempting to take out the previous high it had created on August 8th. Of course, there has been a recent trigger wherein the company has received the US FDA note for albendazole tablets used for pork, dog, tapeworm diseases. And in fact, all of these gains that we've seen have come on the back of strong volumes. In fact, volumes have picked up over the last 4 trading sessions, and in fact, yesterday as well, the volume was very strong, nearly 5.5 times the 10-day average.
Lovely. Thanks a lot for that, Vamakshi. We'll keep an eye out on that one. But let's focus on the FMCG pack. Yesterday at HUL that bounced back in trade because they're evaluating what to do with their ice cream business. You have paint companies as well that have bounced back. And also we have snacking companies, Bikaji Food, Pratap Snacks, Gopal Snacks. All of them will be focused after the government slashed the GST rates of namkeen and savory products. To understand about the impact on all these names, we have Abneesh Roy, Executive Director at Nuvama, who joins in on the show. Hi, Abneesh. Good morning. Always good to see you in, and thanks a lot for joining in. Give us your initial take on this piece of news first, the pullback in GST rate. Any potential impact on these snacking companies?
Yeah, good morning. Thanks for having me. So firstly, on the GST rate cut, frankly, it doesn't really impact Bikaji anything significantly. Because namkeen was already at 12%. What the government has changed yesterday was essentially in the extruded snacks, puffs, etc., which was at 18%. So for Bikaji, namkeen, it is already at 12%. For ITC, Haldirams, etc., this removes the litigations, etc., provides clarity. So it is good that now the entire savory snacks will be essentially at 12%. So nothing changes for Bikaji, but essentially it reduces the litigations, etc.
So what comes in this excluded snacks, which will now be taxed at 12% versus 18%? You spoke about puffs. What else? And any impact on other listed players like Gopal Snacks or Pratap Snacks, if you look at it?
So we cover Bikaji in terms of other products. If you see all the extruded products, extended products made from cereals, etc. So it could be puffs, it could be crunchy snacks, it could be the kurkure, those kind of extruded snacks. Essentially, those were at 18%. So I don't think in the listed company there is any big impact. If you see ITC, there could be some impact, but for ITC, the bigger businesses are cigarette and foods, and it's a very diversified company. So I will say not too much of an impact, frankly speaking. It reduces the uncertainty and litigations within the sector. It's a positive step, but I will say that for Bikaji, etc., not anything significant because they are anywhere at 12%. Namkeen was at 12% anyway.
Got that. Abneesh, hi, good morning. Yesterday there was a bit of a move on some of these consumer names, jewelry names. We spoke with the management of Senco yesterday, and they said that September is turning out to be much better than what they thought, and consequently Q2 is looking a lot better as well. I'm not sure if that is what lit the fire under most of these names, but they were all higher. Any thoughts on what's going on here, and what names do you like?
So this is as per our expectation. If you see, we have been quite positive on the consumer sector, both staples and discretionary. And if you see, even Unilever has hit a life high. We are also seeing momentum coming back in the paint stocks. Coming back to a specific question on jewelry, yes, of course, the government step of cutting down on the custom duty, that has clearly made the footfalls coming back, and we are expecting double-digit kind of a footfall growth for most of the jewelers post that step. And now the marriage season is also picking up. So before that step, if you see, Titan was struggling with mid-single-digit kind of SSG, and there was competitive pressure also. But now, because the growth has come back to the sector, the marriage demand is also now going to pick up. I will expect that most of the jewelers post that step in the ensuing period should see double-digit sales growth in the jewelry business. So we are positive on Titan. we had upgraded Titan to a buy, and we are happy to see footfalls coming back. In the broader consumer space, staple space, we continue to like companies which have higher rural salience. So HUL, Britannia, Dabur, Imami, Colgate. These will be our top 5 picks. And we also like paints. We expect that paint stocks further headroom for re-rating is there. It has done well in the last 1.5 months, but we see more re-rating potential there.
And from paints, you'll put out a note and you'll bang on, Abneesh. So congratulations on that. But which is the name that you're most bullish on? If you look at Asian, Kansai, as well as Berger, in the last 1 year, they haven't moved. But as you said, in the last 2 months or so, they have bounced back 8 to 10%. So what's the pecking order?
So we'll prefer Asian and Pidilite the most there. In fact, CNBC, the earlier discussion was on Apple phone, 1/4 of the manufacturing moving to India. Pidilite is doing great work there. They have tied up with Qualtech company of China, which in fact works with some of these players. So I would expect Pidilite to get huge business over the next 5 years in the adhesive, which is used in iPhone, in the EVs also. So that's one company which is expensive, but it is a compounding machine. It keeps looking at these kind of white spaces. In the pure paint space, we like Asian paints the most. We expect that the operating leverage will come back. But frankly speaking, Asian and Berger have very similar growth metrics. Yes, Berger gained market share in Q1, but it's a more regional player. On a full year basis, we expect Asian and Berger to grow similar. Even in Indigo paints, if you see the concern on the PE stake sale, that is getting reduced. So I will say even Indigo, in terms of valuation, the comfort is high. So I think the entire paint space will do well. But if you ask for one name, it will be Asian paints.
Okay. A quick word. PN Gadgir, the IPO opens up today. Have you had a look at the numbers? How does it compare with peers? Have they left money on the table?
I can't comment on that name. We like the broader jewelry space. There is a huge opportunity in terms of organized gaining share and now the custom duty cut. So we like the entire space. We like Titan, which we cover. I can't comment on that.
I have coverage on Goldium, Abneesh. Abneesh, do you have coverage on Goldium, the lab-grown diamond maker?
No, we don't have coverage, but of course that space is seeing huge disruption in 2 ways. Of course, we have seen lab-grown diamond prices collapse in the last 5 years by 70-80%. That's a concern, and we are seeing a lot of supply there. So what Goldium, I think, is doing is they are going into now branded. So looks interesting, but as it's a late entrant, right? We are seeing even the Titans of the world. They have an acquisition in US. Of course, they have very serious plans on every part of the jewelry. So it's a competitive market. So we will bet on the larger players definitely. But this is a disruptive market, and the lab-grown diamond will be more at the entry level. We expect both lab-grown diamond and the real diamond to coexist. India, real diamond has value. Lab-grown diamond, as I said, last 5 years, 70-80% destruction in value is there. So it will be more at the lower end. We don't see the jewelry demand or the core demand really shifting to lab-grown in the medium term.
Thank you very much for that. In a big global development, the US House of Representatives has passed the Biosecure Bill that targets China biotech. So the move is positive for some of the Indian pharma players. Ekta joins in for more.
Well, yes, thanks for that. Well, the Biosecure Act, I'll start by telling you what exactly it is. The news is that the US House of Representatives have passed the Biosecure Act. The bill will now go to the US Senate for a vote. Now, what exactly is the Biosecure Act? It aims to reduce dependence on biotech companies from China over the next 8 years. So the Biosecure Act has named 5 Chinese companies specifically, which is BGI, Genomics, Wuxi, Aptech, etc. Now, pharma companies, as a result of the Biosecure Act, have been exploring ways to diversify their supplier base in order to basically mitigate the risk over the next 8 years. Now, stocks in focus back home would be the likes of Loris, Piramal, Newland, Syngene, Divi's, as well as Suven, because all of them have CDMO operations and would be vying for this kind of incremental China plus one or diversification of the base that could happen. but it's a long-term opportunity. So, for example, we have seen that over the past couple of quarters, companies have made comments. For example, Loris has said that there is a shift to unfold over the longer term. Companies will begin by handing over smaller projects. Piramal Pharma has said there's an increase in exploratory discussions. Customers are, however, continuing to assess their choices. Newlin yet to see substantial impact in terms of active requests for proposal. But remember that Newlin is an API company which is different with a biological focus. So it might not incrementally benefit immediately. Syngene is probably one of the bigger companies which is seeing a shift right away. So they have said there's a material shift in big pharma sourcing strategies. They are participating in pilot projects and they've seen a 50% year-on-year increase in the request for proposals in terms of value in Q1 itself. Now, the challenges for Indian pharma companies is that, Indian companies lag in experience, trust, technology, capacity when you compare them to, say, the South Korean companies or even US and European companies which are, probably looking at the opportunity. And there is competition coming in from other companies as well, which we have to now focus on.
All right, Ekta, thank you very much for that. So keep an eye out on some of these names as we open up. We've got the first rates coming up. I think the Nifty in the pre-open is up 60 points. So it's a very healthy start. We have a few seconds to go for the market open. The first rates will start to come. We'll look at the indices and we'll go down and look at stocks and how they're opening up. So what do we have on the Nifty? We are starting with at about 24,500, 24,998 on the Nifty. Sensex is up a quarter, 81,724. Bank Nifty is up a 0.25%, 51,258. The mid-cap index is up nearly 1%. So broader market doing much better than what the large cap indices are doing. And I think that's a bit of a change from yesterday because the broader market was not doing all that great. Market breadth was negative, but this out of the gate straight up is looking a much better picture. So a quarter on the Nifty, 25,000, around 25,000 so far is what you have. So 70 after yesterday's 80-point pop. The heat map on the Nifty on the side of your screens indicating of what's happening, just about 6 or 7 stocks in the red. Everything else is starting in the green.
Well, the small cap index is up nearly 0.8%. The mid cap index is up 0.8%. The small cap index is a gain of 1%. And it's a solid advance decline ratio. 6 stocks advancing for 1 stock declining straight away at the open. In terms of the big sectoral gainers, it's IT leading the charge. The Nifty IT index is a gain of 1%. There is a Motilal Oswal note where they've done a long, big, thematic research on the technology sector. And they believe the sector could be on the cusp of recovery after enduring a prolonged period of discretionary spending cuts. So looking at the Nifty right now, LTI Mindtree, Infosys, Tech Mahindra, all these stocks are staring at a gain of 1%. For Motilal Oswal, the top picks are HCL Tech and LTI Mindtree in the large cap space. They like Persistent Systems, where they see a 22% upside. And for Coforge in the mid-cap IT pack, Motilal Oswal has upgraded the stock to a buy. Their target price stands at 8,100. So IT is a pocket of strength. Other than that, pharma continues to lead. So Divi's Laboratory and Apollo Hospitals are also up and about in trade. In the banking pack, you've got Axis Bank, which has got a green tick to begin trade with. On the way down, you've got cuts coming through in life insurance companies. Maybe some disappointment on the GST front. SBI Life, HDFC Life stocks are down 1.5%. Auto names like Bajaj Auto, M&M under pressure. And just pull up Hero MotoCorp, where its subsidiary Ather, where Hero MotoCorp has a 37.5% stake, is looking to raise about 3,100 crore via an IPO. So Hero MotoCorp too has opened up in the green.
Well, a lot of movers actually for the broad markets as well. Rima, Ahluwalia Contractors, well, they are that stock is up close to around 4% odd. They're back to orders worth around 1,300 crores for group housing projects. So that stock continues to hold with a gain of around 4.5%. The other big movers this morning are ACE. The stock has seen a sharp correction from the recent peak, but they are backed an order from the Defense Ministry for supply of 99 forklifts. So that's why that stock as well is higher. So ACE comes up for you on the screen. And AG Infra, they have got an LOA for a HAM project worth around 781 crore rupees from the Road Transportation Ministry. So all these 3 names, the big movers in this morning's trading session. IRDA has seen a sharp correction from around 320 to 220. They've signed an MOU with SJVN as well as GMR for 900 megawatts of hydropower project in Nepal. The street likes that. That stock, in fact, is moving very, very well. Oracle, overnight you had the parent who reported their numbers. The stock was up 9% in after our trading session. So in reaction to their quarterly numbers, the parent was higher. They've announced a partnership with Amazon Web Services to provide database services. There's a bit of a rub-off on Oracle Financial over here as well. That's up close to around 3.5% as we speak. So good move is what we're seeing out there. Vedanta goes ex-dividend, so that's why it appears the stock is down 4%. But adjusted for that, actually, the stock will be more or less flattish. In fact, I think it's up close to around 1% adjusted for that dividend. So the stock is actually not done, but it's gone ex-dividend. So explains why it appears the stock is under pressure.
You know, I was talking about Paytm earlier, and Paytm is the biggest volume-led gainer on the NSE. So look at that, 3.5% higher, 20 rupees on top of yesterday's 20 rupees. So that's 650 on Paytm at this point in time. So that's the move that you're seeing right now. And of course, I mean, the others we mentioned, Oracle Financial Services, large volumes, IREDA we mentioned, Coforge, I think we put out earlier, 3% higher, 6,700 nearly. You got ECOS Mobility, which is up 5%, listing from last week, so 506. Laurus Laboratories is, back above 500 rupees. It's been a huge underperformer. It's up about 2.75%. Bikaji Foods, we mentioned 5% on Bikaji, 880. I think is where that is coming in right now. Nazara is up 5%, 967, 968. Very large volumes. Castrol India is up 3.5%, 265 on Castrol right now. Markson's Pharma made a move yesterday. It's up about 3% this morning as well. So there is enough and more which is coming up at this point in time. Well, maybe just a quick look at what's down as well on volumes. There is Oil India, which is down 1.25%. Deep Industries is down about 3%. PNB Housing went up 7% yesterday. PNB Housing is pulling back about 2.5% this morning. SBI Life, those insurance numbers yesterday, 2% lower on SBI Life, 1863. Actually, insurance, life insurance, because I can spot HDFC Life as well. HDFC Life is down about nearly 2%. So the life insurance names are seeing some moderation coming through. Jubilant Pharma was a big mover, 10% yesterday. That is seeing about a 2% pullback. You know, some of these are just reversals at this point in time, but that's what you have. Overall, market breadth is very positive, nearly 6:1 in favor of advances. The Nifty is up about 50 points, 24,987. Pankaj Murarka is with us, CEO and CIO at Renaissance Investment Managers. Pankaj, thank you very much for joining us. Great to have you with us here on the program. Appreciate it. Last time we spoke, we were talking about what you like in this market. And one of the names which sort of remained with me was SBI, State Bank of India. So I just want to start with banks per se, because more and more, it's not recent, but more and more people are kind of veering to the idea that large banks, mostly private financials, and maybe an SBI, I mean, their time has come, will come, because there is valuation comfort, etc. So just wanted your thoughts to begin with, and then we'll look at other sectors as well. Go on.
Morning, Prashant. Well, Prashant, from our point of view, we've been underweight banks for a very long time, almost 2 years, but now we are gradually closing underweight positions because we think probably we are in the last leg of cyclical slowdown in the loan growth. Probably we see loan growth picking up from next year onwards. And probably once we have few rate cuts in place, we'll see some initial margin pressures on banks for the next few quarters. But we don't see that as significant. And the fact remains that in a market which has moved pretty sharply over the last 18 months, banks is now one segment of the market where valuations are far more reasonable compared to the overall market or the broader market. And more importantly, asset quality for the banking sector seems fairly benign. Large banks are in a very sweet spot in the sense credit cost is extremely low or very benign, and growth is reasonable. And on top of that, as I said, valuations are pretty reasonable. So sum total of all of it, we are turning positive on banks, as you said, some of the larger private sector banks, and including SBI as well. And but from our point of view, we as investors take a view which is slightly more medium term over the next few years. And from that point of view, banks certainly look much more attractive than some of the other pockets of the market at this point of time.
So to close out your underweight position, you're buying large private sector banks and State Bank of India. What about the other PSU banks? Are you looking to buy them?
Well, generally our portfolios are focused portfolios. We just have about 25-30 names. So in a particular sector, we can accommodate only 4 or 5 names. So we stick within the state-owned banks. Our preference is for SBI because SBI is far better in terms of qualitative metrics, be it ROEs or the risk-weighted assets versus some of the other banks. But I'm sure as we see traction coming back into banks, some of the other banks will follow SBI.
Hi Pankaj, good morning. Good to see you. And since we talk about banks, let's talk about a couple of other financials as well, like insurance. There was that hope that there's going to be a pullback in GST rate. That didn't come about. Some of these stocks have still not performed big time. Case in point being HDFC Life has been a relative underperformer. How are you placed on the life insurance companies?
Nigel, while we don't have in insurance companies, life insurance companies, but my view is the worst is behind the sector. The sector has had significant headwinds in the last 2 years. If you see, starting from the budget of last year, where there were some of the larger insurance payments were brought under the tax net, and then there's been a sharp reduction in the distribution payout on ULIPs and so on and so forth. But I think the sector has digested all of those headwinds and we've started seeing some reasonably healthy growth in the sector over the last 2 quarters. So I think the fact that India's savings are accelerating and insurance is one of the prime medium for savings for large masses, apart from the coverage that it gives, I think from here on, insurance as a sector or some of these insurance companies will do well.
Pankaj, you'd also gone overweight on IT a couple of months back. Now that trade seems to have played out because in a span of 3 months, it's given pretty good returns. What is the call now on technology? Are you still overweight? Would you look to pare it down, increase your overweight?
No, Rima, actually, that's a slightly more longer-term call. So as you rightly said, we've been overweight IT, some of the larger names like Infosys and Tech Mahindra among the larger names, and we have exposure to some of the mid-cap names, including Birlasoft, Persistent, and Coforge. And we think that we are in the early stages. While stock prices have moved in the last few months, we think more importantly, what we are really looking forward to is we're looking forward to a revival of IT spends over the last 18 months because of rising rates in US. A lot of discretionary projects and spends have been held back. And we think once US gets into a rate cut cycle, starting probably towards 3rd week of this year, when we get the first rate cut in US, there's a lot of pent-up spend that is there amongst the, let's say, the Fortune 500 and the Fortune 2000 companies globally. And these companies can't hold back spends for a long period of time. So we think now, once you get rate cuts in US, IT spends in US will come back very sharply and very strongly. Because for Global 2000 or the Fortune 2000 companies, it's a necessity. It's not a choice or a discretion. Any company not investing into technology, into adoption of AI and some of the other tools probably is risking its survival probably 10 years out, and which they can't afford to. So we see a very strong environment for, one, we see a gradual pickup in discretionary spends, and more importantly, the trend getting much more stronger as we move towards next year, probably in the second half of next year. So we remain constructive or positive on IT from a slightly more medium-term, longer-term perspective. Slightly more longer-term, my view is that the upcoming IT spend cycle that we're going to experience over the next 2 or 3 years probably will be much longer than that, than traditional IT cycles that we've seen in the past. And probably it could be one of the more ferocious IT cycles that we have seen in the last 25, 30 years. Because AI, remember, AI is the internet moment for the world. It is going to revolutionize and change the world, and enterprises will have to adopt and implement AI solutions at a very rapid pace. So we are slightly more bullish from a slightly more longer term perspective when it comes to IT as a sector.
In that 25-30 stock portfolio, is it what's the leaning to large caps?
Generally, our portfolio is flexi-cap, Prashant, so we run about 50-60% large caps, and the balance is spread across a handful of mid caps and small caps. So,
do you own any with market caps of less than 15,000 crores?
Yeah, we do have some exposure, Prashant. But then, when we're looking at smaller companies, obviously we're looking for companies, outstanding companies, which can deliver very strong growth. And generally, our endeavor is when you're investing into small caps, you're looking at the small cap from a 5-year prism. where we actually think that the small caps over the next 5 years can actually transition to being a mid cap by virtue of consistent strong growth. Or when you look at mid caps, you're looking at companies which can change the orbit and probably transition from being a mid cap to a large cap over the next 5 to 7 years. So clearly, when you're looking at mid and small caps, you're looking at outstanding companies which can deliver very high growth on a sustained basis and change their orbit.
Why don't you talk us through one or two names, just to use an example, Pankaj? I mean, portfolios are disclosed, so nothing that you don't already own or thinking of owning, and just how you're thinking about a name or two. Go on.
Sure. So in the capital goods space, we've had exposure to a few of these companies, which were actually mid caps 4 years back when this investment cycle started. Something like a Cummins or ABB, all of these companies were mid caps, and now you see the kind of fundamental performance and earnings growth, and also supported by stock price performance. Some of these companies have actually become large caps. So essentially, we like to buy companies slightly be ahead of the curve or ahead of the cycle, look at ideas from a 3 to 5 year perspective, and look at companies which can deliver outlier growth, and probably then be investing into these companies slightly ahead of the street, and then be a patient holder for the next 5 years or 7 years and reap those rewards or benefits, I may say so. So clearly, we own some of these attractive ideas on the NBFC, let's on financials on mid-cap NBFCs. One of our exposure is a company called Poonawalla Finance. We think, from a classical mid-cap, this company actually has all the potential to be a large cap over the next 5 years, because the company is looking at pretty aggressive growth of 40% CAGR over the next 5 years. They have a new management team in place, and probably if they execute well, probably in 5 years' time, it could potentially be a large cap.
Poonawalla FinCorp. Any other names? You've given us a stock in the adult category. Adult as in age-wise, young adult. What about in the kids category? Smaller name.
We own some small cap IT companies like Birlasoft. We think, again, they had a management change about 2 years back. The new CEO is fairly hands-on and pretty focused in driving strong growth. If you see some of these mid-caps companies as they exist today, Persistent or Coforge, they've gone through a very strong growth cycle over the last 7 or 8 years. Birlasoft today is exactly where probably a Persistent or Coforge were 5 years back. You've got a new CEO who's run a very large business for Wipro. He used to run $7 billion P&L. Now he's running a company which is 1/10 of the size, and aspiration is to get company to a much bigger size over the next 5 or 7 years. The opportunity out there in IT services is significantly large, and we'll see many companies in IT services in India which will transition from mid cap to large cap, and probably from small cap to mid cap. So we think Birlasoft is one of those companies which is under $1 billion of revenue, and probably should cross the $1 billion revenue threshold probably in the next 2 to 3 years, and probably actually evolve as a mid-cap IT company over the next 5 years. And if it plays out, then probably I think there are very handsome returns for shareholders over the next 5 years in the company.
Oh, interesting. All right.
One regulatory disclosure before we go off is we have exposure to all of these companies, so investors should do their due diligence before acting on any of these.
All right. Interesting. Pankaj, final question. And just to help us lead into the next discussion, what's the view on auto ancillaries in particular? How you'll position there?
Well, again, we are very selective because valuations in that space are rich. The auto sector itself is going through a cyclical slowdown, and that has had a rub-off effect on some of these ancillary companies in terms of their growth moderating. And some of these companies have large exports where also things have slowed a bit, especially in Europe, and which is again having a rub-off effect on these companies. So one clearly have to look at companies which can, despite a cyclical slowdown, can deliver strong growth and probably have strong edge in terms of the product they have in the marketplace in that sense. So we are fairly selective in this sector. We do have exposures, but we are fairly selective.
Okay. Thank you very much for joining in. Let's move on and invite let's invite the management of Endurance Tech on the show. Now, the stock has done pretty well this year, up nearly 30% in 2024. In the last 1 year, the stock has gained more than 50%. The management is focusing on high-performance braking systems, for the 350cc plus premium bikes, and margins in four-wheeler business are higher than the two-wheelers. To discuss this and a lot more, we have R.S. Rajagopal Sastry, the Group CFO of Endurance Technology. Thank you very much for joining in. I think, Mr. Sastry, you were appointed as the Group CFO effective 6th of June 2024. So you've been, now handling things for the last 2 or 3 months. So what is your own goal, for the next 3 years? If you have to look at the business change, the product mix, the margins, tell us what is your own aspiration or goal that you've set for yourself?
So, good morning again, and thanks for this opportunity. Personal goals, if you look at having moved from a sector which was very successful, a company which was very successful, and then the first few months I've been looking at this company, and I had a good run in terms of how I could take over my new role. I'm only looking at the strength of the company as of now. So the quality of investments, the kind of people the company has, the care with which the product offerings have been developed, the assets which are of top quality in terms of their locational strength, and also the quality of the machines or the shop floors, the best-in-class governance principles, the professional management, all these things are already there. They have been put in place. Now, if you look at my personal goal, I think that I need to quickly take this company towards that inflection point where we start using or exploiting the significant headroom in the businesses the company already is in. So if you look at the product offerings, like you said, high quality braking systems for 350cc, right from the castings, the suspensions, the braking systems and various other offerings are of very high quality, and they are with the aim of making the vehicle better, making the road safer. And in those areas with all the customers in India, there is a lot of headroom to make inroads into those models in which we are not currently present, and use that as an inflection point to grow the top line. And from the bottom line perspective, I'm again saying that there are significant opportunities to bring in operational efficiencies just by looking at the data, analyzing data, strengthening the team from a controlling perspective. And we are looking at proactively giving ourselves targets that we make the bottom line better. And cash is the next element, that we need to have significantly high levels of cash, and so that we're able to invest and make use of those opportunities as and when they appear in the market, in organic and inorganic. So my goals are threefold: help the company get to that inflection point, the top line growth, look at operational efficiencies with better data management, better team managements, so that we're looking at profitability, and improve on cash, so that we are ready for the company to, as we go on to the growth path.
All right. Hi, Mr. Sastry. Good morning. Nigel on this side, and congratulations in your new role. We wish you all the best, and we look forward to interacting with you more often. Since you mentioned that the focus is also on growing the top line, last 3 years you have been growing in the mid-teens. How do you see growth shape up from year on? And do you think there are enough levers in place to push up the margins? Maybe you're looking at 100, 150 basis points improvement in margins. If you would give us the next 3-year goal.
So if you look at the company per se, we have a stated objective that we grow in multiple areas. So one is what we do as business as usual. Today, if we have our casting business, we added the forging business, the braking systems which we make, the suspensions. This is business as usual. This in itself presents an organic opportunity as the two-wheeler industry grows. Plus the ability to grow more into the supply chain, more in terms of our shares of business with each customer, it already offers a significant growth opportunity. The other opportunity is that as the vehicles are being offered in the Indian market, there is a tendency to make them premium, both in terms of better safety, which means automatically our braking systems, which is the ABS, or have better suspensions and feel to the customer, the feeling of how the driver feels. Then that means our inverted front forks and other electronically controlled suspensions, and then better quality castings and forgings. That in itself offers an opportunity to grow our top line. And the other element in our stated objective is that we need to grow, or we are planning to grow our presence in India in the four-wheeler business. Today, if you look at, we are in the range of 4 to 6%.
Yeah, Mr. Sastry, let's get a little bit more into those numbers then. You know, the four-wheeler segment, as you said, I think on a consolidated basis, it's mid-20s. In India, it is far lower. So from that 25%, I believe as a percentage of consolidated, you want to take it to 45%. And even aftermarket, I think it's around 5%. You want to double that. So run us through a couple of numbers with the objectives on both these two parameters.
Okay, you want to look at how the numbers pan out or how we actually are planning to grow in those regions?
On both these two segments, sir, and what is the vision? You know, the aftermarket is 5%, you want to double that. Four-wheeler is around 25%, you want to take that to 45% on a consolidated basis. So the roadmap for both these two.
The roadmap is that one would come from the organic growth in Europe. Europe is 100% four-wheelers today, with a very small percent which goes into two-wheeler. So we are looking at organic and inorganic growth within the European market, which automatically will bring some growth. And within India, we are making specific investments in some regions, making plans which are earmarked for the four-wheeler business, both in the domestic and the exports. To begin with, we will be offering our staple product, which we are experts in, which is the forgings and the castings. And in due course, we will be looking at offering also suspension braking systems in the four-wheel market, as and when we are successful in identifying the partners with whom we go with. So we have in-house skills in these regions. So if you look at the current four-wheeler business within India is a very small number, and we are looking at to grow at least, if we have to get to the 40% or 45% as an overall, from the 25% which comes from the European business, we need to look at another 20% coming from the Indian business. So that's how we are looking at how do we have dedicated plans, which we already are in the process of commissioning for some parts of the business, at least in the casting area. And in other areas, we are looking at partners to bring in business in the four-wheeler region. And if you look at aftermarket is a strategy of reach. It's more how do we understand the B2C side of the business while we still continue to be a B2B. So we are looking at innovative ways of how do we improve the reach within India. Yeah. You have a question?
Right. We take those points, Mrs. Sastry. Hi, good morning. Prashant here. Just very specific, sir, from Europe, what have been the order wins in Q2 so far? If you can give us a rough idea.
So as of now, we have not consolidated that number of the order wins within Europe. But if you know, we have been getting a lot of order wins in the past 1 year or so, and we are now looking at those peaking in terms of supplies.
Okay, because I mean that pipeline in terms of new order wins was drying up very fast. That's why I'm asking in Q1 as well. We'd seen if you look at FY 23-24, then you look at the Q1 of 25, sharp slowdown there. So I'm just trying to understand, are things looking a little better, or is this going to be, what should we look at, if you can provide us with some numbers?
So if we have to look at numbers per se, the order wins and orders which have been happening in the past 1 year or so were in the electric vehicle segment. And a lot of OEMs within Europe, and that's common news, that they are going slow on their electric vehicle offering. And they're going back to increasing the volumes and trying to continue with the ICE offering which they have. And our order wins were in the electric vehicles and also in the conventional. We already had existing orders in the ICE vehicles. So from a sales perspective, we are continuing to service the ICE models, which we already were offering. And some of the volumes which are the electric are also happening. But based on the discussions with the teams in Europe, we are seeing the chances of revival in the upcoming months in November or so. But our focus was on the internal strengths, keep our cash position positive, keep our investments in good health, so that whenever this turnaround will happen in Europe, we're able to capitalize on that and get more volumes. But as of now, we are still seeing that compared to all other tier 1s, tier 2s in Europe, we are seeing good traction in our sales. At least in a couple of months, which we saw just go by, we have been better than the market in terms of sales. We are doing better numbers than on a year-on-year basis. And that's because of the order strength which we already had acquired. And we are looking at some development or improvement in the coming months.
All right, Mr. Sastry, the buzzword is EV. So could you tell us first, what is the current order book? If you could give us an updated number, point number one. Point number two is, as a percentage of your total mix, how much does EV contribute and where is that number headed? If you could give us an outlook, say, for the next 3-5 years. Our order book, EV contribution, and where is the EV contribution headed?
Okay, if you want to break it into different businesses which we already have in our control, in India, our EV order book is in size of 840 crores of endurance technologies. And our subsidiary Maxwell has got an order book of 420 crores. And our European companies have got an order book of 287 million euros. All these are orders which we already have won and which are expected to peak in terms of sales in the upcoming years. Like Europe would peak in the year 27, 28, and India would peak in the year 27, and Maxwell also would peak in the year 27.
All right, Mr. Sastry, we'll leave it there. Good luck to you and your team as you execute on the threefold strategy, as you said. Top line inflection, there is operational efficiency and improving cash position at the company. Thank you. And we wish you all the success. We'll take a quick commercial break here. We're going to come back with Prateek Jain and of PwC India and Saurabh Agarwal of EY. We put the focus on the takeaways from the GST meeting and what came out of it. Stay tuned. That's coming up. Okay, welcome back. Take a look at what's happening with Paytm, and we'll put that up at the bottom of the screen as well. 7% higher, and that's a big move. That block is expected to happen, and actually going into that block, because there's all sorts of chatter whether there will be perhaps a strategic investor who will come in and pick up that block, and that perhaps will act as a bit of a clearing event for the stock to re-rate post it. So we'll see when that happens, but strong buzz expectation that is around the corner, perhaps in a day or two. So we discussed this yesterday. We spoke about this in the morning as well. 670 now on Paytm. That is by far the stock of the day, stock of the morning, which is actually coming through. Well, let's get some updates from the GST Council meeting yesterday as well. No major decisions really were taken, but a slew of issues have been referred to the ministerial panels. The Council has referred the matter of compensation cess to the new panel of ministers. Decisions on reducing GST on life and health insurance premiums and payment gateways have also been deferred pending a decision by the group of ministers. Tax on cancer drugs is also being cut, while GST on namkeens has been cut to 12% from 18%. Why don't we quickly hear out the Finance Minister, Nirmala Sitharaman, on the key decisions taken, and then we'll invite our guests in.
The rate rationalization GOM under the Deputy Chief Minister of Bihar will be doing its job. But under his leadership, with newer members who have volunteered for the limited purpose of medical health insurance related GST, we have told them that they will look into this matter and come with a report by end of October, just 1.5 months' time. And the GST Council, which will meet in November, will finalize based on this report, which will come from the GOM. We have agreed to form a GOM, which will now take it up to study every state and their discussion, because Karnataka minister came up with figures which are applicable to his state. So we've said all other states which want to give theirs, we're not compelling anybody, but whoever wants to give can give. They will be, again, a group of ministers who will decide how to go forward in the name of compensation. Says it shall no longer be compensation post March 2026, but that says how to go about it, what to do with it, and so on will be discussed by the group of ministers.
Okay, well, let's talk more about this. Prateek Jain is partner at PwC India and Saurabh Agarwal is a partner at EY. Gentlemen, great to have both of you here. Thank you for your time. Prashant here. Prateek, bit of a, not a dampener, maybe more coming with a lot of matters being referred to the group of ministers, but what stood out to you?
I think I don't agree, Prashant, that was a dampener. I think there's a lot of good decisions which were taken. If you talk about the industry segment which got benefited, clearly airlines, foreign airlines is one, where there's a clarification. Data hosting services, data centers, they said that it will qualify as export. On real estate, they said that preferential location charges will not be subject to, or will be subject to GST at a concessional rate, not at 18%. And for electricity distribution companies, they said that anything which you collect, like electricity charges or electricity meter charges and etc., will not be taxed and so on. So I think there was a lot of positives to be taken from this. Also, the rate rationalization, it seems that government is now in a hurry to kind of do that quickly, which was in the offing for last 2-3 years. So in next few months, perhaps a decision will be taken on that as well. Yes, there are decisions like insurance, health insurance and life insurance, etc., which has been referred to the GOM. But I think that decision will be taken soon on that. So overall, I guess there are a lot of positives to be taken from this.
You know, when I say dampener, it's always from what the market. I mean, it's a high bar for stock markets, but you can agree, right? But there is, of course, that matter of health and insurance was one, and the other one for real estate. It was not really, of course, something, but something on cement. I don't know if really that was really something which perhaps would have been considered, or were you hearing anything, Prateek?
Look, I think that'll be part of the overall rate rationalization exercise. There is perhaps no immediate need to kind of look at that. And if you look at cement, even prior to GST, the rates were quite high. I mean, an effective rate of taxation was higher than what you have today. So obviously there is a logic to this, but I guess that'll be have to be looked at as part of the overall rate rationalization. I don't think that decision will be taken in a hurry.
Will not be taken, and perhaps part of the overall rate rationalization, as you said. Saurabh, coming to you, what are the aspects which stood out to you?
So, Prashant, I think there were three main things which were there in the GST Council and which were being considered. The first and the foremost was around the GST rate rationalization piece, wherein they have formed a committee of group of ministers to take care of the same. The second thing, which is around the entire digitalization, I think that's the key one, which is around B2C invoicing, which will take care of the fake invoicing which is happening in the system. At the same time, when we look at from a perspective of the invoice management system, which has been the aim of the government since the launch of the GST reform, wherein there has to be a concept of mismatching, and they have approved the invoice management system as a concept to go ahead with, which means that the industry should look forward to more digitization and more forward-looking approach in terms of matching concept and digitization from the end of government. And the third thing is that the government's intent has been to settle the disputes, whether it has been in case of advertising agency, or it has been in case of foreign airlines, or it has been in case of the payment aggregators. They have been looking into settle the disputes while the payment aggregator issue may not have been resolved. I think something which got missed, which I will say, which was a lot of expectation of the industry, was around the foreign shipping line issue, where the foreign shipping line and foreign airlines, more or less the issue is the same, but the foreign shipping lines maybe has been deferred to the subsequent council meeting.
Saurabh, on the on health, right, with medical group, term, etc., do you think Of course, it's been referred to the GOM, but what are your expectations? And I mean, should we take it as a given that rates will be brought lower?
So I think the intent is very clear. They are considering around 3 or 4 options. One of the option is to bring down the rate to 5% for all type of health insurances, etc. The second option which they are exploring is to bring it down only for senior citizens. Third option which they are exploring is to exempt the entire, you can say, GST on the insurance sector on health insurance and life insurance. I think the likely option which they should go ahead with in near future should be the 5% rate of GST. That's more so because when we look at the amount of insurance which the Indians have been taking compared to any of the developed countries, we are still very low when it comes to the overall insurance being taken by the Indian citizens. So I think there is a requirement to push this particular part by bringing down the cost of insurance.
And this is, all of this will typically just be, in a way, pass through, right? For companies, in that sense. For viewers who are watching from a stock market angle, Saurabh, if, say, for example, this is rationalized, you essentially pay less premiums.
Yes, correct. You pay less premiums.
Right. Pratik, anything else you'd be watching out for on an urgent basis going forward from these GOMs, etc.?
Yes, so one clearly is on the rate rationalization, right? So 5, 12, 18 and 28. What exactly do they do in the rate rationalization? Of course, there are multiple options. Either 5 and 12 could be merged into a single rate of 7 to 8%. 12 and 18 could be merged to, let's say, 15, 16%, and so on. And every decision that they take will have a wider ramification for industry. So that's clearly one area to watch out for. Compensation cess, what will be the future of compensation cess is another one. I'll also see that over the next few months, what structural changes government is looking at. Do they want to bring in petroleum products under GST? Do they want to bring in real estate, everything under GST and so on? On petroleum products, I'm quite hopeful that on natural gas and ATF, perhaps a decision will be taken soon. And the last but not the least is, are we looking at simplification of GST legislation and things like input credit provisions and so on. So I think next few months will pretty much determine what kind of GST we're looking at over the next 5 to 10 years. What's the future of GST in India? So interesting time for all of us to kind of keep a watch on.
Natural gas was thought to be a sort of a low-hanging fruit, right, Pratik? Clean fuel and all that. But what's holding the government back, you think?
Look, I think I agree with you. It's a low-hanging fruit in that sense. The revenue implications is not that much. And it's a clean fuel, and we're looking at our net zero ambition and so on. I think there are a few states which are impacted more than others by this decision. So I think there is a consultation happening between the governments, and consensus is yet to emerge. But I think that has to be the starting point. I think over the next few months, I'm quite hopeful that on natural gas, they will look at including that in GST.
You'd agree, Saurabh? And what's on your radar looking forward?
So I think gas is one particular area which should come into the ambit of GST, and the government has been looking forward to it. I think one more important point is around the electricity. I think there has been 2-3 times the study has been conducted by the government through their nodal agencies and Ministry of Power around whether to include electricity into the ambit of GST or not. We know that the cost of power in India is by far higher compared to that in many of the other neighboring countries. And it's a requirement of the hour to bring down the power cost, and maybe by including electricity within the ambit of GST, we can bring down the cost of electricity for the consumer as well as for the commercial and industrial customers.
Got it. We'll leave it there. Gentlemen, thank you very much for joining us, Pratik and Saurabh. Thank you for being with us here this morning on CNBC-TV18, and appreciate your time here. Well, the market's in the red now. Just a quick look, 13, 14 points down. So, it's a come down from the day's high. The high was 25,014, and we're at about 24,900. So that is about a 100-point fall, nearly about a 100-point pullback from the day's highest level.
The Nifty Bank is also now down nearly 150 points, so 0.25% gone on the Nifty Bank. So Bajaj Bajaj Finance, Bajaj Finserv, life insurance companies, State Bank of India, these are stocks where you are seeing some pressure.
Absolutely. Well, we'll take a quick commercial break here. Actually, let's bring in Mitesh before we take that break and ask him for a quick view on the market. And also Paytm. Paytm is up 8% now. But Mitesh, go on. Markets first. Mitesh, you'll have to unmute yourself, please.
Yeah. I've done that. So on the index, I said that holding on to this 24,800 level was a positive, but we'll have first pivot at about 25,050 odd levels. We made a high of around 25,015. I think there's still a struggle, because the intraday structure hasn't improved. So 24,800 will be tested maybe one more time, maybe two more times. So I think we'll keep watching that. Until we don't close below that, I think things should be okay. And after this shaky kind of a movement, the market should recover on the upside. The worry will come in case we start getting a close below 24,800. So for the time being, watching that level. And on Paytm, I think I've missed the rally. The rally started a few days back and a few weeks back rather, and still is looking strong to me. I think the stock is showing signs of heading towards levels of around 800 to 8. First target is 800, and then we have a target of around 870. So there are still more upside left. It's slightly overbought, so in case you want to enter afresh, then try to buy on declines closer to about 620, 600 is your buying zone, and keep a stop below 565. But if somebody's holding it out, just tail your stop losses to about 565 and hope that the targets of 800 plus are being achieved.
All right, Mitesh, thank you very much for that. So maybe buy and pullbacks, that's the advice coming in on Paytm right now. Markets, of course, down about 25 points. We'll take a break. We're going to come back with commodities. Manisha's is going to be here with what's top of mind. Stay with us.
Welcome back. Up after opening at 25,000 and plus and higher, markets have given up and now in the red for the Nifty and the Sensex. Not by a whole lot, but you can see the momentum, the early morning momentum has faded a bit. But Manisha is now standing by and she's going to be focusing on iron ore. Manisha.
Well, thank you for that. I'm looking at overall metals as a pack, but yes, iron ore first up because it is the worst performing metal in 2024 until time. It has seen a very sharp decline. We've seen 100 break on the lower side and 90 also given giveaway now. The prices have declined by 10% and are trading at a 2022 low. As I said, all the China data has been on the weaker side. So whether it has to do with services, manufacturing, factory, property numbers have been weaker, and that has continued to weigh on iron ore in that sense. Also, it's been the most vulnerable because of the China slowdown numbers there. The inventories are on the higher side and demand not as much. Also, when you look at the China steel prices, they are trading at a 2017 lows, and because iron ore is a major ingredient within that, we have seen pressure come in for this one as well. So when you look at the industrial metals in 2024, iron ore perhaps tops the list when it comes to decliners there with 33% of a decline. The next metal is down by 5%, which is lead. Nickel continues to see weakness, 4% down in the 2024 right now. And then we turn into positives where aluminum is trading in the positive, 4% on the higher side for 2024 until now. And we also have other metals which are trading in positive like zinc and copper, which are trading up by nearly 2 to 5%. And the max gains clearly coming in for tin. This is a major ingredient for semiconductors. And with the kind of demand that we are seeing globally for that one, tin clearly has been a beneficiary of that, a best performing metal as you can see in 2024 until time. I want to talk more about copper because we've seen LME inventories continue to gain. The way we stand at 316,000 tons right now, it is a 5-year highs. The Chinese inventories, meanwhile, have continued to decline because of production cuts and higher exports that they have continued to do. So much so that Chinese demand right now is at a premium while it was at a discount in the month of July, a premium of $62 nonetheless. So that is what really seems to be supporting copper prices right now. Aluminum in the meanwhile also seems to have moved into a backwardation. $10 backwardation when you look at October and November. The way the CFTC data shows up, people are selling aluminum in October and buying in November. That is the reason that you have seen that change come in. So various individual fundamentals at work, but what the street will watch out for is the US inflation data. You have CPI numbers coming in on Wednesday and the PPI on Thursday, and that would give you further cues.
All right, Manisha, thank you very much for that. Ekta is now joining us, and let's talk about the pharmaceutical space with regards to what's happening in the US. Ekta, over to you.
Thanks for that. Well, the big development is that the US has passed the much-awaited, much-debated Biosecure Act. So it's basically the House of Representatives, and now it will go to the Senate for a vote as well. What it aims to do is to reduce the kind of to reduce the dependence that a lot of the US companies have on Chinese biotechnology companies, and they've named 5 companies specifically in the act as well. Now, what exactly does it mean for Indian CDMOs or contract drug manufacturing operations of the likes of Laurus Labs, Syngene, as well as a couple of others such as Newland, Piramal, and even the likes of Divi's Labs? It means that they could incrementally possibly benefit from more business if in case the large pharmaceutical companies or even the smaller pharmaceutical companies think that the Indian companies are capable of handling their business. So the likes of Laurus, Piramal till now have indicated that yes, they are seeing an increase in terms of request for proposals, or they are seeing a large number of inquiries as compared to before. But none of it has still turned into tangible business because a lot of the larger pharmaceutical companies are still assessing their options, and you still have till 2032, which is the timeline to sort of diversify your supply base. But it's only the next 8 years, so it takes around 3 to 4 years for a company to actually get those requests for proposals and finalize on a company. So we could see all of this take place in the next 3 to 4 years. But it is a tangible opportunity. India becomes a +1, or it becomes a diversification in terms of the supplier base. Companies such as Syngene and Divi's are supposed to be at the forefront of this opportunity. Syngene has seen a 50% rise in terms of their request for proposals in Q1. Divi's Labs has said that they can benefit from existing portfolios as well as drugs which are in the phase 2 and phase 3 as well. The next couple of months, maybe the next couple of quarters, will give you a fair assessment in terms of where companies stand, but definitely a big positive for a lot of the CDMOs.
Thank you very much for that. IT is also holding up pretty well. So the Nifty IT index is a gain of nearly 1%. Now, Motilal Oswal has come out with a note where they're saying the IT services sector could be on the cusp of recovery after a long period of discretionary spending cuts. So they've analyzed the health of the global economy, the impact of GCCs on IT services company, how generative AI will play out. And based on all that, they've come out with a framework where they're giving marks to each of these individual points. And these are the top picks. It's HCL Tech, LTI Mindtree, Persistent. And on Coforge, it's an upgrade. The earlier target price was 6,100. Now it stands at 8,100. And it's an upgrade to buy. They do not have a sell call on any of the IT companies. The other buys include TCS, Infi, L&T Technology Services, and Cyient. The other neutral calls for Motilal Oswal include Wipro, Tech Mahindra, Mphasis, and Zensar. No sell calls. Now, amongst the individual sectors, they're saying healthcare, manufacturing, and BFSI are the three verticals which will lead the recovery. So for healthcare in particular, the negative impact of the rise of GCCs in India, the captive centers, is very less. And therefore, healthcare is insulated, unlike, say, other sectors like BFSI. Now, BFS, Banking Financial Services, will benefit as US cuts interest rates. But part of it is going to be offset by the rise of GCCs. So healthcare, manufacturing, and BFSI are the three sectors leading the global recovery for IT companies. Now, why the four companies that Motilal Oswal has spoken? So one, HCL Tech, amongst many other things, has a higher exposure to healthcare. For LTI Mindtree, they're saying the company, again, BFSI exposure is there, but the company has strong capabilities in data engineering, which positions it well to capture the pre-generative AI spending. Persistent has a strong presence and exposure to high growth verticals like healthcare and BFS. And according to Motilal Oswal, Persistent's EPS revenue growth could be 21%, though valuations are at a premium level. And Coforge's upgrade is based on a valuation multiple re-rating. They also expect margins to go up, but now they're valuing Coforge at 38 times forward multiple.
Most brokers are now overweight, right? IT? Or is it, I mean, it's no longer anti-concern.
In the last 3 months, we've seen a lot of them have turned, yeah.
Absolutely. Well, so that's Motilal's call on IT sector. Well, our life insurers are sinking a little bit more. They're down about 3%. HDFC Life on your screen. I think SBI Life is also down about 2.5%. We're going to take a quick commercial break here. We're going to come back with our special segment. It's the economy. Lata will connect with Kamakshya Trivedi of Goldman Sachs, and they decode key data and estimates ahead of the September 18th Fed meet. Stay tuned, that's coming up.
मैच में एक और बहुत ही बढ़िया एक खूबसूरत चीज़ है कि आपके मैच में एक और आर्चर है जिनकी बहुत बात हो रही है, शीतल देवी। वो काफ़ी चीयर करती हुई नजर आई। सिर्फ 17 साल की है वो। उनके परफॉर्मेंस के बारे में क्या कहना चाहेंगे? कैसा माहौल रहता है पैरालंपिक्स विलेज में, पेरिस विलेज में?
जी बिल्कुल, टीम सेपरेट अच्छी है और शीतल तो सबसे यंग आर्चर है इस कंटिजेंट की भी, हमारी टीम में भी। तो हम आपस में जब भी हम कंपटीशन में होते थे, हम 2 महीने पहले भी चेक रिपब्लिक में कंपटीशन में थे, तो मैं उस टाइम भी वहां पे 3 मेडल जीता था। तो हम आपस में, शीतल सबसे छोटी है तो हंसी मजाक करते थे, तो वो कहती थी भैया मैं आपको चीयर कर रही हूँ, आप जरूर मेडल जीतोगे। तो वही चीज, क्योंकि उसने मेडल जीत लिया था राकेश और शीतल ने, तो वो मेरे साथ वहां पे थी पूरी टीम के साथ, और सबसे छोटी बच्ची है तो देख के और ज्यादा खुशी होती थी कि वो चीयर कर रही है और वो चीजें काम भी आई। तो अच्छी बात है, ये टीम स्पिरिट है कि आर्चर दूसरे को सपोर्ट करने के लिए ग्राउंड पे पहुंचते हैं, और क्योंकि वो उनकी अचीवमेंट इतनी ज्यादा है कि इस डिसेबिलिटी के बावजूद वो
Welcome to It's the Economy. Despite a subpar non-farm payroll data
financial markets have actually veered to the view that the Fed will cut by 25 basis points only on September 18. That explains the sharp bounce back we saw in equities, US equities overnight, and also the dollar. Very important, the dollar index has actually jumped from sub 101 levels last Friday. You know, when the non-farm payrolls came, it was about 100.8, now to 101.7. So there are still three crucial data points before the FOMC meeting. The August US CPI data comes in tomorrow, Wednesday. On Thursday, we will get the PPI, Producer Price Index. And next week, we will get, just one day before the FOMC announcement, we get the retail sales data for August. All these are as much market moving. But a lot rides on the dollar. How much money foreign funds pump into emerging markets like India depends on how much they see the dollar weakening. So to discuss the currency and interest rate markets, how they are geared for the FOMC meeting, is Kamaksha Trivedi, Global Head FX Rates and EM Strategy at Goldman Sachs. Kamaksha, thank you very much indeed for joining us. You're a rare guest, probably because London is not appropriately suited in terms of time zones. But thank you for sparing time now.
It's a basically pleasure to be here again.
Thank you. How are you all reading the mix of data? Is it just one cut, 25 basis in September and one each in November and December? Or do you think you cannot give up on more cuts, considering the weakness in the non-farm payrolls?
I think, you know, successive cuts of 25 basis points for the next three meetings, I think that should be the baseline that you start with. That's very much our baseline. But I think as a number of Fed speakers made clear after the weak data that you were referring to on Friday, that, you know, if you see further softness in the in any of the employment or activity indicators that are coming up either this month or next, I think that there would be a willingness to kind of front load or, you know, move to somewhat bigger steps. I think that's appropriate given that inflation has largely cooled on a whole range of measures. And if you are operating with a dual mandate, one that is both targeting inflation and full employment and growth, that focus should shift to that growth side of the mandate. And so, you know, if you have weaker data, there should be a willingness to move policy in bigger steps to make sure that that growth mandate is well protected. So I wouldn't rule out larger steps, and I think the market won't rule out larger steps even after a 25 basis point. I think some degree of pricing will remain in those November and December meetings.
Okay. Yeah, I guess much will depend on the CPI data as well that comes out later this week. What are you all going with? Just 0.2% month on month? And if that is delivered, then no change in expectation?
I think a little bit even less than that, I would say, but, you know, rounded up to 0.2. But I think, yeah, I really do think that at this point, the inflation data, you know, really in a big change relative to the last couple of years. I think the inflation data is now less important than the activity or the employment data that you're going to get. So, for example, the retail sales measure that you mentioned, the weekly jobless claims data that we get, I do think those are now going up in importance as the bigger risk the Fed faces now is less inflation resurgence, but more softening in growth and employment and a softening beyond what they would like to welcome. So I think the inflation data, the bar for it to really shift pricing one way or the other, I think is very high.
Well, that's very important, you know, to tell us, to train our eyes as to what exactly is the data and how much weightage we should give. Though I was a little surprised that the market reacted not so badly to the labor data. After all, they had pulled down the previous months by 60,000 jobs in July and another 25,000 jobs in June. So it was quite a bad set of numbers. But Kamaksha, to the point where we really want from you, dollar index. I mean, if it is only 3 cuts, does the dollar index go below 100 by the time we get to December? Or are there a good chances it weakens even more?
Look, I think, you know, the dollar index has already weakened a fair amount from its highs in, you know, I would say middle of July. I think a lot of that reflects the fact that we're now pricing in cuts of almost, you know, a cycle of cuts, not just 3 cuts, you know, nearly 225 basis points for the entire cycle. And the fact that the Fed can and likely will, you know, ease policy rates, ease real rates faster than many other jurisdictions, I think that is all consistent with the dollar index having moved lower. However, we are of the view that that downside is limited from current levels, unless you see either much more weakness in the U.S., which we don't expect, or a much stronger growth view in the rest of the world, which remains to be seen.
Okay, at least with the DXY currencies, I guess Europe is not at least forecast to do much better than the US. If anything, it's the other way around. So let's come to the one where the expectations are still of a hike in Japan. Are you all penciling in a hike? And is there a possibility of this yen carry trade again unraveling? That kind of a problem can come again, you think?
I think you're absolutely right in the first part of your question that, I think a lot of other places, other jurisdictions are not very different from the US, the Euro area. The activity data look pretty weak as well. I would say, one of the underappreciated aspects of the Fed moving to a cutting cycle is that essentially cuts are going to come close to a central bank near you. You're going to see a wide range of central banks in the G10 and EM world moving to cuts now that the Fed is likely to give its green light. But Japan is in a different place. You mentioned that they are in a different part of their cycle. They are trying to gradually move rates higher after, a couple of decades of being at the lower bound and having had deflation. That journey is going to be a slow one, a patient one. We do expect, hikes, but only very gradually. And I think that shift is part of what, led to that kind of carry trade unwind. I think a good chunk of the tactical I'd say tactical carry strategy positioning has unwound, but a bigger chunk of the real money exposure to U.S. assets still remains.
Mm-hmm. Yeah, I would assume that lightning will not strike in the same place again. So another action replay of the same carry trade unraveling is perhaps unlikely. Okay, before I come to more of Asian questions, what about the U.S. yields? Do you think the 10-year is likely to be here, 3.7 to 3.24, or does it go outside this range?
I'd say under our baseline scenario that the U.S. economy can deliver a soft landing, that, we avoid recession, over the next 12 months. I'd say, yes, a range of between 3.5 to 4 seems like the right sort of level for the U.S. 10-year rate. I think going below that, does require you to price in those kind of bigger front-loaded cuts that I was talking about, and potentially those come in the event that growth data is even worse. I think if you start thinking properly about recession risk, that's the kind of thing that can get you to lower levels of the 10-year yield. On the flip side, again, I think that given that the cuts are coming, given that you're likely to see a sequence of cuts and not just 1 or 2 or 3, it's hard to see yields breaking that top side of the 4% level anytime soon.
Okay, got your range. Now let me come to an India question. I don't know how much this made a noise in fixed income circles, but the chief economic advisor, no less, raised his voice against inflation targeting framework itself. To be fair, he has done this in the past, but it became quite a debate. Is that finding any echo in when you take decisions after all the inflation targeting framework and keeping inflation below 6% has made us part of the bond index? I would think there have been some positive payoffs, but did you all even notice that debate?
Look, I think inflation targeting has served, many countries well. I think India is one of them. But I think there's always been an acknowledgement that inflation targeting was never, just a kind of one size fits all. I mean, even if we were just talking about the US, they have a dual mandate. They, target both, stable prices and full employment. Even other jurisdictions where you have inflation targeting, like the UK, that often comes with a range of flexibility around that to make sure that you're not just targeting inflation in so single-minded a fashion that you lose focus of the activity side and the growth side of things. And so I think there is, what we call inflation targeting. I think it's useful to have that as your lodestar. But I think, it's important and appropriate that each jurisdiction has a flexibility to achieve that in a way that is sensitive to local ground conditions. And I think that is true of India as well.
Yeah, I would hold that India has been doing that. That's why it's called flexible inflation targeting. No, my limited point is, has it disturbed anyone? Or is India's loyalty to inflation less than we thought? No, it didn't make those ripples?
I don't think so. In fact, in my conversations with clients, India remains a destination that, people look upon fairly favorably from an investment standpoint. And I think part of that, is the stable policy framework that has been in place for many years.
Okay, good. Good if it didn't, because it's only an academic debate at this point, or so it seems. But today we saw someone taking a call on banks based on that argument, based on the debate. But what about the dollar rupee itself? We've got a fair amount of money coming in from bond indexes, funds, equity funds. Some of them are still on the sidelines. Active funds are not overweight India. How do you see the dollar rupee up to December, next 12 months?
Yeah, I mean, we have, over the next 3 months, a target of something like 84, not that far away from where we are right now. We have a modest amount of appreciation in the rupee and a modest amount of depreciation in the dollar penciled in as we go further out over the next 6 to 12 months to levels closer to 83 and a touch below that. Part of that reflects, the strong growth that you have in India, the high carry that is in the currency. And part of it reflects the fact that we have a modest amount of dollar depreciation penciled in over those 12 months' time. I think, the important thing from a rupee standpoint is not just the foreign inflows that are coming into India that you mentioned, from the bond index or from equity funds that might be covering their underweights. It's also, what is the policy framework and how much of that is allowed to affect the dollar rupee exchange rate and how much of that, ends up in, an expanding reserve, a reserve buffer and a reserve accumulation. Right. And so it's partly that policy dynamic that has made the rupee exchange rate a kind of very, very low volatility, very stable exchange rate.
Yes, well, absolutely. I don't think the Reserve Bank likes an appreciating rupee at all. Those who call currency manipulators can do what they like, but the Reserve Bank is very clear they don't want an appreciating currency, which is why it surprised me that you're saying even 83.5. I'm not sure the Reserve Bank likes that number. But just a final question: is it even in your debate that India could get a rating upgrade? After all, the fisc is. The fiscal deficit is coming down. Does that figure in your thinking? And therefore, where do you see bond yields, say, in the next 12 months in India?
Look, I think the prospect for bond yields is quite favorable over the next 12 months, but not just because of the fiscal side of things. I think there's a large amount of long-term savings products that are sort of going into that market. But equally, there is, the prospect of rate cuts. Going back to what I was saying right at the top of this conversation about the Fed. I think the Fed that is, moving towards cuts is going to allow a lot of central banks, including central banks like India, to move rates lower. So I think, in India, government bonds are, one of our favored recommendations. We like that alongside the kind of stable carry that the rupee provides. I think it's a pretty attractive investment for a lot of people, even at the current rating level.
Okay, thank you very much. Just a word. What is the number you're looking at? Are you looking at 6.7 or something by December? And by 12 months from now, do the yields go to 6.5?
I think 6.5 is very achievable in 12 months.
Okay, that's good to hear. And I hope all the insurance guys and treasuries are listening to you. Thank you very much, Kamaksha, for sparing time for us. Pleasure speaking with you. Thank you. Well, that's it on this edition of Bazaar. Chartbusters coming up after a very quick break.
तो डेफिनेटली उनकी जो मोटिवेशन है वो काम आती है एज ए टीममेट भी हमारी टीम।
không kịp mà khênh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc, xe máy của bọn cô là trong nhà khi đang ngập nước mà nước bây giờ là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy?
Levis Labs climbs nearly 3% as it is the top Nifty gainer. Lotus Labs too up around 5% after the US House of Representatives passes the Biosecure Act that will subsequently reduce the dependence on biotech companies in China.
Life insurance companies SBI Life and HDFC Life slump as the GST Council defers its decision on reducing GST on life and health insurance premiums.
Coforge higher by more than 3.5%, around 3% now, as brokerage firm Motilal Oswal upgrades the firm to buy with rating price of 80-100 rupees. The company's exposure to banking and financial services will allow it to participate in any demand recovery.
Paytm zooms more than 7% following an investor meet yesterday. A few more investor meetings are lined up on the 12th and the 13th of September.
Vedanta is optically lower in today's trading session. That's after the stock has gone ex-dividend, so we'll keep an eye out on that one. All right, you're watching us here on Chartbusters. I'm Mangalam Malu. With me is Nigel D'Souza. Come together after a very long time. Nigel, over two and a half weeks. So what can we say? Double engines firing right now. The market's not looking particularly bad. We've seen, a bit of volatility, but the Sensex holding in the green, the Nifty too holding fairly.
Well, good to have you back, Mangalam. And yes, double engine all set to fire, and the IPO market is firing. So let's get straight to one that's right down your alley.
Right down our alley, and we talk about our double engine. We have another double engine with us as well. The MD, CEO of P.N. Gadgil Jewellers joins us now. Jewelry retailer P.N. Gadgil is coming out with an 1,100 crore rupee IPO. Opens for subscription today, closes on 12th of September. MD Saurabh Gadgil and Executive Director and CFO Kiran Prakash Firodia join us in our studios to discuss the company's prospects going ahead. Thanks a lot, gentlemen, for joining in, and congratulations for entering the stock market in a sector which has created a fair amount of wealth for investors. Over the long term, one company for sure that's tightened, but over the very recent term, all the others as well have been big movers, the kinds of Kalyan, Senco and Thangamayil. Now that you're in the markets or coming in the markets, there is lack of scarcity premium here, because one would say, okay, this is a new offering. There are already other players. What is it that we look for in P.N. Gadgil? One could be valuation discount, second could be growth prospects, and the third could be improvement in margins going forward. So, if you could give us a sense of what growth can you sustain going forward. Let's start with that.
Thank you to you both, and it's a pleasure to be here today and on the first day of the issue open. So a great moment for all of us. I think it's a testimonial to the entire team's hard work And I just want to just thank my grandfather Rajika, who came from Sangli to Pune. Tomorrow is the birth anniversary, September 11th, and it's falling on days of the IPO, so it's a great feeling for all of us. To answer your question, I'd first like to say that we have a very unique positioning in the market, which we call as scarcity. By that I mean that we are the only organized family jeweler in the country. I'll explain more to you on this. When you talk on a family jeweler, you talk on a jeweler with a relations for 3 decades, 4 decades with a customer. There are family generations who will be buying from that particular jeweler, your dadi, your mother, yourself. And that's how the family jeweler is known to be a part of extended family, reliable, doing services like valuation, repairing, polishing, and other kind of things, which is like a one-stop shop for you for anything you need in jewelry.
Yeah.
Now, we have been that for the last 20 decades in Maharashtra. We have families which are with us for 4 generations, karigars who are with us for 3-4 generations. So on that side, we are a family jeweler to maybe 25-30 lakh people in Maharashtra or from elsewhere. At the same time, we are also organized. So we'll be doing almost all the things that a family jeweler will do, but in a very controlled environment, in a very, very SOP-driven, process-driven environment, and that makes us different. That makes us unique. When you look at my business, 30% of my sales come from made-to-order. Which is also a case with a family jeweler. You'll walk into a jeweler, you'll say, I want to make this ring for me, I want to do this chain, some changes here and there, I want to make a bangle. And a family jeweler will not try to sell you off the shelf, he'll make it for you. That is what even is special at our end. So that is what makes us really different from the market. And we feel that this is going to be one of the growth drivers as we go ahead. We'll be selling the same customized made-to-order jewelry at the same price what would be off the shelf. And in a very short span. So we'll take 2 days to make a bangle, going up to 10 days to make a piece of jewelry. So it's a very sweet spot for a customer. And that I think is going to be one of our unique points, along with the legacy, along with the brand, and our understanding of the market.
All right. Saurabh as well as Kiran, welcome to the studio and congratulations on opening of your IPO. One word, I personally been to one of your stores around 5 years ago and it was a pleasant experience. So as a customer, I was satisfied. So good on you all. But stock market's all about satisfying the shareholder and they would like to know a few numbers. Sure. Now, getting into this IPO, your growth is looking very, very good. Sometimes Mangla, me, all of us here at CNBC-TV18, we interview a lot of managements ahead of the IPO. Suddenly the numbers start looking very good ahead of the IPO. Some of times it's mostly, business as usual. So do you think this sort of a growth momentum that you've delivered is sustainable?
You want to answer that? Or?
Yeah, definitely. So typically the growth which we are observed from post-COVID, because these are the year which are abnormal for all the industries. So considering that as a benchmark for setting up the next 2 to 3 year execution plan, and that the same thing we are utilizing to actually materialize whatever we have decided. We have done all the renovation, expansion through the entire holding, which is in the form of borrowing, and we haven't increased our borrowing levels also. So keeping the same momentum with the help of internal accruals, we are doing all this renovation, expansion. Last year we have added 4 new stores. This year we have already added 3 new stores in Q1. So we are hope that we will keep the same momentum again going forward. As far as RHP is concerned, we are posing that we are going to open 12 new stores. So 9 in this year and 3 in next financial year. So we are very much hopeful that we will keep the momentum with the same pace going forward also. As number of stores also increase, we are also going to increase the studded portion, which is currently in the range of 10 to 11%. So going forward, that portion is also one of the thing which we are aggressively looking to expand. So having said that, in totality, we will keep the same margin level going forward also, and as well as the revenue, that momentum also we are going to keep the same.
So, of the 2 things that you spoke to us about, one is the store addition and the second one was the studded portion itself. Let's take both those points forward. Store addition in the RHP, you've said about 12 stores. I'm sure with your internal accruals, you would add a lot more as well. Say 20 stores are added over the next 2. Yeah, go ahead.
No, I want just to add to Kiran's point, the revenue growth which we're talking about and the margins. So our margins, when you look at the retail part of our sales, is almost on par with the industry. Gross is at 13%, EBIT is at 7%, PAT at 4%. So margin-wise, we are already there.
So what explains the discrepancy between what you've reported versus what?
No, there's no discrepancy. The out of my total sale of 6,000 crores last year, 1,500 crores was old gold sold to refinery to purchase back new gold. This business had no margins. So it's a sale and purchase transaction, GST paid transaction, and that is why we have seen that the margins on a 6,500 level have have been at 8-9%.
So this trading business will be out of.
So we are looking at an option to move this to a
net basis.
A net basis. While we can look at an exchange model for this, and it's not a sale purchase. By this, we'll be able to maintain the same margins, but we'll be at the same levels of PAT, EBITDA, but with higher margins. So the margins would come to gross at 13%, and like Kiran added another addition from the studded bigs, because we started studded very late. It's just been a 5-year journey for us, and from a zero sale to a 450 crore sale is what we have done in the last 5-6 years. So it's growing at a very fast rate. That should add more margins, and expansion definitely is going to be something which will further add to it.
So Kiran, two things you spoke about. One is the studded business, which is 10-11%. You're looking at taking that up. So as an aspiration, since we want to keep your banker as well happy, where does that number head from 10 to 11% of the mix? And the total number of stores you gave us, 9 stores is what you're looking at. 3 stores you have already opened. From around 36, I think so is the last number that we have. Where is that number headed in the next 2 years?
Okay, so today, as far as current financial is concerned, that total count tally reached to 39 because we have added 3 stores already.
Yes.
And whatever we have mentioned in RHP, they are excluding these 3 stores. So along with the 3 stores, we are planning to add 9 stores fresh during this financial year.
48.
So now the count will reach to 48 this financial year, and next financial year again 9 store we are planning to
57.
So it will reach to 57. So that
the way.
So roughly 60 stores if you add per store. Currently you're doing about 150-160 crores of revenue. Will that revenue momentum continue per store? Because if you are adding 25 new stores, that adds another 25 into 150 sort of.
That's why the whole strategy we done was that we wanted to be the largest player in Maharashtra. Today we are at 39 stores. I believe the leader is at I think 59.
The leader being Tanish.
Tanish at the 59-60 stores. So the plan, the agenda on the list is to be a 60-store company in the next 2 years. By this, we want to go on a focused growth. So Maharashtra is places where our stores do 4.5 stock turns every store. So our investment in a store is around 35 crores of inventory, and we turn it around 4 times. So that comes to 170 crores. We'd be able to continue that in Maharashtra even as we move ahead, because these stores are going to be in Tier 1, Mumbai.
So 60 into 170 gives you 10,000 crore roughly revenue. Is that the target?
That's right.
By when? FY27?
FY27.
All right. And
that
studded, Nigel asked about that.
Yeah.
How much would that be?
Studded, the company wants to be, at least targeting 15% in the next 2 years. So by that, means 15% on the entire grown revenue. That is where company plans to go. And eventually, we would like to be focusing towards 18 to 20%. That is where we think that we'll be able to have a good mix of studded versus gold. And that's the company aspiration. We're working towards that. There's a lot of work.
So what happens to the margins then? Do we see double digits at 10,000 crore base?
Margin should increase. That's what we are really aiming for. So that's something which is possible. And because I mentioned we're in Maharashtra here, my cost, the overhead cost will not go up drastically, because I'm going to be limiting myself to a state for the first 2 years. So in the first year, definitely we'll see improvements in margins, improvements in top line, and we'll see a lot of robust growth from these particular areas which we're targeting.
Okay, all right. And these are aspirations. So your banker and all the regulators as well as
3 aspirational numbers that we have so far: 10,000 crore revenue by FY27, 60 stores, and roughly 10% margins with 15% sales coming in from studded.
So we've got those numbers. Just a final question. Maybe people outside Maharashtra as well want to have a feel of your brand. At some point of time, do you think that's going to be the target, say 2030 or something, where some part of your business comes from outside Maharashtra? Do you think Maharashtra is good enough for you?
We love Maharashtra. We are born here. So
we all love Maharashtra. We're all here.
Jai Maharashtra. So Maharashtra is something which is going to be on our radar for the next 2 years.
Yeah.
But to reach the potential of the state, we still believe the state has potential, has areas where we are not present. Post that, we want to follow the route of the Peshwas, how they went from Maharashtra to Madhya Pradesh, Chhattisgarh, Jharkhand, UP, Bihar, and Delhi. That is the plan which the company has earmarked for the next 5-7 years. So if you ask for the next 7 years, again, aspiration is to be a 100-120 store company. But again, focused on one state at one time, be a leader there, make a mark there, and then move ahead. So we do not intend to go randomly into different cities of India. We go in a very focused way. Right. But yes, post Maharashtra, we would follow the Peshwas and try to...
So follow the Peshwas, you invoke them, great Peshwas. But, just one follow-up on that. You said there's a lot of headroom to grow in Maharashtra itself. What's your market share here?
So based on the numbers approximately which are given by the bankers, the share would be around 10% of Maharashtra today. These are numbers which are really on the estimate of the industry and then the share of Maharashtra from that.
Got it.
So it's around 10%.
All right, gentlemen, we appreciate you coming down to the studio and speaking to us here at CNBC TV18. You'll have given us the aspiration. Well, the share market has various expectations from you all as well. On listing, we request you all to come back on the show and then we'll push you all a little bit more for some numbers. All the best, gentlemen, and thanks a lot for joining in.
Just Nigel, he said that he wants the share of studded to increase from 10% to 15%. I'm just looking at every piece of jewelry that he's wearing. On him, the share of studded is nearly 95-96%. I presume all that you're wearing on your body right now comes from P.N. Gadgil.
Thanks a lot.
Aspiration.
Thanks a lot, gentlemen.
Thank you.
Well, on that note, we'll slip into a short break. Come back. We'll continue to focus on markets. We'll focus on the technicals. Don't go anywhere.
How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media.
Welcome back. Well, let's get in Shilpa Rott of Prabhudas Hirdar, who joins us on the show. Hi, Shilpa. Good morning and good to see you win. Well, the markets are more or less in flattish terrain. So if you didn't get up in the morning and couldn't punch in a trade at 9:15, you're not doing too badly even at 10:45. On the index first, what's the trade both on the Nifty and the Nifty Bank, which in fact yesterday the Nifty Bank showed signs of breaking out, but today it's cooled off yet again.
Good morning, Nigel and Manglam, and thank you for having me on the show. Talking about indices, yes, we see that Nifty and Bank Nifty both are taking a breather. If you look at the option chain also for Nifty, 25,000 and 25,100 is going to act as a very strong resistance. And the immediate support is at around 24,850. If we go below that, then probably 100 points more dip can come in very fast. So I would be a cautious stance here and probably a sell target, a sell call with a target of 24,850 to 24,750 is something one can look there. That is the base, and then again we can look after the data and maybe initiate a long buy. Bank Nifty is in a very narrow cluster where 51,000 is having a lot of put writing and 51,500 zones with call writers. So this 500 points, very very tough cluster that we have. So Bank Nifty, in fact, can be a turnaround buy for the day with a stop loss at around 49,900. You can be buyer here and look for targets of 51,300 to 51,400.
Take that point. That's on the indices. But what stands out today are the broader markets. After underperforming yesterday, Shilpa, the mid-cap index has come back in style, up around 500 points with nearly 1,800 stocks advancing for about 500 stocks which are declining. So do you have any picks out here when it comes to individual stocks?
Yeah, I have one buy and one sell. The buy would be Dabur. Dabur in FMCG pack is one of the strongest script that we see here. It has a very strong support at 650 zones, and the stock is very well poised to test 700 to 720 levels. So on any decline with a stop loss of 650, I believe that one should be a buyer in Dabur. The other one would be a sell in PFC. The stock has just gone down below 520, which is a crucial resistance for the stock now, and any movement below 520 will drag the stock towards 500 to 495. So sell in PFC and a buy in Dabur.
Okay, all right. Shilpa, I wanted to ask you about Jio Financial. Just looking at the intraday chart out there, Jio Financial is bursting up. The hope now that the street has is that it gets into F&O and then it becomes a trigger to come into the Nifty. So the last few days, I think in the last week or so, the stock has moved from 320 to around 355 odd. Any view on this counter?
Definitely rightly said, Nigel. On weekly chart also, if you see that 320 has become a good base. So, being a long time, if you have a long time, view for this stock, so 320 should be your immediate support and your tight stop loss as well. From here, you can look for targets till, maybe 380 to 400. Above that, the stocks opens up for much higher targets.
That point. Thank you, Shilpa, as always, for joining in and giving us your view on stocks and the indices. With that, let's get you an idea for profit coming in from our colleagues at Money Control Pro. And today we have Khushbu Rai Gupta joining in.
Today's idea for profit is India Shelter Finance. The company is a pure play in the informal, affordable housing finance segment with a strong presence in Tier 2 and 3 towns. The loan book is growing at a 4-year CAGR of 41%, led by strong strategic branch expansion and policy thrust. It plans to add 40 to 42 branches annually over the next 3 years with a focus on increasing new and under-penetrated territories in the rural areas. Moreover, the company has been able to maintain yield in the 14 to 15% range, led by a higher share of new-to-credit customers, which remain one of the key business moat of the company and offers strong pricing power. Also, increased allocation under the PMAY scheme will benefit India Shelter given the high rural focus. We are of the opinion that the higher share of fixed rate advances could also help the company in the event of a rate cut by the RBI. The stock is trading at a multiple of 2.6 times FY26 price to book ratio and could benefit from the strong sectoral tailwinds. It also offers attractive return profile and could be a good investment opportunity.
All right, take a short break, come back, get you all on the markets on an exclusive conversation with Sanjay Kapoor, chairman of Sona Comstar, on the other side. Stay tuned.
As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. As promised, let's talk about Sona Comstar, which recently completed a QIP worth nearly 2,400 crore rupees. We got in touch with Sanjay Kapoor, the chairman of the company, to understand the company's growth strategy, what they would do with the funds, capex plans, etc. Let's hear out a slice of that conversation. The stock up nearly 2%.
So, industry is growing, the market is growing as far as we're concerned. We're capturing more market share, and therefore we hope to continue to see growth. The growth drivers, as was discussed today, in fact, at the ACMA annual session, is going to be exports. Domestic market is also growing. I think new opportunities in terms of supplying into different kinds of vehicles. I think even components, the component industry is also going to see great opportunity in terms of software, and brand new systems altogether. The competitive landscape is also changing, and therefore we're going to see a lot of opportunity in the components.
Do you see some sort of muted demand going forward, considering that we've seen a slight correction in demand in passenger vehicles as well?
So, it's cyclical. I mean, our industry is cyclical, as is any industry. However, when you look at the long-term perspective, there is a lot of growth opportunity. It's very promising. Everything we're seeing. We're also looking at it as a mobility industry, and therefore, it widens the scope in terms of demand and supply.
Right. Now, speaking about funding the future growth of the company, there is a QIP that Sona Comstar has launched. I believe you cannot talk much about it at this stage, but give us a sense of where you would like to take the company in terms of future investments and future growth.
So I think one, we have a lot of capacity enhancement that we need to do as well as the market grows. Secondly, we want to look at technology. And when you look at technology, we want to see where we can play a role in the future. So we'll continue to look at technology. We'll continue to look at the expanded mobility space, and how we can play a role in the expanded or the expansion of the mobility space. So I think that's really what we're going to do.
How much capex would you like to put on the table this year?
So I think we've got a plan of about 1,000 crores over the next 3 years. So let's see.
Any kind of hurdles that you see to growth right now? Any kind of challenges?
No, I think it's all about investments in technology. That's and I've been sort of talking about that for long. The fact is that the markets will see cycles, and we need to ride those cycles out. I think this is a great time to sort of regroup in terms of building efficiencies in businesses as a whole. And I think it's a good time for the auto component industry. Right.
All right. Well, on that note, though, we'll have to wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.
मैच में एक और बहुत ही बढ़िया एक खूबसूरत चीज़ है कि आपके मैच में एक और आर्चर है जिनकी बहुत बात हो रही है, शीतल देवी। वो काफ़ी चीयर करती हुई नजर आई। सिर्फ 17 साल की है वो। उनके परफॉर्मेंस के बारे में क्या कहना चाहेंगे? कैसा माहौल रहता है पैरालंपिक्स विलेज में, पेरिस विलेज में?
जी बिल्कुल, टीम सेपरेट अच्छी है और शीतल तो सबसे यंग आर्चर है इस कंटिजेंट की भी, हमारी टीम में भी। तो हम आपस में जब भी हम कंपटीशन में होते थे, हम 2 महीने पहले भी चेक रिपब्लिक में कंपटीशन में थे, तो मैं उस टाइम भी वहाँ पे 3 मेडल जीता था। तो हम आपस में, शीतल सबसे छोटी है तो हँसी मजाक करते थे। तो वो कहती थी भैया मैं आपको चीयर कर रही हूँ, आप जरूर मेडल जीतोगे। तो वही चीज, क्योंकि उसने मेडल जीत लिया था राकेश और शीतल ने, तो वो मेरे साथ वहाँ पे थी पूरी टीम के साथ, और सबसे छोटी बच्ची है तो देख के और ज्यादा खुशी होती थी कि वो चीयर कर रही है और वो चीजें काम भी आई। तो अच्छी बात है, ये टीम स्पिरिट है कि आर्चर दूसरे को सपोर्ट करने के लिए ग्राउंड पे पहुंचते हैं, और क्योंकि वो उनकी अचीवमेंट इतनी ज्यादा है कि इस डिसेबिलिटी के बावजूद वो वर्ल्ड में अपना नाम बनाई है, तो डेफिनेटली उनकी जो मोटिवेशन है वो काम आती है एज ए टीममेट भी हमारी टीम में।
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonal Bhutra. It's a bit of a choppy Tuesday morning to begin trade. We started with the Nifty above 25,000. Then we dipped into the red, almost giving up nearly 100 points from the top. But after that, from 10:15 to 11, we've staged a bit of a recovery. Right now, it's mild green on the Nifty and the Sensex. Mid-caps, though, are holding strong. So it's a 1% gain on the mid-cap index and a good advanced decline ratio. 1,800 stocks advancing for about 550 stocks in the red. Hi.
Hey, Reema. And it was this particular index which wasn't doing so well yesterday. But yes, as you pointed out, there has been a swift recovery from the lows. We'll have to see whether we actually build onto that or we see some stability at these levels. Remember, Gift Nifty was suggesting a start in the green to the tune of around 30 to 40 points. Mid-caps doing well. Some of these sectoral gainers include the likes of pharma. We'll discuss that in greater detail. The Biosecure Act has been passed in the US. The small cap index too is up around 1% today. So it is giving that company to the mid-cap index. We have the IT space which is doing well. We'll discuss that in greater detail as well. Realty CPSE, which was under pressure yesterday, has made a comeback. Has made a comeback today as well. But definitely we have to talk about the IT space. Reema, there have been a lot of notes off late, right? And today there is a fresh one from Motilal Oswal, specific stocks as well. What does it say?
Well, so starters, they begin that the IT sector could be at the cusp of a recovery. They've gone through a very long period when discretionary spending was cut back. But now they believe that worst, the worst is over and discretionary spending should come back. So their top picks in the sector are HCL Tech, LTI Mindtree, Persistent, Coforge, they have upgraded to a buy with a target price at 8,100. Their earlier target price was 6,100. They do not have a sell call on any of the IT companies. So on some of the others, like TCS, Infi, LTTS signed, they have a buy call. And they've got a few neutral calls as well, like a Wipro, Tech Mahindra, etc. Now, they've done a lot of analysis. It's a thematic report, a deep dive into, the factors which will drive the recovery, etc. And their key takeaway is that healthcare, manufacturing, and BFSI. These are the three verticals that could lead the recovery. Now, there are many angles to decide, how one should judge the recovery. One, of course, is, health of the clients. Second is the impact of generative AI. Third is the rise of captive centers in India. If, we have more GCCs, as they call it, global captive centers, they could take away work from IT service providers. So they've analyzed all these parameters, and their takeaway is that these three sectors will do well. Now, why healthcare? Because the threat of insourcing by GCCs is less. Why BFSI? Why will it do well? Because it will do well from rate cuts. And thirdly, those are the three sectors, and manufacturing generally has done well globally. Now, HCL Tech benefits because it has higher exposure to healthcare. LTI Mindtree is well positioned to capture generative AI spending, and Persistent Systems has high exposure to healthcare and BFSI. So keep in mind the kind of valuations, premium valuations it's trading at. And for Coforge, they've raised the valuation multiple to 38 times versus 30 times.
And 8,100 rupees is the target
8,100
there for
rupees
Coforge. Okay. Coforge has been in focus. Few other brokerage
It's been a bit of an underperformer also. So year to date, Coforge is up 7-8%, while the Nifty IT index is up 19%.
No wonder the upgrades are coming up.
Yeah, so some upgrades are coming in because they had made that acquisition of Signity.
Yes.
So the street was a little skeptical about that acquisition. But now, Motilal Oswal says, they will be able to extract synergies, and it could be a good long-term asset for the company.
Okay, all right. So Nifty IT, the IT index generally in focus today. Thank you, Rima, for that. In fact, let's take this conversation forward. Josh Thomas from Quantum AMC is joining us now to discuss market fundamentals and a lot more. George, good morning. Thank you so much for joining in. First up, I have to ask you on the IT space. The index is doing well. There are positive notes coming in here. Do you think the worst is over in terms of the challenges that the sector faced earlier? And what is your pick? Do you like the large cap IT or is it the mid cap space that you like more?
Yes, thanks, Ronald, for having me on the show. See, when you look at the last few quarters of IT results, the deal wins have been fairly strong, which means from a customer point of view, from a client side, there is an intention to spend. It is just that the environment was not very conducive, and therefore, most of them have kept the discretionary part of their projects on a different side. But generally, what typically happens is when the tech spend is muted for some time, that in itself creates a requirement for upgrading the technologies and things like that. And our sense is, that could happen sometime in the next year, so in the next few quarters. So one, there is a decent amount of projects which have been deferred, and that could kickstart. And the second thing is, if at all there is a lot of things, a lot of projects coming up on the Gen AI side and things. So the Indian players would get a lot of integration demands and stuff like that.
Do you have any IT stocks that you're betting on?
So we have about little more than 15% weight in the IT sector. A lot of that is towards the large cap IT names.
So a neutral call on IT. It's not an overweight with a 15% holding.
But relatively, our cash levels have been high. So on a relative basis, if you look at it, our exposure to the sector is slightly on a higher side.
What is your cash holding right now, George?
So our cash is around 15%, given the recent run-up and, many of the stocks crossing our fair value estimates. So we have been having quite a bit of trims, majorly in the consumer discretionary space.
George, I wanted to ask you about the energy space. There have been a slew of notes. We have seen crude oil prices going below that $75 per barrel mark. There's been that big merger in the Gujarat-based gas companies as well. Is there anything that you like from the oil and gas space in terms of valuations? Yes, they are still reasonable, but some of these stocks have run up a lot.
See, we hold a couple of utility companies in the portfolio. And if you look at it, even if we were to normalize the earnings, our sense is, few of them are trading around fair valuation. But given how the stocks have performed in the recent past, and then considering that, many of these earnings profile is quite volatile in nature. So some of the gas utility companies, our sense is on a relative basis compared to market, it might might outperform the markets. But some of the oil producing companies might be affected as the crude prices comes down, because many of them had a certain threshold realization spec to $75 of crude, and as crude recedes those levels, we might see some of their earnings could be impacted.
So you are saying that gas utilities tend to benefit more in the current macros versus any of these oil companies, including the downstream companies?
Yeah, the utility companies, their earnings profile would be a lot more stable, is our sense. And we have been holding a couple of them in that sense.
Since you have a high cash weightage right now, what is it that you're expecting when it comes to the market? Is it just a period of consolidation? Are you expecting a bit of a correction, a deeper correction when you will look to deploy the cash in your books? What is your expectation for the next 6 months?
See, we typically tend to take a longer term view. If I look at the next 2-year perspective, our sense is given the levels where valuations are, the return expectations should be fairly muted. So we would look for a reasonable correction, maybe 10-15% to probably deploy most of our cash. But having said that, we are bottom-up investors, and if at all any stock hits our buy limits as individual names, correct, we would be happy to add. But at this level, our sense is overall market upside is quite limited, considering a lot of the future earnings is already priced in the current levels.
I know you wouldn't be able to speak about specific names, but you did say that you have the bottom-up approach, and there are some stocks which could hit the limit at which you could enter. Is there any sector, is there any space that you think is closer to reasonable valuations or is getting to a point where you can enter?
See, the obvious value pick at this point is private sector banks. Recently, we have reallocated some of our capital towards some of the leading private sector banks. And the reason being, the credit environment, our sense is would be kind of muted, at least in the medium term. And as and when the system liquidity has already started showing some signs of improvement, and as and when that improves, our sense is growth in some of these names could pick up, and that could reflect in the overall space moving upward. So apart from private sector banks, one other sector which we feel could benefit in the medium term is insurance space, where valuations have been fairly high for a very long time, and in the last few years, those have come to reasonable levels, and we have been able to add a couple of more names. So apart from these two sectors, our sense is IT could be one sector where earnings could surprise the consensus estimates. And to that extent, we might see some pockets of opportunities there. But the valuations there are not anywhere close to cheap levels. But there could be some bit of fill-up coming up from the earnings side.
So if we do get a 10-15% correction in which sector would you look to buy it? Because off late what's happening is that at the index level, we aren't seeing corrections. But individual sectors are going through their own volatility, a bit of a decline of 10-15%. So that churn is taking place. So now if we get a 10-15% correction, in which sector will you look to deploy?
See, like I said, we don't target any sectors as such, but our sense is, if you look at from a cycle perspective, banks remain favorable. IT might see a reasonably stable earnings profile in the medium term. And then again, the other sector where the cycle is kind of favorable is pharma, but even there, the valuations are not on a favorable side. So there is no sector as such other than the ones which I mentioned, where we are kind of sensing, the valuations are very close to bottom, or where we feel, we can immediately deploy. There are few select names in few sectors, but there is no sectoral call as such, which we can point out at this point.
Okay. All right. George, it was a pleasure speaking with you. Thank you so much for joining in. So not many opportunities, there are pockets which you could be looking at, but markets are not providing those comfort levels where one can go ahead and invest into fresh names. That's the word coming in from Quantum AMC, but we'll slip into a break. When we come back, we'll discuss what's buzzing in the commodity space, as always, with Manisha Gupta.
Khênh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc xe máy của bọn cô là trong nhà khi đang ngập nước, mà nước bây giờ nó là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều, nhưng bọn cô chưa thống kê được hết.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer. A leader.
Welcome back. You're still tuned in to Trading Hour. Well, the markets, they continue to be stable at these levels, but a lot happening in the commodity space as well. So let's shift focus to that. Manisha Gupta is joining in now, and today we are focusing on crude, Manisha.
Oh, well, yes, we are. You know, last week was a 10% decline for the crude oil prices. And when you look at the third quarter itself, the crude oil prices have turned 15% into negative. Overnight, we did see some gains coming in. And this is after following on what really is happening in the Gulf of Mexico. The Hurricane Atlantic season is upon us. And there are concerns that 120,000 barrels per day could be impacted because of the Hurricane Chansey, which can convert into a second category hurricane, make a landfall on Wednesday. And ahead of that, various companies within that area have said that they have either evacuated, partially shut down various plants there, and that is where we saw the premium coming in from. Having said that, it hasn't sustained, and that clearly is what the crude oil prices seem to be doing right now, even as OPEC and allies have said that they are postponing their output production increases by 2 months. That we didn't see that impact coming on the crude oil prices, and lower lows is what we've seen come in for this commodity here. The markets also have seen various statements come in from banks and brokerages talking about lower crude oil prices now. Bank of America and Citi are talking about 75 and a possibility of 60 as well in the next year. A latest report from Trafigura also has seen a revision in sense of forecast. They're talking about $60 to $70 of crude oil prices there. Morgan Stanley has come out with the latest report saying that the global oil markets will see 1 million barrels per day of a surplus in 2025. They also have brought down their fourth quarter Brent expectation to 75 and WTI at 70 for the next year. Now, Street, of course, will watch out for the US inflation data that comes in on Wednesday and Thursday, and further direction would come in for that. But at this point in time, continuing to trade negative for crude.
Thank you very much for that. We will slip into a very short break. We'll come back and discuss technicals with Videsh Thakkar. Stay tuned.
Building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18, weeknights at 7 p.m.
Welcome back. The Nifty is once again trying to get back towards 2,500, and now the consumption names are back in focus. ITC, Titan, Nestle. These are stocks where there have been some gains in the last 30 minutes. Mitesh is now back with us for a quick technical check on the markets. Mitesh, are you heartened by the intraday pullback that we've had in the last 1 hour? And what would the top calls be?
Yeah. See, the idea is that we were, kind of struggling a couple of days back, and then yesterday we had some kind of a pullback, and we haven't tried to break below 24,800 today. So to me, I think that's a positive sign. The setup has been slightly negative because the hourly and the 2 hourly charts are still showing declining indicator setup. But if the market can hold on to support levels and the indicators can cool off, then that will pave the way for next leg of up move. So in that sense, I think as long as we are not breaking 24,800 on a closing basis, I'm very happy. And on the upside, in the short term, I expect 25,150 and then 25,050 and then 25,150 will act as supply pivots. But we might see a choppy range for the next few days, and that will be a good outcome to me. And once this range breaks on the upside, then I think we'll see continuation. So broadly, 24,800 remains the key level for me to watch.
Okay, so that would be the next important level. Mitesh, what would the stocks be in focus, your trading bets, or something that would contribute to this up move going forward?
So I have one buy and one sell call right now. Indian Hotels, after a good consolidation, is breaking out today. That's a buy. Keep a stop below levels of 678. Look for 720 as the target. And HDFC Life, after a very good rally, showing first signs of profit booking and correction. So on a mild pullback, say around 714, 715, try to sell with a stop at 728 and look for a target of roughly around 685 to about 680.
What about, ITC, Titan, Nestle? The FMCG index has given a positive return now, I think for the third consecutive month, and seldom has that happened before.
So, Nestle to that extent, I think has been an underperformer, and I've been focusing on Dabur, HUL and Marico over there. ITC keeps doing well, but from a trading point of view, wait for the stock to get past 515 and then we can see a trading rally to about 540, 545 levels. And that apart, as I said, I think, my preferred picks would be Marico, Dabur and HUL.
All right. Thank you, Mitesh, for joining in. So those are some technical bets by Mitesh Thakkar. For the markets, yes, there's been a recovery, and mid-caps, they continue to fire 600 points higher on the mid-cap index as we speak. Let's slip into a short break. Up next, we'll get you excerpts from the conversation we had with Partho Banerjee, the Senior Executive Officer of Marketing and Sales at Maruti Suzuki, on the sidelines of the SIAM Annual Convention.
मैच में एक और बहुत ही बढ़िया एक खूबसूरत चीज़ है कि आपके मैच में एक और आर्चर है जिनकी बहुत बात हो रही है, शीतल देवी। वो काफ़ी चीयर करती हुई नजर आई। सिर्फ 17 साल की है वो। उनके परफॉर्मेंस के बारे में क्या कहना चाहेंगे? कैसा माहौल रहता है पैरालंपिक्स विलेज में, पेरिस विलेज में?
जी बिल्कुल, टीम सेपरेट अच्छी है और शीतल तो सबसे यंग आर्चर है इस कंटिजेंट की भी, हमारी टीम में भी। तो हम आपस में जब भी हम कंपटीशन में होते थे, हम 2 महीने पहले भी चेक रिपब्लिक में कंपटीशन में थे, तो मैं उस टाइम भी वहां पे 3 मेडल जीता था। तो हम आपस में, शीतल सबसे छोटी है तो हंसी मजाक करते थे, तो वो कहती थी भैया मैं आपको चीयर कर रही हूँ, आप जरूर मेडल जीतोगे। तो वही चीज, क्योंकि उसने मेडल जीत लिया था राकेश और शीतल ने, तो वो मेरे साथ वहां पे थी पूरी टीम के साथ, और सबसे छोटी बच्ची है तो देख के और ज्यादा खुशी होती थी कि वो चीयर कर रही है और वो चीजें काम भी आई। तो अच्छी बात है, ये टीम स्पिरिट है कि आर्चर दूसरे को सपोर्ट करने के लिए ग्राउंड पे पहुंचते हैं, और क्योंकि वो उनकी अचीवमेंट इतनी ज्यादा है कि इस डिसेबिलिटी के बावजूद वो वर्ल्ड में अपना नाम बनाई है, तो डेफिनेटली उनकी जो मोटिवेशन है वो काम आती है एज ए टीममेट भी हमारी टीम में।
Welcome back. Let's get you a special corporate interview, and that's with Maruti Suzuki. Now, they're saying that they expect hybrids to contribute 25% of the industry car sales and EVs to contribute 15 to 17% to the car sales by 2030. This is the word coming in from Partho Banerjee, Senior Executive Officer of Marketing and Sales at Maruti Suzuki. He was chatting with my colleague Parikshit Luthra at the SIAM annual convention. He also said that Maruti will showcase its electric car at the Auto Expo. Listen in.
Just to give a perspective on the festival season, this year the Onam is in the month of September, starts on 15th of September. Last year it was in the August end actually. But if I try to compare the numbers of last year August versus this year numbers for Maruti, last month in Kerala we saw a growth in the booking to the tune of 11%, so which is a very positive sign for us. And just to give a perspective that on this Saturday we had that Ganesh Chaturthi. So the markets where generally this festival is very popular, there we saw a 10% growth in the deliveries. So if you ask me, Parikshit, I feel that we are seeing the green shoots coming, and we are hopeful and very optimistic that the festival seasons we are going to see a good sales.
So if it was around 168,000 vehicles in total for Maruti in the month of August, how much could it be in September? Would this calibration continue for the next few months?
We have to understand one thing, that this year the festival season, the Navratra starts just in the beginning of the month, October. 3rd October is the first day of the Navratra. Most of the customers prefer to take the delivery of the vehicle on the first day of the Navratras. 2nd October happens to be a government holiday. So the dealer will be requiring the vehicles to get it registered, then only they can deliver it to the customers. So there, we are very clear on that. Based on the market demand, whatever vehicles are required, we are going to serve it to our channel partners.
But this, we've seen high level of discounting. So is this discounting now going to continue, or is it just an action of about 1 or 2 months now?
Parikshit, these are market forces which decide what is there, depending on the market conditions and other things. But we feel, and through your channel, I would like to give this message to our customers. This is the right time. If someone is looking for buying the car, please go ahead and close the deal.
Yeah, because the discounts are best ever at the moment. My final set of questions, sir. We have seen this debate across the world on hybrids versus EVs. What has been the offtake of the hybrid segment in your portfolio? We already know that you've got a strong CNG sales portfolio, but when it comes to hybrid sales, what has been the offtake, especially in states which have recently activated their hybrid policies like Uttar Pradesh and Haryana?
Parikshit, first of all, I think that this is something I would like to, again through your channel, would like to convey to all our media partners also. It is not like that EV versus hybrid or diesel versus CNG, not at all. We, being the market leader, we need to be technologically agnostic, and we need to serve all set of customers. So there is nothing like that EV versus this, so which debate is going on. For each technology, there is a set of customers who are going for it. Now, to be very honest, if you ask me strong hybrid, one of the biggest thing is this, the benefit is this, it's a combination of both. And it gives you very good mileage, and at the same time you don't have the anxiety of the range, which is a bigger issue today. But we are also coming in the EV. In the auto, this Bharat Mobility Show 2025, we are going to showcase our first EV vehicle. So it is nothing like that Maruti is not into the EV. But at the same time, you need to understand that a set of customers, we should give that option to the customer. Why we should decide that customer should only go for that? Being the market leader, give all the technology offering to the customer and let the customer decide. That's what we are trying to do, being the market leader. Now, coming to the hybrid, yes, the share of business of hybrid is going up as compared to the EV. You all know that hybrids are now, customers are preferring it. And I think thanks to some of the state governments for coming up and giving that option to the customer, that let the customer decide which technology they would like to prefer to.
Right. What would be your percentage of hybrid sales?
Ours is around 16% of the models in which we are offering the hybrid.
Okay. So 16% of the of particular product lines.
Products, yeah.
And overall sales?
No, because we are presently offering the strong hybrid only in 2 models. That is the Grand Vitara and the Invicto. So of that total sales, it is 16%.
All right. And how much do you expect the hybrid sales to go up in the next, say, 5 years? The reason why I'm asking is that globally we've seen a demand for hybrids wherever subsidies have been stopped for electric vehicles. BYD today has raised its annual forecast because of a surge in hybrid vehicles as well. How does that make you optimistic, and what kind of a portfolio percentage wise would we see between, say, ICE, CNG and hybrid by 2030 and EV?
You asked me first about the CNG. Today, every third vehicle which we are selling from the Maruti portfolio happens to be a CNG vehicle. Last month, close to 50,000 vehicles were CNG vehicles from our product portfolio. That is also one way to contribute in terms of reducing the carbon footprint actually. Now coming to the forecast, I can give you a forecast for 2030. We feel hybrids will be around 25%.
Of the passenger car industry or Maruti?
Passenger car industry. I'm giving an industry outlook. Electric vehicle around 15 to 17%, which we feel. That's the percentage we feel. So our take is a strong hybrid will be around 25%.
Okay, all right, that's the word coming in from Maruti, but it's time for a short break now. Rahul Gua from Crystal Ratings will join us next to discuss the latest trends from the sector of gold, the jewelry space, and what the duty cut has done to this space.
khênh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc xe máy của bọn cô là trong nhà khi đang ngập nước, mà nước bây giờ nó là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
Investing.
Welcome back. So jewelry companies are in focus. Even today, you've got names like a Titan, which are holding up in the green. Yesterday, we were chatting with the management of Senco, where they said they're also positively surprised by the kind of demand that we've seen in the early part of September. And not to forget, P.N. Gadgil's large 1,100 crore IPO in terms of an issue size, which is a combination of fresh issue of 850 and an offer for sale of 250 crore, also opens up. Not just that, you also had a CRISIL note where yesterday the company said that the revenues of the organized gold jewelry retailers will increase by 22 to 25% this year, a good 500 to 600 basis points more than the 17 to 19% that they were earlier anticipating. And this is following the sharp reduction in import duty announced in the budget. Rahul Guha, the director at CRISIL Ratings, is now joining in. Rahul, morning. Thank you for joining in. This is Reema here. Take us through what your analysis has thrown up. Why have you upgraded your assessment of growth for the gold retailers?
Hey, hi, Rima. Thanks for having me on the show. What we're trying to say is, for the first time, we are seeing volumetric growth to happen in this particular sector. Now, if I just take you back in time from the year 2019 to say 2024, the volumes were largely flattish. They were less than 600 metric tons at all point in time, almost at about 580 odd metric tons for a fairly long time. I'm keeping aside the COVID years because in COVID, they had fallen to somewhere as low as 400 metric tons in those 2 years. Now, for the first time, we are seeing that the volumetric growth here from 580 odd metric tons will cross 600 in the last 5-6 years. At about 610 is the projected number that we are looking at for the organized segment. And correspondingly, if I look at the prices, they have remained firm. On a YOY basis, we see that last year, the average was somewhere around 63,000 odd per 10 grams. The price that we'll be quoting on an average for this year will be in the range of 73 to 74,000 rupees per 10 grams. Now, if I do the maths here, that somewhere translates into 22 to 25% industry growth in terms of revenues on a YOY basis for fiscal 25.
And this is after speaking to how many jewelers? Tell us a little bit more about the survey. And again, just break up that 22 to 25% revenue growth in terms of volumes and price increase.
Sure.
What will be the volume? Yeah.
Sure. So the overall industry, if I look at in terms of organized plus unorganized, that will be somewhere in the range of 8 to 9 trillion INR. And the organized would be somewhere in the range of 35 to 40% of this particular industry. CRISIL has a portfolio of about 58 companies in this organized space that contributes almost a third of the revenues of the organized industry. So that's the kind of database that I'm talking of, through which we have derived this particular analysis. On the volume front, as I said, we expect the number to move from about 580 metric tons to somewhere in the range of 600 to 610 metric tons. So somewhere 4 to 5% kind of a jump is what we are seeing YOY. And on the realization side, the average cost was somewhere in the range of 62 to 63,000 for the last fiscal. Against that, we anticipate about 18 to 19% kind of a average being on the higher side at about, say, 75,000 rupees per 10 grams. So net, this will translate to 4 to 5% on the volume and 18 to 19% on the value, corresponding to somewhere around 22 to 25% consolidated for the overall industry revenues.
Okay. You know, Rahul, you are talking about 18 to 19% value growth. So that's a big pricing growth and something that we've seen from the day the duty cut was announced till now also. We are around 75,000, right? So are we expecting a further up move by the end of the year as well? And do you think by then we'll see some impact on demand? What are the conversations suggesting? And is it different for the unorganized space? Because the organized space seems to be doing really well. What are the trends in the unorganized space?
Maybe I'll take the question on the demand side that you're talking of, or the pricing that we are looking at. So I think at a CRISIL level, basis our analysis, we understand that the price could stabilize in the 75,000 rupees range for the rest of the year. There will be an upside over the next fiscal where the prices could range between 76 to 80,000 odd rupees per 10 grams, 24 carat is what we are forecasting. That's on the pricing side. On the volume side, we will also have to understand one particular aspect, that in the H1 of this particular year, we had lesser number of auspicious days. So these were just about 17, 18 auspicious days, as against if I look at an average of H1 for the last 5-6 years, this number would have been somewhere in the range of 30 35. So it's almost half. The second half, we do have a significant number of auspicious days, plus the festive season kicks in along with the wedding season. So that's going to drive this 4 to 5% kind of a volumetric growth. As far as the unorganized segment is concerned, we need to understand that at some point in time, maybe 5-6 years ago, if I look at the unorganized was at almost 65-70% of the overall industry, and the organized was at about, say, 25-30%. Right now, what we understand is the organized will be somewhere close to 35 to 40%. And probably by the year 27-28, this ratio could be in the range of 50 to 50. 50% organized and 50% unorganized. So in a way, we can say that the organized are growing at the expense of the unorganized players across cities. So that's how it's been.
Okay, so organized are growing at the cost of unorganized players in the jewelry sector. Inventory losses, how does that pan out in this case? Because there have been some duty cuts and it impacts the inventory number as well.
So the inventory policy of most of the organized players is pretty well taken care of. They don't stock up too much of an inventory. So whatever I'm selling, I will typically procure the very next day. Now, what had happened during this particular duty cut, if I recollect, 24th of July is when this duty cut was announced. Suddenly, the prices, they crashed by almost 4,500-5,000 odd rupees per 10 grams. Now, that would have led to some bit of an inventory loss. But the fact that the ability of these players to pass on some of these to the end customer will somewhere curtail that inventory loss. It's not going to be a huge inventory loss. But yes, there's going to be 20 to 30 bips kind of a fall that will happen because of this sharp prices that came down so sharply over on the 24th of July. So that's how it's going to look like on the inventory loss side for the players.
So Rahul, when you spoke to all these 58 companies, what else did they tell you in terms of their expansion plans, in terms of whether this 4 to 5% volume growth, which we've not seen for the last so many years? Volumes have been flat, as you said, for the last many years. Is this something which is sustainable? What else did your conversations cover apart from this year and, the inventory picture?
So I think we have to also understand gold has continued to remain as a very steady asset class. And today, if I look at all the global trends or the global macros, there is some amount of market volatility that is prevailing. Plus, there is a lot of uncertainty that is around the geopolitical tensions that we are seeing. So from that aspect, gold definitely has come across as a very steady and a strong asset class. That also, in a way, if you look at the prices have moved from almost 31,000 rupees in 2018 to more than 74,000 in 2024. So you have to understand the prices have more than doubled in the last 5 to 6 years. But in spite of that, the volumes are now picking up over the last couple of years and expected to remain 4 to 5% on the upside over the next couple of years. So as an asset class, I think gold is doing really well. That's continuing to drive the demand. Coming to the capex, I think most of the players are pretty bullish on the market sentiments or the demand side scenario that we are seeing. On the CRISIL portfolio, if I have to specifically look at, we are talking of almost 12 to 15% kind of an asset base expansion, which will tantamount to somewhere around 180 to 200 stores for the CRISIL portfolio, which if I extrapolate for the industry, we can look at almost 600 to 700 stores being put up by the organized segment during this fiscal.
Okay. All right. Rahul, thank you so much for joining us with the analysis, a deep dive into what's happening with the jewelry sector and the duty cuts and the impact thereof on the organized and the unorganized space. Look forward to speaking to you yet again, once the festive season kicks in and we see more deeper demand trends coming in. Time for a short break now. We'll get you more on the markets on the other side. Stay tuned for that.
CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. Well, there is no dearth of any action in the IPO market. In fact, jewelry retailer PN Gadgil's 1100 crore rupee IPO has opened for subscription today. Mangalam is joining us with all the details, the risk factors and the valuations as well. Mangalam.
Well, you said there's no dearth of action, right? This is the fourth IPO of this week itself, and we're just 2 days into the week. It's an 1,100 crore IPO that opens today. It's a fresh issue of 850 crores, an OFS of 250 crores, and a price band at 456 to 480. At the upper end of the price band, the company is actually seeking a market cap a little over 6,500 odd crores itself. Before the IPO opened for subscription, the company's already raised about 330 crores from anchor investors at 480 rupees, and the kind of investors we have are a lot of these respected domestic mutual funds as well. What is it that the company does? It's an established jewelry brand in Maharashtra. Pune accounts for 65% of its sales itself. The second largest organized retail jewelry player in Maharashtra. And remember, for the overall industry, West accounts for 25% and Maharashtra itself is 46%. So if you're looking at a $70 billion jewelry industry, nearly 10 to 11 billion comes in from Maharashtra. The company is looking to raise these funds to set up 12 new stores and also prepay 300 crore of debt. On their books, as of last reported numbers, the debt was close to 396 crores. If you look at the total stores that they have currently, 36, that is much lower than all the other peers, including the likes of Titan, which is 490, Kalyan, 277. A more nearer competitor would be Thangamile, which is at 59 as well. But the company intends to open 60 stores or get to 60 stores by FY27. In FY24, they did revenues of close to 6,100 crores with margins at 4.4%, much lower than the peers, but they've guided for improvement in margins as well. And for all of this, they're seeking a valuation of 42 times FY24 price to earnings. And if you compare it to all the others, 1 year forward, they're trading at a premium. So the company, because of its lower margin and because of its regional, presence and a smaller size as well, is asking for a discount to the listed peers, as you can see on your screen itself. We spoke with the management this morning. They gave us key targets for FY27. They're targeting 10,000 crore revenue, double-digit margins, 15% share of revenue coming in from studded as against 10% right now. And they are from 36 right now, targeting to be at 60 stores by FY27 as well, with an aspirational target of 100 to 120 stores over the next 6 years. So those are a bunch of factors that we'll keep an eye out on. If this company goes ahead and does a net profit of close to 250 crores in 1 year forward and 300 crores 2 years forward, then it would be attractively priced as against peers right now.
Thank you. That's a sharp margin expansion that the company is guiding for double-digit margins by FY27 versus 4.4% last year. Thank you, Mangalam, for putting that IPO in perspective. With that, it's a wrap on trading hour. Stay tuned. Halftime report is up next.
मैच में एक और बहुत ही बढ़िया एक खूबसूरत चीज़ है कि आपके मैच में एक और आर्चर है जिनकी बहुत बात हो रही है, शीतल देवी। वो काफ़ी चीयर करती हुई नजर आई। सिर्फ 17 साल की है वो। उनके परफॉर्मेंस के बारे में क्या कहना चाहेंगे? कैसा माहौल रहता है पैरालंपिक्स विलेज में, पेरिस विलेज में?
जी बिल्कुल, टीम सेपरेट अच्छी है और शीतल तो सबसे यंग आर्चर है इस कंटिजेंट की भी, हमारी टीम में भी। तो हम आपस में जब भी हम कंपटीशन में होते थे, हम 2 महीने पहले भी चेक रिपब्लिक में कंपटीशन में थे, तो मैं उस टाइम भी वहां पे 3 मेडल जीता था। तो हम आपस में, शीतल सबसे छोटी है तो हंसी मजाक करते थे, तो वो कहती थी भैया मैं आपको चीयर कर रही हूँ, आप जरूर मेडल जीतोगे। तो वही चीज, क्योंकि उसने मेडल जीत लिया था राकेश और शीतल ने, तो वो मेरे साथ वहां पे थी पूरी टीम के साथ, और सबसे छोटी बच्ची है तो देख के और भी ज्यादा खुशी होती थी कि वो चीयर कर रही है और वो चीजें काम भी आई। तो अच्छी बात है, ये टीम स्पिरिट है कि आर्चर दूसरे को सपोर्ट करने के लिए ग्राउंड पे पहुंचते हैं। और क्योंकि
Frontline indices trade little change, but mid-cap see a significant bounce after yesterday's fall. IT, utilities and healthcare prominent gainers, even as metals and energy drag.
After Ola's promising debut on the bourses, Hero MotoCorp-backed EV maker Ather Energy has filed a draft document with the SEBI to float an IPO. It is planning to raise 3,100 crore rupees via a fresh issue of shares along with an OFS.
The US House of Representatives has passed the Biosecure Act, which seeks to curb biotech imports from China over an 8-year period. The move presents an opportunity for Indian pharma to fill the gap. Stocks of likely beneficiaries rally.
The GST Council has cut tax rates on cancer drugs, rationalized rates on snacks to 12%, exempted foreign airlines from GST levy on import of services, and clarifies that PLC in real estate will qualify as construction services. However, proposal on exempting insurance and matter of compensation cess have been referred to panels for closer examination. Good afternoon. You're watching us here on Halftime Report. I'm Mangla Malu. With me, as always, Ekta Batra. Looking extremely good for the markets. We started a little flattish, then dilly-dallied a little bit from, the red and the green side of the screen. But now, as we speak, the markets picked up pace. Much like yesterday in the second half, where we saw a big recovery from the lows, the recovery has come today as well, but it's come much earlier than what it was yesterday. Once the market crossed that 25,000 mark on the Nifty, we've seen a sharp wave of an up move, and this was led, of course, by a lot of the other stocks than banks. Banks are relative underperformers in today's trading session after outperforming yesterday, and what's doing extremely well and taking your breath away is the mid-cap end of things. The mid-cap index was an underperformer yesterday. Today we have 1,800 stocks advancing for just about 600 stocks which are declining. Ekta, looks good.
Hi, Manglam. Yes, absolutely. So exactly what we saw yesterday is now coming undone. Like you mentioned, we have the mid-cap index, which is in the green and powering ahead with a gain of around 1%. Separately, we have the advanced decline ratio, which is in positive terrain at this point in time. So 2:1 is where it stands on the Bombay Stock Exchange. The other index, which I just want to pull up, is the Nifty FMCG index, because that continues to gain. It was sitting at a record high in yesterday's trading session, so it's building in terms of gains today as well. So do watch out for that. The other sector which is standing out is the entire pharmaceutical/CDMO space. Stocks such as Divi's Labs, Loris, Piramal, all of these stocks are sitting at the best levels that we've seen in 52 weeks or in the past couple of months. So all of them are sitting at fresh highs in today's trading session on the back of that Biosecure Act. But going forward, one of the key things that we will be watching for will be the US inflation data, which comes out on the 11th of September. We'll be reacting to it on the 12th. So that'll be important to watch out for, considering that the US CPI data for the month of August is probably expected to soften to 2.6% versus 2.9% in the month of July. And that'll be an important data point ahead of the September 17th to 18th FOMC meet. But nonetheless, that's on the macros. Let's move forward and talk about specific stocks then. GMR Airports is trading in the green after the company has acquired additional 10% stake in the Delhi International Airport. Vivek is here to tell us more.
Well, that's right. So GMR Airports is in focus. Now, remember, like you mentioned, the company went ahead and informed the exchanges yesterday that the company is going to go ahead and acquire an additional 10% stake in Delhi International Airport. Now, this particular stake acquisition will be from Fraport AG Frankfurt Airport Services, which was the minority stakeholder holding 10%. The stake, at which GMR will be buying, will be valued at close to $126 million, thereby valuing Delhi International Airport Limited at an equity value of close to $1.26 billion. Now remember, post-acquisition, GMR shareholding will rise to 74%, with the remainder 26% being held by Airports Authority of India. Jefferies has written on this particular transaction. Number one, they've done an analysis of the valuations. Like we mentioned, the equity valuation at $1.26 billion, enterprise value of close to $2.9 billion, and they believe the deal has been done at valuations as per the estimate of 17 times FY25 EV to EBITDA and 7 times FY26 EV to EBITDA, which they believe is quite reasonable and fair, similar to the stake purchase that they had done in the Hyderabad International Airport as well. Remember, over 50% of the SOTP valuation, or the valuation for GMR Airports, come from this particular airport itself, which is Delhi International Airport. So they have a target price of 106 rupees a share, and they believe that this is an attractively priced asset purchase as far as GMR Airports is concerned.
All right, attractively priced asset purchase, and that reflects in the stock price up around 1% right now after having seen a big move already. But a bunch of stocks which are buzzing around right now. You have United Breweries, which has recovered from the lows, though mildly off the high, still sitting with a mild gain itself. Jubilant Food has been one of the stocks of the last couple of months. It's seen a big rally of nearly 55% from its 52-week low, currently sitting with a gain of about 2.5% as well. And Coforge is the one which is up around 4% as we speak. This, as a brokerage note coming in from Motilal Oswal, has upgraded the stock to a buy rating and a target price a little over 8,000 rupees as well. Rima joins in with more on that one. Rima.
In fact, Motilal Oswal, on the entire IT sector, they're saying that the IT services sector could be on the cusp of a recovery after enduring a prolonged period of discretionary spending cuts. And on Coforge, as you said, there is an upgrade to a buy with a target price of 8,100. Now, here are the key reasons why Motilal Oswal is incrementally more bullish. One, their exposure to the BFSI sector should help participate in the upcycle post the interest rate cuts in the US. Second, the strong order book, the wins, etc., position the company well for near-term recovery and near-term growth numbers. Third, there could be upside to the Cigniti acquisition that the company did, as they believe Coforge will be able to extract cost synergies earlier than what they were anticipating. So if you look at the margin profile for Coforge, according to Motilal Oswal, this year the company could do EBITDA margins of 13.4%, and that could rise to 15% by FY27. So they're valuing Coforge at 38 times versus 30 times earlier. But there is one risk that Motilal Oswal highlights. They're saying that Cigniti, the company that they acquired recently, their testing business could get disrupted by generative AI, and that, according to Motilal Oswal, is a medium to long-term threat. And also remember that the stock on a year-to-date basis has underperformed the Nifty IT with a gain of close to about 8%. So that also explains a little bit of that catch-up rally taking place. Back to you.
Okay, all right. Thanks very much for that, Rima. So that's the update coming in on Coforge. We'll take a short break, but we'll get you a lot more on the markets and a lot more on specific stocks on the other side. Stay tuned.
अचीवमेंट इतनी ज्यादा है कि इस डिसेबिलिटी के बावजूद वो वर्ल्ड में अपना नाम बनाई है, तो डेफिनेटली उनकी जो मोटिवेशन है वो काम आती है एज ए टीममेट भी हमारी टीम में।
không kịp mà khênh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc xe máy của bọn cô là trong nhà khi đang ngập nước, mà nước bây giờ nó là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro...
Welcome back. Holding well for the Nifty and the mid-cap index doing a lot better, though there are flashes which will come at the bottom of your screen from the SEBI, and we'll keep an eye out on that developments as they are there. This is the Congress spokesperson saying that the SEBI chief is guilty of willful concealment. We'll obviously get a lot more comments and a lot more nuanced take on all these factors as they play out as well. But this is what a comment has come in from the Congress spokesperson. But let's move to the US Congress. The US House of Representatives on Monday has passed the Biosecure Act. And how will this impact the pharmaceutical companies in India? Of course, initial moves are suggesting this would be a positive because we get benefited from it. To what extent and what stocks? Let's go across to Ekta.
Well, yes, important news because the US House of Representatives has passed the much discussed Biosecure Act, which now heads to the Senate for a vote. Now, the act seeks to reduce American dependence on Chinese biotech companies over the next 8 years and has specifically mentioned 5 Chinese firms, including the likes of WuXi Biologics. Now, pharmaceutical companies doing business with Chinese biotech companies have already been exploring ways to diversify their supplier base. Indian companies such as Divi's Labs, Syngene, Laurus Labs, Piramal Pharma and Newlin have become focal points of possible beneficiaries. Mostly all the companies have already witnessed increased exploratory discussions but are still to see conversion to business. However, they do expect possible business over the longer term and expect it to start with smaller projects first. Now, Laurus Labs, for example, anticipates a gradual shift while Piramal Pharma has noted an uptick in discussions. Syngene and Divi's Labs seem to be at the forefront of the opportunities. Syngene has said they are participating in pilot projects related to quote-unquote the China switch and seen a 50% rise in requests for proposals in Q1. Divi's Labs say that they are seeing opportunities in phase 2 and phase 3 molecules and the possibility of being a second source in already commercialized drugs on the custom synthesis side. However, it would take 3 to 4 years for everything to go through. Lastly, challenges for Indian companies include lagging behind in technology, experience, trust and competition from non-Chinese and non-Indian companies. So while positive, one has to see the opportunities materialize on a more tangible basis. Well, to talk more about this and the entire pharmaceutical sector, we have Chirag Dagli, who is the fund manager of DSP Healthcare, joining in to discuss the entire space. Chirag, hi, welcome to the show. Well, you've joined us on a day where, you know, all these CDMO stocks are on fire and possible beneficiaries of the US Biosecure Act. So give us a sense in terms of how beneficial do you think the US Biosecure Act would be for Indian CDMOs such as, say, the Devises and the Syngenes and the Laurises of the world?
So what has really happened is that, you know, essentially all the big pharma companies are now going to look at least China plus one, having one vendor beyond China. China, as you are aware, is a very large part of the overall ecosystem in pharma. And what's going to happen, and nothing's happening immediately, like you said, nothing happens over the next 12 months. But as you go forward, you know, 1 year, 2 years, 3 years down the line, you see a lot more companies doing, you know, visits to India, trying to cultivate more vendors in India, trying to de-risk away from China. So as we look at the next 3 years, I think nothing happens in year one. Year two, you start to see some bit of, you know, revenues come through, and year three, things really start to pick up. When you think of the opportunity for Indian pharma, clearly Indian pharmaceutical companies have been very strong in custom synthesis capabilities historically. It's evident in the generic presence that we have, and it's now increasingly going to be visible in the custom synthesis business for patented molecules as well.
All right. So, Chirag, you know, you said that obviously nothing happens in the next 12 months, but year three is where the opportunity actually starts to show some sort of fruition on ground itself. Would you have any estimate of the size of the opportunity basis, what the difference between, say, China's market size is right now versus what India's is, and over the next 3 years, say, the kind of capacities that have been announced already, what could a realistic size of the benefit be, according to you, for the entire industry? And then we drill it down to who benefits in terms of specific sectors.
So custom synthesis manufacturing globally is between 25 and $30 billion. This is basically manufacturing of APIs for innovator pharma companies. So this is anywhere between 25 and $30 billion. The largest player in India is about a $400 to $500 million. So that's, you know, that's the magnitude of opportunity or the gap that we have. So it's a very, very large opportunity, clearly. But it's also a very fragmented industry. And over time, of course, this will get a lot more consolidated, but this process is going to be very gradual. So the opportunity today is almost as big as $25, $30 billion. And the largest out of India is $500 billion.
Okay. But, you know, Chirag, what are the challenges to scaling up and to compete with the Samsungs of the world, you know, coming in from South Korea, as well as the companies which are vying for business from India, from Europe, as well as the US? Do you think that India has the capability, the trust, the technology, the R&D, and the people power to compete on a global scale to get a formidable chunk of the business?
Understood. Look, I think Samsungs of the world play in the biologics manufacturing. It's a little different than the chemical manufacturing, which India has been doing for a very, very long time. In the chemical manufacturing process, clearly India has substantial strengths and expect us to do extremely well in that chemical custom synthesis manufacturing piece. On biologics, I think still early days for Indian pharma companies, and lots to learn for us, and big steps being taken by many companies. But I think still early to say that in biotech, you know, India can be substantially bigger than some of the global players. But in the chemical
exactly where
clearly where.
Correct. Chemical manufacturing, we know that we have that prowess, but that's exactly what I wanted to drill down on. Biological manufacturing, the biotech companies, and do you think we can compete with them? And is that an opportunity for India when it comes to outsourcing?
So on biologics, still early days, like I said, still early days. A lot of work needs to happen. the manufacturing technology itself in biologics manufacturing is also going through a little bit of a upgrade. So 10-15 years back, large bioreactors were the order of the day, and which is where the Koreans took a big leap. Now increasingly a lot of the biotech manufacturing is happening on the disposable reactors, where smaller sizes can also smaller sized batches can also be equally competitive. So a little bit of still early days, I would say, for Indians to compete in the biologics manufacturing, biotech manufacturing piece.
All right. So if we had to drill it down, who would be the immediate beneficiaries and who would be the biggest beneficiaries?
Tough to take names, but the list is out there. Most of the chemical manufacturing, most of the API, manufacturing for the innovator companies will stand to benefit because look, I think there's going to be a lot of work that's going to come. Whether some of them get it or not, these are all chances. But we are already seeing companies talk about 2 times jump in the inquiries and the kind of RFPs that they're seeing.
Okay, so Chirag, just before we let you go, when you are making this portfolio now, say you have 100 rupees to spend and allocate within the entire pharmaceutical space, how would you allocate that money? Would it now go towards CDMOs in India? Would it go towards your pure play generics? Would it go towards the Indian domestic manufacturers? How exactly would you spread it out?
So I'd say have all of them. Each of them have their own story to tell. Clearly today, CDMO players are flavor of the season. In some time, maybe Indian generics will be flavor of the season. A couple of years back, US generics were, or maybe 12 months back, US generics were flavor of the season. Portfolio should never be skewed towards one particular, aspect. But we see opportunity in each of the sub-segments within.
But which one do you see the biggest opportunity?
All of them is a great answer, but resources aren't unlimited. So say, for instance, one had 100, how would you allocate it among all the sectors that Ekta just spoke about in terms of percentages?
So I'd say probably about 10-15% in CDMO, which is, today the flavor of the season. About 25% in India pharma, formulation manufacturing. About 25% in export manufacturing, export formulations manufacturing, and then about 5-10% in generic APIs, and then diagnostics and hospitals.
Okay, all right. And has that risen, that 10 to 15% allocation to CDMOs, has it risen after the Biosecure Act, or was it always 10 to 15%?
From 5 to 10 to, let's say, 10 to 15 is how we should, broadly think about.
Okay, so that's where you see the incremental opportunity. All right, Chirag, it's been a pleasure talking to you, and quite an opportune day to join in and talk to us as well on the pharmaceutical space. Thanks very much for joining in and speaking with us. So that's the word coming in from Chirag Dhagli. Looks at the pharmaceutical space very closely. As of now, for the markets, there's a bit of a pickup which has taken place for the Nifty, so up around 0.4%. We'll take a break, but up next, we'll get technicals. Sachatan and Utekar of Trade Bulls will join in.
Chart Wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. You're watching us here on Halftime Report. Good time to check a bunch of stocks which are buzzing around right now. We have Tata Consumer, which has now moved to the high point of trade. A lot of these FMCG stocks doing extremely well. Titan has been one of the big movers over the last month or so, ever since the valuation gap between it and all the others narrowed after the big outperformance that we saw in the second-rung jewelry companies, the likes of Kalyan Jewellers, Senco, and Thangamayil as well. So maybe pull up a one-year comparative chart of Titan and Kalyan Jewellers, you would see the price difference that took place. So Kalyan Jewellers currently under pressure for the last 1 year. It has seen a rise of over 200%, and Kalyan and Titan put together would tell you the sort of differential in terms of a price move, and as a result of which the valuation of the two as well. So maybe now the street backing the old horse as against the new one. Let's talk about Hero MotoCorp. Now, after the success of Ola Electric's IPO, they've gone ahead and looked at perhaps unlocking value in their EV maker business, which is Ather Energy. They've filed a draft document with the SEBI to float an IPO. It's planning to raise about 3,100 crore rupees via fresh issue. Winnie joins in with more details. Winnie.
Good afternoon. So yes, talking about Ather Energy, which is backed by Hero MotoCorp, we're seeing that they have filed a DRHP 3,100 crores will what they will be raising via a fresh issue, and there's an OFS also that will be happening. 2.2 crore shares is what they will be. The promoters, there are some promoters who will be selling share as well. So yes, we're keeping an eye on that. The seller is Tarun Mehta from the promoters, as well as Swapnil Jain on the promoter side, who will be selling shares. Other than that, we have names like Kalyan Iridium Investment, Tiger Global, as well as 3 States Ventures, which are some of the other marquee names that will be selling from the Ather Energy in the Ather Energy OFS as well. Now, mainly where will these proceeds be used? That's the 3,100 crores that they are looking to raise via fresh issue. So yes, that is going to be for mainly an e-two-wheeler vehicle factory that is going to be focusing mainly in the state of Maharashtra. 927 crores is what the amount will be spent for this. Other than that, we'll see a repayment of debt that will be making of around 378 crores. Investment is going to be in research and development of 750 crores. So clear focus that they want to make in terms of expanding their facility as well as research and development is the key focus area for the company. Let's not forget, Ola Electric managed to see a very good bumper listing as well. So it seems like, that value unlocking is something that will turn out for Hero MotoCorp. Financials, yes, loss continues to see a further expansion. The losses are increasing for the company. And when you look at it in terms of the loss for Ather Energy, the loss is at around 1,059 crores, I beg your pardon, in FY24 versus 864 crore loss in FY23. Revenues have remained quite flattish on a year-on-year basis, FY24 versus FY23. While market share, yes, a slight bit of an increase is what we're seeing. So that's interesting to watch out for there. Versus peers like Ola Electric, yes, still the revenue is much lower. So growth expansion possibility is quite high for Ather Energy as well, given that the focus for the country is also moving more towards EV and e-two-wheeler vehicles is something that we're focusing on.
All right, Vinny, thanks a lot for that. So that's about Ather Energy and a possible value unlocking for Hero Moto on that. Just keep an eye on the market though. 100-point bump up is what we're seeing on the Nifty. Perfect time to get you all the updates from the F&O space as it plays out at midday. Nifty, Nifty Bank and the mid-cap index, all 3 indices come up for you. The Nifty is at a fresh high of the day, 25,050, sitting above those levels. A lot of call writers at 25,000 may unwind their positions as we stay above that 25,000 mark for an extended period of time. So that's something that remains to be seen. What also remains to be seen is whether the Nifty Bank comes back to the party or not. It was outperforming yesterday, a mild underperformer in today's trading session. What's definitely come to the party is the mid-cap index. After an underperformance yesterday and a late recovery, we are seeing it, do well right from the word go. And those lines extremely parallel and the green much above the red one. 1,800 stocks advancing for just about 600 stocks which are declining. The Nifty, after having conquered the 20-day moving average yesterday and moved much higher, continues to do well. And now for the very near term, the 24,850 mark, which is the 20-day moving average, remains an important support to watch out for. It is the Nifty Bank which needs to cross the 50-day moving average, because yesterday it did cross the 20-day moving average, 50,910. Where is it right now? 51,200 thereabouts. So 200 points from here is a bit of a resistance for the Nifty Bank. So if it does cross that, then maybe we will see further short covering on that index as well. All of that would mean that the financial services index would be in focus, because 23,700 call and 23,500 put for the financial services index, which is currently at around 23,650, plays out its weekly options expiry today. So that's the range that the street is playing for. For the Nifty, like I pointed out, 25,000, which remained a psychological resistance, has seen some call writing at a premium of 100 rupees. So if it stays above that 25,050 to 25,100 mark, maybe these call writers will feel the jitters and cover their positions. And we are also seeing some short covering in the 24,900 call already. So that's a good sign. 24,900 put writers, on the other hand, have seen some writing. And for a premium of 50 rupees, it coincides with the support that we are expecting at that 24,850 mark, which is the 20-day moving average. A lot of long positions added on pharmaceutical names. Ekta has been talking about the Biosecure Act. Look at Divi's Labs, IPCA, a lot of long positions out there. And GNFC is one stock that I'll keep an eye out on, may perhaps enter F&O ban, given the open interest activity in it hovering around that 95% mark of market-wide position limits.
Okay, all right. So that's the update on the F&O space. Thanks, Mangalam, for that. We have Sachidanand Utikar joining in from Trade Bulls to tell us what he's strategizing today. Sachidanand, welcome to the show. Well, it's definitely a very lively market and a lot of sectors to choose from in terms of, what one wants to probably look at. But what would your approach be? Would you look at the frontliners, which is the Nifty, or would you look at the mid-caps, which are bouncing back?
Good afternoon, Ekta. Good afternoon, Mangalam. Clearly, I think the Nifty is in strong hands now. If you look at the overall setup. We have the Nifty Bank and Nifty IT both contributing from the front. So far, yesterday we saw the Nifty reconquering the support at around 24,840, which is its 20-day exponential moving average support. And today it is challenging, for a close above its 5-day exponential moving average, which is placed somewhere close to around 25,030. So we are seeing some phases or final phases of consolidation before this particular trend breaks out on the higher side. We are optimistic and we are believing that the 24,800 support may not be breached, and we may see the Nifty again scaling back towards that 25,300, 350 kind of a zone. So we are optimistic when it comes to Nifty, especially when we have both the Nifty IT and Nifty Bank again leading from the front. When it comes to Nifty Bank, yesterday we saw a very strong piercing line formation on the daily chart. The range at around 51,000 on the lower side was defended well. Even in today's trading session, we are seeing a very strong hold of this particular support at 51,000. And on the higher side, the headroom remains open right up to 51,800 for this particular week. So I think the major contribution has already been started from Nifty Bank yesterday, and we see that this particular flow continues, and that's why we believe that the equation is right to deploy some aggressive long positions in both the indices, keeping a flow somewhere close to around 51,120 on a closing basis. There are good opportunities presented by Nifty Bank for a positional target of around 51,840.
Okay, and specific stocks?
Well, on the stocks front, I think Infosys from the Nifty IT pack is showing very strong signs of short covering rally. The stock has already started displaying a very strong pullback on its 60-minute scale. We have its RSI now trending above 50. And the way the data is shaped up, we yesterday saw again the level of around 1900 getting defended well. So this is where we believe that the momentum that has been seen in today's session may continue towards 1965. Eventually, we see Infosys scaling towards that 2000 mark, and that's why we are recommending building long positions here in Infosys futures, keeping a stop loss at 1910 on a closing basis. The immediate target is placed at around 1965, but eventually we see it scaling towards 2000. The second stock on our radar has been IndusInd Bank. Now, the stock has already displayed a strong recovery last few weeks. If you look at the overall structure, the structure on the weekly chart has been improving. There's a declining wedge formation which has matured. The stock is again scaling towards its 200-day exponential moving average. We are expecting that there could be a strong breakout in this particular counter again, which may lead the stock towards 1530 eventually. And that's why we are recommending building long positions in IndusInd Bank futures as well, keeping a stop loss at 1410.
All right, take that point, Sachi. Thank you so much for joining in. And as you speak, the ticker team tells us that a bunch of these Adani Group stocks are seeing sharp spikes in trade, sharply off lows for Adani Power, Adani Enterprises, Adani Adani Energy Solutions as well. All of them have moved towards the higher end of today's trading range, some at the high point of trade itself. We'll keep an eye out on all these stocks. Come back on the other side. We'll talk about markets and a lot of these other stocks which are moving around as well. Stay tuned.
We've been underweight banks for a very long time, almost 2 years, but now we are gradually closing underweight positions because we think probably we are in the last leg of cyclical slowdown in the loan growth. Probably we see loan growth picking up from next year onwards, and probably once we have few rate cuts in place, we'll see some initial margin pressures on banks for the next few quarters, but we don't see that as significant. And the fact remains that in a market which has moved pretty sharply over the last 18 months, banks is now one segment of the market where valuations are far more reasonable compared to the overall market or the broader market. And more importantly, asset quality for the banking sector seems fairly benign. Large banks are in a very sweet spot in the sense credit cost is extremely low or very benign, and growth is reasonable. And on top of that, as I said, valuations are pretty reasonable. So sum total of all of it, we are turning positive on banks, as you said, some of the larger private sector banks and including SBI as well. And probably But from our point of view, we as investors take a view which is slightly more medium term over the next few years. And from that point of view, banks certainly look much more attractive than some of the other pockets of the market at this point of time.
Welcome back. It's a big surge that we've seen on the Nifty. 100 points has now quickly turned into 133 points. The Nifty is very close to that 25,070 mark, closing in towards that 25,100 mark as well. We've been talking about jewelry stocks and how they've been buzzing. It's also an IPO that has opened today. PN Gadgil's 1100 crore rupee IPO has opened for subscription today. Of the 1100 crores, of course, 850 crores will be a fresh issue, 250 crore will be an offer for sale. At the upper end of the issue price, the company is actually seeking a market cap of 6,500 crore thereabouts, at the higher end of 480 rupees per share as well. Now, this is a Maharashtra-based jewelry company, of which 2/3 of revenue come in just from Pune. They have 36 stores, and at a previous year's revenue of 6,100 crores and a net profit of 150 crores, they're much lower than all the other listed peers as well. So if you look at, Titan, which has 490 stores, Senco, about 165 stores, and Thangamayil itself, which has around 59 stores, compares with PN Gadgil at 36 stores itself. So for its numbers and growth prospects, the company is actually offered at a discount to its peers. So on a trailing basis, they are seeking a valuation of 42 times price to earnings, whereas all the other players on a much higher base are trading at 60 times, 50 times and 29 times 1 year forward earnings. So if the company can grow a lot faster, then maybe the valuations seem a lot attractive. How faster can they grow? Well, we spoke with the management this morning and they did give us FY27 targets. From 6,000 crores last year, they're targeting 10,000 crores in terms of revenue, with 4.4% margins turning into double digit. Also 10% revenue from studded share turns into 15%. That will be aiding margins. And by FY27, they will have 60 stores with a target of 100 to 120 stores over the next 6 years. So the management has spoken about the targets. If they execute it, maybe the street likes it at these valuations. Take a short break, come back, get you more on the markets and a lot of buzzing stocks.
मैच में एक और बहुत ही बढ़िया एक खूबसूरत चीज़ है कि आपके मैच में एक और आर्चर है जिनकी बहुत बात हो रही है, शीतल देवी। वो काफ़ी चीयर करती हुई नजर आई।
Welcome back. Well, the markets are definitely building in terms of gains. So we have the Nifty, which is at the high point of the day. It's up around 130 odd points. And we have the Bank Nifty, which is up a cool 135 odd points. But the real star of today is the mid-cap index, which is powering ahead with a good advance decline ratio. Just watch out for specific stocks such as Z Entertainment, which is up around 6 odd %. We have Paytm, which is up around 5 odd %. And a couple of other stocks such as IREDA, which is making a comeback. So that stock is up around 4.5 odd % at this point. So lively market, most of it is in the green as we speak. We need to take a short break on that note, but we'll be back with our commodities segment. Stay tuned.
वो उनके परफॉर्मेंस के बारे में क्या कहना चाहेंगे? कैसा माहौल रहता है पैरालंपिक्स विलेज में, पेरिस विलेज में?
जी बिल्कुल, टीम सेपरेट अच्छी है और शीतल तो सबसे यंग आर्चर है इस कंटिजेंट की भी, हमारी टीम में भी। तो हम आपस में जब भी हम कंपटीशन में होते थे, हम 2 महीने पहले भी चेक रिपब्लिक में कंपटीशन में थे, तो मैं उस टाइम भी वहां पे 3 मेडल जीता था। तो हम आपस में, शीतल सबसे छोटी है तो हंसी मजाक करते थे, तो वो कहती थी भैया मैं आपको चीयर कर रही हूँ, आप जरूर मेडल जीतोगे। तो वही चीज, क्योंकि उसने मेडल जीत लिया था राकेश और शीतल ने, तो वो मेरे साथ वहां पे थी पूरी टीम के साथ, और सबसे छोटी बच्ची है तो देख के और ज्यादा खुशी होती थी कि वो चीयर कर रही है और वो चीजें काम भी आई। तो अच्छी बात है, ये टीम स्पिरिट है कि आर्चर दूसरे को सपोर्ट करने के लिए ग्राउंड पे पहुंचते हैं, और क्योंकि वो उनकी अचीवमेंट इतनी ज्यादा है कि इस डिसेबिलिटी के बावजूद वो वर्ल्ड में अपना नाम बनाई है, तो डेफिनेटली उनकी जो मोटिवेशन है वो काम आती है एज ए टीममेट भी हमारी टीम।
khênh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc xe máy của bọn cô là trong nhà khi đang ngập nước, mà nước bây giờ nó là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
Welcome back, and joining us on the show now is Mr. Shashi Singh. He is President, All India Rubber Industries Association. Mr. Singh, hi, thank you so much for joining us. To the prices first, and when you look at the global markets, we've seen some support come back because of adverse weather in various growing areas. But for the Indian markets, after those highs that we saw in the first week of September, or the last month for that matter, do not seem to be sustaining.
Yeah, actually, price little bit come down of somewhere around 237 from 240 onwards. I mean, there are certain slowdown in automotive industries. Their stock is quite high. That's why the price will slow down. But it will not go much more than 5 to 7% max.
So you're anticipating prices to decline 5 to 7% even from these current levels?
Yeah.
And what kind of
effect will be seen on October onwards? Yeah.
Okay. That is because the tapping will begin and you will see higher supplies coming into the market.
Correct.
Okay. And you also mentioned about how the automotive demand really seems to be slowing down, and that is because they have enough and more stocks right now. So what is the kind of buying expectation that you have for the last quarter of this year now?
The price, I mean, demand is high, so buying expectation will not be go down, but because they have stock in their inventory is up, so that's why the price reduction seems to be there. Yeah.
Mr. Singh, we usually see that the automotive demand does surge around Diwali and festivals. That is where people start buying as well. So will that demand start to see now? I mean, will that demand start to show now in sense of,
Yes, of course. In from April 2023 to March 2024, it's 28 million altogether, two-wheeler, four-wheeler, passenger cars. Vehicle GDP, automotive GDP is 7.2% in Indian GDP. So demand is definitely going to high.
And when it comes to Indian markets itself, I do understand that we work in a deficit. We have to depend on imports. So with the international prices slightly higher than what India is doing right now, what kind of availability numbers and import numbers are now you working with?
Import is still there because of non-availability. There is a problem. Many companies, tire companies, requesting government to give some other port also to import duty-free against the export. So this demand also there. So yes, there is a dependency on import. Is you can't reduce that.
Absolutely. So what is the percentage that India rubber industry see in sense of imports, and what kind of availability are we working with? What kind of Indian production numbers are you working with?
So India current is 8,42,000 ton and requirement is 18,47,000 ton. So 5.5, 5.6 lakhs tons still deficit. So this is the requirement fulfilled by import only.
And with the international markets running slightly higher, do you think the imports could be slightly expensive this time around?
Yes, and there is no choice because you have to import to run the show.
Oh, absolutely. Mr. Singh, when it comes to natural rubber and synthetic rubber, what is the consumption market share as of now?
See, if you consider tire industries, then the number is more on natural rubber. If you go for a non-tire industries, then it will be somewhere around 50%, like 3 lakh tons of natural rubber and 3 lakh tons of synthetic rubber consumed by non-tire industries.
And you also said that 5 to 7% of a decline in rubber prices is what we can anticipate in the next couple of months. Are you also looking at any support numbers by the end of this year, or you think it's going to be here or weaker rubber prices going forward?
No, not going to less than 200 for any coming, So it will be more than 200 rupees only.
All right. All right. So for rubber producers, that isn't really a very good news. But for the rubber consumers, definitely, where you are looking at rubber prices constantly declining from here on as well. Mr. Singh, thank you so much for joining us and throwing light on all of those numbers. And with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action ahead.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions. On the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as
Frontline indices trade little changed, but mid-caps see a significant bounce after yesterday's fall. IT, utilities and healthcare are prominent gainers, even as metals and energy stocks drag. After Ola Electric's promising debut on the bourses, Hero MotoCorp-backed EV maker Ather Energy has filed a draft document with SEBI to float an IPO. It is planning to raise 3,100 crore rupees through a fresh issue of shares, along with an offer for sale. The US House of Representatives has passed the Biosecure Act, which seeks to curb biotech imports from China by 2032. The move presents an opportunity for Indian pharma to fill the gap of stocks likely to beneficiaries rally. The GST Council has cut tax rates on cancer drugs, rationalizes rates on snacks to 12%, exempts foreign airlines from GST levy on import of services, and clarifies that PLC in real estate will qualify as construction services. However, proposals on exempting insurance and matter of compensation cess have been referred to panels for closer examination. And US presidential candidates Donald Trump and Kamala Harris will face off in Kamala's first and the election campaign's second presidential debate later tonight. The debate, barely 2 months ahead of the presidential election, comes as the two contenders are neck and neck in the race to be the next US president. Good afternoon. You're watching Business Lunch here on CNBC-TV18 in the Mumbai News Center. I am Hormus Fatakia. Let's first take a look at how the markets are faring this afternoon. And it's been a pretty swift recovery for the benchmark indices in today's session. We opened higher, but the recovery got sold off. And then you've seen this move from the lows of the day. The Nifty now trading at the day's high, nearing the mark of 25,100 now, almost 200 points off the lows of the day. Remember, the recovery in yesterday's session was also of a similar quantum of around 180 to 200 points. So the Nifty now nearing very key levels of 25,100. Keep an eye out on the Nifty Bank as well, because today is the financial services expiry. So the last couple of hours for the Nifty Bank will be very crucial to watch out for. Almost all sectoral indices trading in the green in today's session. The gains coming from IT, gains coming from pharma, metals. The IT stocks are having a very good day in today's trading session. At the highest point of the day now, 2% higher is the Nifty IT index. The Nifty Pharma also trading with gains of over 1%, as is the metals index trading with gains of over 1%. So good going for the markets into some very crucial last couple of hours of the trading session. But we focus on the pharma space at the start of the show, because the US House of Representatives on Monday passed the Biosecure Act. Now, how will this impact the pharma companies in India? Ekta is joining in with an explainer.
Well, thanks for that. The US House of Representatives has passed the much discussed Biosecure Act, which now heads to the Senate for a vote. The act seeks to reduce American dependence on Chinese biotech companies over the next 8 years, and has specifically mentioned 5 Chinese firms, including the likes of Wuxi Biologics. Now, pharmaceutical companies doing business with Chinese biotech companies have already been exploring ways to diversify their supplier base. Indian companies such as Divi's Labs, Syngene, Laurus Labs, Piramal Pharma and Newland have become focal points of possible beneficiaries. Mostly all the companies have already witnessed increased exploratory discussions, but are still to see conversion to business. However, they do expect possible business over the longer term, and expect it to possibly start with smaller projects first. Laurus Labs, for example, anticipates a gradual shift, while Piramal Pharma has noted an uptick in discussions. Syngene and Divi's Labs seem to be at the forefront of the opportunity. Syngene has said that they are participating in pilot projects related to the China switch and have seen a 50% rise in requests for proposals in the quarter gone by. Divi's Labs says that they are seeing opportunities in phase 2 and phase 3 and the possibility of being a second source in already commercialized drugs on the custom synthesis side. However, would take 3 to 4 years for everything to go through. Lastly, challenges for Indian companies include lagging behind in technology, experience, trust and competition from non-Chinese, non-Indian companies. So while positive, one has to see the opportunities materialize on a more tangible basis.
Interesting, Ekta. Thanks a lot for that. Showing up in the stock prices on most of these companies. Laurus Labs trading at the highest point of the day. Good gains also coming in for stocks like Syngene, as well as some other companies as well. There you can see there, Divi's Labs 4% higher. Piramal Pharma also trading with gains of close to 3.5%, as is Laurus Labs, now above the mark of 500. From pharma, we move to auto, and Hero MotoCorp backed EV maker Ather Energy has filed a draft document with SEBI to float an IPO, and it is planning to raise around 3,100 crores through a fresh issue of shares. Vinny joins us with more details. Vinny, tell us more.
Good afternoon, and yes, talking about Ather Energy, filed its DRHP, and what they're saying, 3,100 crores they'll be raising via fresh issue, while an OFS is also that will be happening of 2.2 crore shares. Now, a quick breakdown of who will be selling their shares in this OFS. We have promoters like Tarun Mehta, as well as Swapnil Jain, who will be selling some bit of their stake in the company, as well as investors like Caladium Investment, Tiger Global, and 3 State Ventures among the marquee investors who will also be selling in the OFS. Now, let's not forget, Hero MotoCorp holds around 37% stake in the company, though they are not selling any of their stake. So value unlocking is something that will be playing out for Hero MotoCorp when Ather Energy actually lists on the bourses. Other than that, fund allocation, where will this 3,100 crores be used? Capex is the main one, 927 crores Capex plan that they have. They will be making a facility in the state of Maharashtra. This is for the electric two-wheeler space, which they will be focusing on. Debt repayment of 378 crores. Other than that, research and development, they've set aside 750 crores for that. So innovation, new technologies, that's going to be the focus for Ather Energy, and marketing initiatives of around 300 crores, as well as a general corporate purpose. The remaining fund will be used for that. Now let's move on and look at what the financials of Ather Energy actually look like. In FY24, the revenue stood at 1,754 crores versus last year FY23. It's been quite flattish in terms of a growth, not much of a growth there. losses. That's furthermore seen an expansion in FY24 versus FY23. Losses standing at around 1,000 crores, so keeping an eye out on that. While in terms of market share, surely they have managed to see a good gain in terms of market share of almost 100 basis points versus FY23. 11.6% is 11.5% is where the market share of the company stood at. So yes, keeping a close eye on this listing that will be coming out. As of now, they've just filed their DRHP. Ather Energy, Hero MotoCorp is something that will be seeing a value unlocking there.
Vinny, thanks a lot for that. The new IPO, a potential upcoming IPO there of Ather Energy. From one IPO to another one that is currently open now is PN Gadgil. That 1100 crore rupee issue has opened for subscription today, and that will close on the 12th of September. Earlier today, we spoke to the management of the company to discuss the IPO launch and the company's growth plans. Here's what the managing director, Saurabh Gadgil, had to say on their FY27 goals.
Agenda on the list is to be a 60-store company in the next 2 years. By this, we want to go on a focused growth. So Maharashtra is places where our stores do 4.5 stock turns every store. So our investment in a store is around 35 crores of inventory, and we turn it around 4 times. So that comes to 170 crores. We'll be able to continue that in Maharashtra even as we move ahead, because these stores are going to be in Tier 1, Mumbai.
So 60
Tier 1 city.
into 170 gives you 10,000 crore roughly revenue. Is that the target?
That's right.
By when? FY27?
FY27. So started, the company wants to be, at least targeting 15% in the next 2 years. So by that, means 15% on the entire grown revenue. That is where company plans to go. And eventually, we would like to be focusing towards 18 to 20%. We want to follow the route of the Peshwas, how they went from Maharashtra to Madhya Pradesh, Chhattisgarh, Jharkhand, UP, Bihar and Delhi. That is the plan which the company has earmarked for the next 5-7 years. So if you ask for the next 7 years, again, aspiration is to be a 100-120 store company. But again, focused on one state at one time, be a leader there, make a mark there and then move ahead.
The management of PN Gadgil. So 4 IPOs currently open for subscription. Time for a short break. Up next, the Congress party has accused SEBI chief Madhavi Puri Booch of willful concealment. More on that after this short break. Stay tuned, back on the other side.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
We've been underweight banks for a very long time, almost 2 years, but now we are gradually closing underweight positions because we think probably we are in the last leg of cyclical slowdown in the loan growth. Probably we see loan growth picking up from next year onwards, and probably once we have few rate cuts in place, we'll see some initial margin pressures on banks for the next few quarters, but we don't see that as significant. And the fact remains that in a market which has moved pretty sharply over the last 18 months, banks is now one segment of the market where valuations are far more reasonable compared to the overall market or the broader market. And more importantly, asset quality for the banking sector seems fairly benign. Large banks are in a very sweet spot in the sense credit cost is extremely low or very benign, and growth is reasonable. And on top of that, as I said, valuations are pretty reasonable. So sum total of all of it, we are turning positive on banks, as you said, some of the larger private sector banks, and including SBI as well. And probably, but from our point of view, we as investors take a view which is slightly more medium term over the next few years. And from that point of view, banks certainly look much more attractive than some of the other pockets of the market at this point of time.
Welcome back. Now, in a press conference earlier today, the Congress party has said that the SEBI chief Madhavi Puri Buch was guilty of willful concealment as her firm continued to generate revenue even after she took office. Abhimanyu is here to tell us more.
Congress's barrage of allegations against SEBI chief Madhavi Puri Buch continues today in a fresh set of revelations. Congress has claimed that Madhavi Puri Buch owned up to 99% of Agora Advisory between 2016 and 2024 till the records which were available to the party as on 31st of March 2024. Congress has claimed that she had earlier wrongly submitted that the company had become dormant. They also pointed out that according to the claims which are being submitted by the Congress party, SEBI chief's husband also received 4.78 crores between 2019 and 2021 from Mahindra & Mahindra, and she received 2.95 crores between 2016 and 2024 when she was a member of the regulator and later on became the chief of the regulator. Also, it is being claimed by the Congress party that as many as 6 listed companies which were clients of Agora Advisory benefited from several transactions which were undertaken during this period. It remains to be seen whether any fresh clarification would be issued from the SEBI chief's side or from these companies, even as Congress has claimed that they are going to make further revelations and their demand for a JPC on this issue continues.
Abhimanyu, stay on because some relief on soaring food prices may be likely, with the government sources saying that they are expecting retail prices of onion to dip to around 35 rupees a kg. Tell us more on that.
Discounted sale of onions, which had begun some time back, is likely to be extended to several other cities, even as the government has claimed that it has led to a drop in retail prices across India. The scheme is likely to be extended to several other cities, including Chennai, Bengaluru, Hyderabad and Bhubaneswar in the coming days. The government is hopeful that the retail prices of onions across India may drop to rupees 35 per kg, even as the government is selling it at this price itself as far as the discounted sale is concerned through the cooperatives, NAFED and NCCF. The government is procuring onions at rupees 28 per kilogram and the sale is going to continue till prices stabilize in the retail market. Several retail interventions have also earlier been undertaken, but now these retail interventions which are being undertaken are in view of the festive season which has already begun, and the government is also keeping a close eye on the prices of several other essential commodities, including potatoes and tomatoes.
Abhimanyu, thanks a lot for that. Now, that's something that you and I would want to hear more often. Time for a short break. When we return, we get you a heads up on what to expect from the US presidential candidates, Donald Trump and Kamala Harris's debate later today. Stay tuned. Back on the other side. Back with us here on Business Lunch. The stage is set for the Republican and Democratic presidential candidates Donald Trump and Kamala Harris to face off in the presidential debate later tonight. NBC's Peter Alexander gives us a heads up on what to watch out for.
Tonight, Vice President Harris touching down in Philadelphia, her face-to-face with former President Trump just 24 hours away.
How are you feeling?
Campaign sources tell NBC News Harris and her team are focusing on ways to needle Trump, to provoke him, and that she's studied past Trump debate clips.
It's time to turn the page on the divisiveness. It's time to bring our country together.
But a key challenge for Harris, trying to present herself as the change candidate when she's also the incumbent VP. A new poll shows more than 60% of likely voters want a major change from President Biden. More than half of those voters say Trump will bring that change, but only 25% say Harris will. Meanwhile, the former president at Mar-a-Lago doing what sources describe as informal debate prep. Among those advising him, former Democratic Congresswoman Tulsi Gabbard.
We're run by stupid people, and we found that out at the debate with Joe. How did that work out? And we're going to find it out again on Tuesday night.
A crucial challenge for Trump, winning back more women voters. But this warning today from Trump rival turned supporter Nikki Haley.
Donald Trump and J.D. Vance need to change the way they speak about women. You don't need to go and talk about intelligence or looks or anything else. Just focus on the policies.
This will be Trump's 7th general election debate, Harris's first, and it could be their only showdown. Notably, the two have never met. Trump left town before President Biden's inauguration.
Very important, all-awaited presidential debate later tonight, U.S. timings. But before that, by the way, the market has built on to the gains since the start of the show. The Nifty now is nearing 25,100 now at the highest point of the day, 170 points higher now on the index. And what is leading those gains? And there's some very strong buying interest seen in the Tata Group companies, be it Tata Power, TCS, all of them are at the highest point of the day. Tata Power is now trading with gains of almost 7% and 6.5% higher now. Tata Power, 445 on the stock. Tata Communications, you just saw them on your screen just a few minutes ago. TCS too, a key contributor to the Nifty upside now, 4,500 plus on TCS at the highest point of the day, as is Tata Communications nearing levels of 2,000, 4% higher there as well. And also pull up Indian Hotels. That stock too is trading with gains of over 4% with at the highest point of the day nearing levels of 700. But with that, it's a wrap on this edition of Business Lunch. Midcap Radar takes the action forward.
मैच में एक और बहुत ही बढ़िया एक खूबसूरत चीज़ है कि आपके मैच में एक और आर्चर है जिनकी बहुत बात हो रही है, शीतल देवी। वो काफ़ी चीयर करती हुई नजर आई। सिर्फ 17 साल की है वो। उनके परफॉर्मेंस के बारे में क्या कहना चाहेंगे? कैसा माहौल रहता है पैरालंपिक्स विलेज में, पेरिस विलेज में?
जी बिल्कुल, टीम सेपरेट अच्छी है और शीतल तो सबसे यंग आर्चर है इस कंटिजेंट की भी, हमारी टीम में भी। तो हम आपस में जब भी हम कंपटीशन में होते थे, हम 2 महीने पहले भी चेक रिपब्लिक में कंपटीशन में थे, तो मैं उस टाइम भी वहां पे 3 मेडल जीता था। तो हम आपस में, शीतल सबसे छोटी है तो हंसी मजाक करते थे, तो वो कहती थी भैया मैं आपको चीयर कर रही हूँ, आप जरूर मेडल जीतोगे। तो वही चीज, क्योंकि उसने मेडल जीत लिया था राकेश और शीतल ने, तो वो मेरे साथ वहां पे थी पूरी टीम के साथ, और सबसे छोटी बच्ची है तो देख के और ज्यादा खुशी होती थी कि वो चीयर कर रही है और वो चीजें काम भी है। तो अच्छी बात है, ये टीम स्पिरिट है कि आर्चर दूसरे को सपोर्ट करने के लिए ग्राउंड पे पहुंचते हैं, और क्योंकि वो उनकी अचीवमेंट इतनी ज्यादा है कि इस डिसेबिलिटी के बावजूद वो वर्ल्ड में अपना नाम बनाई है, तो डेफिनेटली उनकी जो मोटिवेशन है वो काम आती है एज ए टीममेट भी हमारी टीम में।
khênh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc xe máy của bọn cô là trong nhà khi đang ngập nước mà nước bây giờ nó là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. There's been a sharp recovery from the lows that we've been talking about of late, and that so far has converted into higher gains for the market, something which was not expected when we started the trading day, right? But for now, the Nifty is up 183 points. We do have the mid-caps which are powering through, and how. It's a 700-point gain, more than that actually on the mid-cap index. Bank Nifty is supporting. We have a gain of around 200 points on the Bank Nifty. So across the board, it is a very strong looking screen, something which was not expected to be at these levels, but of course this is something which has surprised the markets as well. But we do have a lot of commentary coming in from auto players, and that is something that we've been playing for you. In fact, our colleague spoke to Tata Motors. They say expect single-digit growth in intermediate, light and medium-duty commercial vehicles. This is the word coming in from Girish Wagh, who's the Executive Director of Tata Motors. Speaking to my colleague Parikshit Luthra at the SIAM Annual Convention, he also bats for light, medium and heavy-duty trucks to be covered under FAME 3. Listen into what he had to say.
So we are working on three main areas as far as CapEx is concerned. The first thing is the entire sustainability transition. So whether it is about shifting our facilities to 100% renewable energy or becoming net water positive, zero waste to landfill, I think all the sustainability goals are well underway. By the end of this decade or much before that, I think we should be net positive on all this. In addition to that, in terms of the scope 3 emissions, which is a large part of our emissions, is the vehicular tailpipe emissions. I think that's where we are working on in terms of electrification. But as we know, the journey in commercial vehicles is going to be through alternate fuel. So we worked on fuel agnostic platforms. So we move from diesel and petrol as a fuel to alternate fuel that is more of natural gas. We also move to flex fuel, and then finally we move to electric. Now within electric, we have been working on battery electric as a technology. We've also been working on fuel cell electric and hydrogen as a fuel in internal combustion engine. I think these are the technologies that we're working on as far as sustainability transition is concerned. In addition to that, I think we have been working on autonomous in terms of more of advanced driver assistance, which should help improve the productivity of the drivers in the country. And the overall digitalization piece, which is our fleet edge as an option or as an offering for the customer, which will help improve their productivity.
Right. On electrification of the portfolio,
what's the current offtake of EVs in your total sales at the moment, and how much do you expect this to increase by 2030?
So the current offtake still remains in lower single digits, right? But I think the good thing is we have now more than 5,000 ACE electric and around 3,000 electric buses running on the roads. The buses have covered more than 200 million kilometers cumulative. ACE has covered more than 43 million kilometers cumulative. So we have a very good experience under the belt. We've also seeded some of the electric heavy commercial vehicles in specific applications to understand how they are performing. So I think in variety of applications we have seeded our electric vehicles. I think we are also looking at clarity on the FAME incentive, which all of us are aware about. I think FAME 2 ended a few months back before the general elections. I think we are now looking at FAME 3 being rolled out, and we are also expecting as a commercial vehicle industry that the FAME 3 also includes N2 and N3 trucks, because it was limited to N1 category, which is up to 3.5 tons. We want N2 and N3, which is light, medium, heavy, to be included. We also want private buses to be included. And since for long distance haulage, I think hydrogen internal combustion engine is a good technology. Maybe we are also requesting the government to include this in the FAME incentive.
Right. Did the disruption in FAME, which stopped in March, affected sales right now of your electric portfolio, because the EMPS scheme does not cover anything but 2 and 3 wheelers? And is somehow the lack of clarity, lack of timelines on FAME 3 impacting manufacturing and future plans right now?
So fortunately for us, the buses which we are supplying as a part of the CSL tender are anyway covered under FAME. So that part of our business has not been impacted. Private buses are not yet as a part of FAME, which is another segment that we are pursuing. But we are requesting the government to include private buses also in FAME 3. I think there has been some impact on the small commercial vehicle, where the FAME incentive was almost equivalent to 15 to 20% of the price to the customer. But here I think we have also come up with a new offering which does give better total cost of ownership to the customer. But if you ask me, we are certainly looking forward to the government coming up with the FAME 3 scheme, and also include some of these segments which are not covered today.
Give us a sense of some of the priority launches for you in the remaining part of this fiscal and maybe the early part of FY26.
Right. So I think we have a very wide portfolio from half a ton payload going right up to 55 ton gross vehicle weight and 7-seater passenger carrier to 55-seater. I think we keep on coming up with variants and launches across the range, and we will continue to do so, including electric vehicles. So we do have electrification of the portfolio undergoing. So as we go ahead this year, we will launch a few more electric vehicles also. And of course, I think with the government's focus on alternate fuel, we will have some coming on CNG and LNG fuels also.
So how many electric and how many alternate fuels?
So electric, of course, will be in single digit. But if you look at our IC engine portfolio, the kind of variants we come up with is generally in double, triple digits.
Okay. My final set of questions. When it comes to alternate fuels, what kind of portfolio, as of now, are you sure of having by 2030, if we were to ask you percentage-wise of different alternate fuels, electric and ICE?
So, I'll be very happy to give a specific percentage. I think that clarity certainly is not there. Even in CNG, if you recollect, in small commercial vehicles and light commercial vehicles, there was a good growth, which happened 2 years back. But then after that, the CNG prices started increasing and the growth actually declined. So after the Kirit Parikh committee report, there has been some stability in terms of CNG prices with respect to diesel. And we are now seeing the CNG market coming back first in intermediate and light commercial vehicles. And we expect that to happen in small commercial vehicles also. I expect that between small and light commercial vehicles, the penetration of CNG should be around 20% or upwards of 20%. I think electric penetration will also vary from segment to segment. I do expect a good double-digit penetration in buses. I do also expect the penetration reaching double digits in small commercial vehicles for electric. I think in heavy, long haulage trucks, it will take time, but the penetration will be in lower single digits.
Well, a very interesting conversation there with Tata Motors.
hopeful that there could be some extension as far as the same FAME subsidies are concerned. Let's now slip into a short break. The management of Nitin, we'll just hold on to that. Well, what we have to look out for currently is the fact that, number one, we are awaiting the data as far as the mutual fund is concerned. Before that, if we could just pull up the intraday chart as far as the Nifty IT index is concerned. That particular segment and that particular space is the one that's doing very, very well. What's doing exceedingly well is mid-cap IT stocks. So if you have a look at names like Coforge, have a look at names like Emphasis, the entire pack, even some of the other names like Tech Mahindra, look at, also look at names like TCS, Infosys, all of these stocks are doing quite well. But you've been awaiting, the mutual fund data, and that's what, markets will have a close eye on.
Oh yes, so a lot happened in the month of August as well. But for now, we've got the first number, which is the net equity inflows, which have been higher than the month of July. It has come in at 38,212 crore rupees, which compares with the number of 37,082 crore rupees. Remember, we had a record high number in the month of June at 40,573 crore rupees. Very important to track here will be what the flows have come in from the NFOs this time, because we did have a lot of them in the month of August as well, be it the tourism fund that came in from Kotak, be it the other ones, and that's something that could have contributed to the kind of flows that we are seeing as well. Large cap fund inflows, look at that, because large caps did perform very well. We have an inflow of 2,636 crore rupees, which compares with an inflow that we saw the month gone by at 670 crore rupees. In fact, this is the highest number that we have seen in since last June, definitely since last June. June 2023 saw a net outflow of 2,000 crore rupees, and since then we've been hovering around those levels only, and then there was an improvement in flows. So definitely that's the big number to watch out for. What have we seen in terms of big inflow in the large cap space? Around 2,600 crore rupees, and that is the bar that should come up for you on the screen, the large cap flows, because that has seen a big increase. This 2,600 number we've not seen in a long time. So as I said, it is at a multi-month high, and that is the big takeaway, because Vivek, we've been talking about how small caps and mid caps have been doing well, large caps were still lagging, and a monthly number of 600 to 700 crore rupees, nobody would have actually seen that. So the August number is, of course, it's a big bar there. Our producer should just change that. It is the latest number. The August one should be around 2,600 crore rupees.
So run rate of 600 to 700, and it's now spiked up significantly.
It's spiked up significantly.
So it looks like, everyone's been watching us, everyone's been telling us, to maybe take some profits off the table as far as the small cap and
small caps and mid cap. So that's why the small cap and mid cap number will be very important to track as well. I'll have to check the number for now, but yes, that is the next big number that we'll be watching out for. And I do have the August number. It's just that it's such a huge huge data that is given. So there you go. Just look at the increase that we have seen, Vivek. April it was just 400 crore rupees. May it increased. June, people thought that maybe with the market run-up we saw post-elections, large caps would have contributed.
So they haven't moved out of equity, they've stayed with equity, but it's more of a flight to safety.
Yes, exactly.
They see more comfort as far as the large cap space is concerned. What else will we watching out for as far as this particular equity inflow or the mutual fund data is concerned? Number one, SIP numbers, monthly have stayed very steady about the 20,000 crore mark. Now, it'll be important to see whether, given the fact that we saw very volatile last couple of months, whether that sustains. The other important numbers to be seen, and something that the market will watch out for very closely, is the kind of activity as far as the mid cap as well as the small cap fund is concerned. And Sonal, like you mentioned, there were a lot of NFOs,
yes.
There was a tourism fund that came out. So there also you did see very significant subscriptions.
So we have the data here as well for the new schemes. By the way, we have the data for the mid caps and the small caps. Mid caps this time around have seen over 3,000 crore of flows that have come by. So mid cap funds around 3,054 crore rupees. Small cap funds have come in around 3,200 crore rupees. So that also continues to be the case, where we have seen an improvement in numbers. So last time around, we saw mid cap funds sees inflows of 1,644 crore rupees and small cap see inflows of 2,100 crore rupees. So it's not only actually large caps, even mid and small caps have done really well. In fact, we have some guests joining us now. Manish Mehta from Kotak Mahindra Asset Management is joining in. Mr. Mehta, good afternoon. Thank you so much for joining in. But definitely the big number is that big bump up that we've seen in large cap funds. Surprisingly, even mid caps and small caps have seen an improvement. What is the trend that you are seeing here? And do you think this is something which would sustain going forward as well, that confidence that has come back in large caps?
No, so in fact, if you hear the commentary, most of the fund houses and even at Kotak Mutual Fund, I think from a valuation point of view, we've been, sort of going out and telling at least the advisors and clients also that, large caps is probably where one should probably look at allocating new money. And either in the form of large cap funds or in the form of flexi cap or multi cap, where bias is more towards large cap is where we've been seeing most of the flows that have been coming at the industry level.
Thanks so much for that, Manish, and thanks for joining us. We also have Akil Chaturvedi, who's joining us. Good afternoon, Akil. Thank you so much for joining us. First up, we asked Manish as well, what is your view as far as the sharp inflow that you've seen in the large cap fund space? And secondly, do you see inflows moderating as far as the mid cap and small cap space is concerned? What is it that distributors have been advising clients in terms of, maybe valuations being stretched in that particular segment of the market?
No, so absolutely right. I agree with Manish also that incrementally all of us in the industry, AMCs as well as distributors, we are suggesting to investors to move more towards large caps or flexi cap funds where the large cap allocations are higher. I think that is also reflecting in the numbers. So if you see, there is a divided house between multi cap, large cap, small cap, so all in the range of 2,500 to 3,500 crores. So it's a good balance across all categories. I think that's a good development, and I think the sectoral funds continue to do very well. I think it's more to do with the NFOs. So that's 18,000 crores. So still a very large pool of allocation going out there.
Right. In fact, this time around in the month of August, there have been 18 NFOs, the number of schemes that were launched, new schemes, and that garnered around 13,815 crore rupees. That's the data from AMFI. And if we just talk about the sectoral funds here, even that, as you said, has done well. It's around 18,117 crore rupees. But does that not warrant some caution? Because a lot of that money is coming from NFOs. And as you said, some of these sectors have already run up. So don't you think that is a space that investors should be a little wary of?
No, so I think, broadly the way, there are opportunities in the market. Of course, the core allocation always should be around diversified funds, which are multi-cap, flexi-cap kind of opportunities. But through NFOs, there are these niche opportunities where there's a good growth opportunity from next 3 to 5 year perspective. Investors are also, a lot more aware and depending on their risk appetite, they tend to take allocations towards certain themes or certain sectors. So I believe that people take tactical allocations, and I think broadly the opportunities are there from medium-term perspective. So yes, I think NFOs always tend to attract new customers, new investors, new folios. So it does remain in vogue, honestly.
Manish, you've been around for a while now. So number one, given the fact that equity markets right now are very buoyant, do you see the trend of NFOs continuing? Secondly, what kind of SIP numbers are you penciling in? And given the fact that that is seen as more sticky, do you think it can continue to sustain above the 20,000 crore a month mark?
Yeah, of course. Sorry, Manish, go on.
Yeah. Okay. So coming to NFOs, primarily, the thing is, mind you, it is just not sectoral funds where you've been seeing this huge surge of money coming in. It's a lot of thematic category of products also that people have been looking to launch. So maybe, in the Make in India theme, manufacturing India, like those kind of products. So it's a mix and match of sectoral thematic kind of products, which most fund houses have been launching. And that's where you've been seeing a surge coming in. The other thing what's happening is somewhere it looks like the investor is okay to allocate money lump sum through NFOs because the fund manager or the portfolio manager also has, a stipulated number of months available for him to build his portfolio and allocate. So maybe they feel a lump sum application through an NFO, will anyway get invested over a staggered period of time as the portfolio manager builds the portfolio. So that probably is a good approach. And when it comes to ongoing products, obviously SIP numbers continue to remain very, very sticky. And at least we believe very strongly that as awareness is, increasing amongst investors, I think these numbers can probably only head upwards. And as more and more investors are having a very positive experience of, investing in our markets through the SIP route, I think it's just giving them that much more encouragement to keep, using that as an approach to at least regularly invest and at least ensure that there is a rupee cost averaging.
Okay. The next, of course, the important thing would be the net inflows in SIPs also, right? Because there were clarifications, there was a lot of discussions that the net SIP number has been going down. But Manish and Akhil, thank you so much for your time today and joining in with your first take. There's a lot of data to go through, so of course we'll do that. And at 2 p.m. we'll have the conference call from Amphi as well, where we'll get more details. And of course, the systematic investment plan, the SIP number as well. Thank you so much, gentlemen, for joining in today. Okay, with that, let's move on. We'll, of course, keep talking about mutual fund numbers in just a bit as well. But for now, let's quickly take a look at the markets, because it's a 180-point uptick that we are seeing on the markets, and the mid-cap index is doing well. And in fact, it has seen more gains from when we started the show. So it's 826 points higher now. It's a one-way rally that we are seeing. So we'll discuss that in a lot more.
We'll have to make a mention of how some of the pharma stocks are doing.
Yeah.
It's not that the US Biosector Act was something that's quite new. Markets have been pricing it in for quite some time. But look at some of the stocks. Look at names like Laurus Labs, Granules India. Look at some of these stocks. They're doing very, very well in the session today. Piramal Pharma, Divi's Labs. Even it's a large cap, but it's up almost 4% today. But on that note, let's slip into a short break. The management of Nitin Spinners joins us next to discuss their business outlook and more.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential
Investing.
Welcome back to Midcap Radar. Well, the company in focus is Nifty Spinners. The stock has surged more than 27% in 2024 so far. To discuss the current demand trends, both in the export as well as the domestic markets, we are now joined by Dinesh Nolka, the Managing Director at Nifty Spinners. Good afternoon, Mr. Nolka. Thank you so much for joining us today. First up, like we mentioned, Q2, we are in the midst of what has essentially been quite a volatile and a quarter that's seen quite a lot of upheaval as far as the space that you're present in is concerned. When you saw us last time, you said you expect to see 10 to 12% volume growth in FY25. Do you stick to those numbers? How has Q2 been, especially in the context of all of the worries, especially as far as Bangladesh is concerned? Has there been any disruptions in your operations?
Good afternoon. Thank you for having me on the show. Demand per se has been reasonable, quite robust, I would say, and we still stick to this, our guidance of about 12 to 13% increase in the volume side. So that is still there, and we are operating at quite optimum capacity levels at this point of time. As far as Bangladesh is concerned, there has been quite a lot of upheaval during last 1 month. There has been, apart from the political scenario, there has been, they are also affected by the floods in quite a lot of part of Bangladesh, and now they also have certain labor disruptions. So it is the Bangladesh capacities in textiles is up and running, but they have, I would say, they are still not reached the full capacity level. They are still running at about 85 to 90% levels. So as far as we are concerned, there has been a reasonable demand. We have been supplying our old contracts as well as getting the new orders. Plus the payments are also quite regular there. So we don't see any major upheaval in the short run as such, as far as Bangladesh is concerned.
Okay, so no impact for you, but the general unorganized sector players were telling us that the yarn exporters to Bangladesh, they could be impacted because of the capacity constraints that Bangladesh is seeing currently. We get that point. Your export contribution, that has been increasing, and we have spoken about how exports have been in focus. What kind of growth are you expecting this year? Have things changed in terms of inquiries coming in from global players to India after the changes that we have seen because of the unrest?
Exports for us, we have about 60% of our revenues going in for exports, and we expect to maintain the similar kind of run rate as well. So whatever growth in the total top line we will have, similar kind of growth we will have in the exports also. And for that purpose, we are trying to explore various other markets apart from Bangladesh and certain markets which has been disturbed due to the various geopolitical situations. So we expect, of course, we have issues of Red Sea where the costs have increased, and other geopolitical tensions also happening in Russia, Ukraine. But we feel that we should be able to manage the growth for us, at least in the export market.
Okay. So, Mr. Nolka, I wanted to understand, when you say you'll be able to maintain the growth that you're seeing on the top line, that is something you'll see in exports. So, 10 to 12% volume growth, will you see a higher realization growth as well? What are you penciling in as far as cotton prices are concerned right now? Has there been a big movement there?
I think realizations are not going to improve any further at this point of time. It looks as if for next 5-6 months, because cotton prices have been quite subdued for last 6 months. We have a major challenge in hand where the international cotton prices are getting down, and whereas Indian cotton prices, due to heavy rains and less irrigated area, are slowly inching up. So we have in Indian cotton prices going up, whereas the international cotton prices coming down. So we have a challenge in hand for that. And that is something which we'll have to navigate over the next 2-3 months once the Indian cotton prices settle down. So overall, we don't see major improvement in the realizations because the subdued cotton prices are there. And cotton prices outlook, I would say, it should remain quite stable in India. India, since we have a minimum support price operations in place, where they will have downside is limited. And because of lesser prices internationally and a lot of imports happening, we don't see upside as well. So this could be a very steady state of kind of pricing scenario for cotton for the next 5-6 months.
Got it, sir. Mr. Nolka, thank you so much for joining us. So you expect realizations to remain around the current levels, and also you stick to your volume guided band in the range of 10 to 12%. Upside, you have given us a 13% volume uptake. But moving on, in a press conference earlier today, the Congress said that the SEBI chief Madhavi Puri Buch was guilty of willful concealment. The party claimed that an advisory company owned by her continued to generate revenue after she took office, and the advisory company's clients include the likes of Semcor, Pidilite, M&M, Dr. Reddy's and ICICI Bank. The Congress also claims that the SEBI chief's husband, Dhaval Buch, received rupees 4.78 crore between 2019 and 2021 from Mahindra & Mahindra. Mahindra & Mahindra has issued a response to this, saying that they hired Dhaval Buch in 2019 specifically for his expertise in supply chain and sourcing soon after he retired as Unilever's Global Chief Procurement Officer. Mahindra Group says Dhaval Buch spent most of his time at subsidiary Bristlecone, which is a supply chain consulting company, and he is currently on the board of Bristlecone. Mahindra Group says Dhaval Buch joined Mahindra Group 3 years before Madhavi Buch was appointed as SEBI chair, and the compensation has been specifically and only for Dhaval Buch's expertise and management acumen. Mahindra Group response says, and I quote, "We categorically state that we have not at any point requested SEBI for any preferential treatment. We maintain the highest standards of corporate governance. We consider these allegations false and misleading in nature." On the back of that, Mahindra & Mahindra, look at the stock, largely flat, has seen a little bit of volatility in the session. But with that, it's all the time we have on this edition of Midcap Radar, Mutual Fund Corner, when we return.
Influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
We've been underweight banks for a very long time, almost 2 years, but now we are gradually closing underweight positions because we think probably we are in the last leg of cyclical slowdown in the loan growth. Probably we see loan growth picking up from next year onwards, and probably once we have few rate cuts in place, we'll see some initial margin pressures on banks for the next few quarters, but we don't see that as significant. And the fact remains that in a market which has moved pretty sharply over the last 18 months, banks is now one segment of the market where valuations are far more reasonable compared to the overall market or the broader market. And more importantly, asset quality for the banking sector seems fairly benign. Large banks are in a very sweet spot in the sense credit cost is extremely low or very benign, and growth is reasonable. And on top of that, as I said, valuations are pretty reasonable. So sum total of all of it, we are turning positive on banks, as you said, some of the larger private sector banks and including SBI as well. And but from our point of view, we as investors take a view which is slightly more medium term over the next few years. And from that point of view, banks certainly look much more attractive than some of the other pockets of the market at this point of time.
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. And today we talk about a very interesting category, the Balanced Advantage Funds, which is a kind of a hybrid fund, invests primarily into debt and equity. What are these funds? Whose portfolio should it be a part of? What happens when there's volatility? Is it a no for some of the investors? Can you do a lump sum or is it SIP? To dwell on this, we have with us Kushal Bhagi, the owner at PCC Investing. Kushal, good afternoon. Thank you so much for joining in today. There's a lot of conversation around this, but sometimes it's very difficult to understand this category as well sometimes. You want to give us a quick introduction to Balanced Advantage Funds as we kick off the show?
Yes, of course. Good afternoon, Sonal, and good afternoon to your viewers as well. So, as you mentioned, Balanced Advantage and Dynamic Asset Allocation, and we'll use these two words interchangeably for now. They're kind of a hybrid fund, which, as the name suggests, they use a combination of asset classes, debt, equity, and gold and other commodities as well. But the overarching purpose of hybrid funds has been to reduce volatility because that allows investors to remain invested for longer periods more easily, right? Because the drawdown in pure equity funds can be quite high. Now, if you look at the SEBI classification for hybrid funds, there are various types and each of them have fairly defined rules. So, for example, you have conservative hybrid funds. They can invest only 10 to 25% in equity. Or aggressive hybrid funds where the equity exposure can be around 65 to 80%, multi-asset funds which should have at least 10% in a minimum 3 asset classes. And then you have BAF and DAF funds. These funds play primarily between equity and debt, but there are no restrictions. So the fund manager has the leeway to vary the equity exposure all the way from 0 to 100. So you can think of BAF funds as, funds that are at times aggressive, at times moderate, and at times conservative. So the output of these BAF funds is an equity to debt ratio. So the fund manager can either keep the equity to debt ratio at, let's say, 70-30, or when markets are perceived to be very risky, they can lower and rebalance the portfolio to make it 30-70. And it's this dynamism or this flexibility that has struck a chord with investors.
Okay. So, you talk about this appeal factor. Let's elaborate on that because BAF funds not so long ago got a bad name for being missold by some of the elements within the industry, right? They were called monthly income products as well. The truth is that these funds do have sizable equity as well. When markets go south, there were some issues around payments as well. It was a dampener for many investors. So, can you explain that appeal factor? Can you try and understand what does it exactly entail?
Very true. And a few things have happened over the last 5 years that have changed the outlook for these kinds of funds. Today, there is some sort of consensus in terms of what you can expect when you invest in a BAF. And that proposition is that when markets are falling, they will fall less than pure equity funds. When markets are rising, they will deliver or have the potential to deliver debt plus returns. Okay, so if you look at the returns over the last 3 years, for example, a Nifty index fund, a Nifty 50 index fund would have given you a return of around 17.5% CAGR. And an ICICI BAF or an Edelweiss BAF, I'm picking these two BAFs because they're amongst the 4-5 BAFs that have a 15-year track record. Their returns are in the 14% category. But their standard deviation or the volatility is almost half. Okay, even if you look at rolling returns, 5-year rolling returns data since 2012, the Nifty 50 has given you around 12.8, but these balanced advantage funds are only a couple of percentage points behind. So the point I'm making is that when funds behave as per the stated design, that gives a lot of confidence to investors. And when you add to that what's happening in the recent past, so much of investor awareness and education that have supported this campaign and, supported this narrative of reasonable returns with lesser volatility, that can be a very appealing proposition.
Okay, so then in that case, who should it be appealing for, or who would it be appealing for? Which category of investors should be looking at this?
So straight away, if you have lump sum money to deploy, and if you're confused about whether it's a good time or not to invest in the market, like today, many people are concerned a little bit that valuations have increased quite a bit. And what happens if you invest and the market goes down? So people then tend to postpone their investment decision. And as we've seen in the recent past, markets kept going up, and then they find themselves in a very awkward position. So in these cases, balanced advantage funds are a very good choice. A BAF with 60% equity exposure today means if you invest rupees 100, 60 rupees is only going into equity, 40 rupees is actually going into debt. So the biggest advantage of balanced advantage funds is that it takes the timing out of the investor's hands. Okay, it's also good for new investors. For new investors, if the initial experience of investing is good, which means basically you're making money, or conversely, if markets are falling and you're losing less money than the market, right? So that's also a good experience. These outcomes build your confidence, which allow you to remain invested for longer periods, which traditionally we've seen people struggle to remain invested for 2 and even 3 years' time. So BAF could be a good entry point for these people as well.
Okay.
Finally, people who are retired and, if somebody wants to do an SWP, I've seen a lot of people use BAF funds for this purpose also.
Okay, all right. So this could be the category. If you have lump sum, just go for it. And as you explained, it's mostly in equity and debt, and it changes according to the market cycle that you're in. And that's, of course, a big positive for this particular category. So, when we speak about mutual funds, one thing that happened in this budget was a lot of changes when it comes to taxation rates, and so much so that it got confusing to a level as well. So with the recent changes in taxation budgets, how tax-friendly are balanced advantage funds in that case?
Very, very tax-friendly. To qualify for equity taxation, a scheme needs 65% and above in equity. Most BAF funds in the industry today fit this requirement. Not all, but most.
Okay. All right. Looks like there is... okay, go ahead, Kushal. I think we have you back.
Okay. I said if a balanced advantage fund has around 60% net equity exposure, what does that actually mean, right? So, for example, 80% in equity and 20% in debt. That might be what a BAF scheme, what the fund manager is invested in. But if you want to keep your net equity exposure at 60%, then 20% they can use either arbitrage funds or even derivatives to bring down the net equity exposure. So in that case, you'll have 80% in equity, so you get equity tax. And even if you look at the debt component, 20% which is in debt, you actually get a very favorable tax rate, because if you were to unbundle and invest in equity separate and debt separate, your debt component would be taxed at your tax slab. But over here, because it's part of a balanced advantage product, you get taxed only at equity. So 12.5% and 20% is what you get taxed at. So what's happening now is you see a lot of investors strategically using balanced advantage funds to achieve an optimum asset allocation in their portfolio.
Okay, so very tax friendly, and that is something that any investor would like, because it's just not about returns, it's post-tax returns at the end of the day, right?
Absolutely.
Kushal, it's a very interesting chat, but we have to get into a quick commercial break. On the other side, we'll continue our discussion with Kushal Baghi on balanced advantage funds. Stay tuned for that. Welcome back. You're still tuned into MF Corner. We still have with us Kushal Baghi of PCC Investing. We are understanding everything. It's a deep dive into balanced advantage funds. Kushal, we spoke about who it is beneficial for. You said if somebody has lump sum money, just go ahead and invest here. But does that mean these funds are not suited so much for somebody who wants to invest here via SIPs?
See, today, Sonal, most BAFs actually vary their equity exposure between 30 and 70%. So for me, that's a bit too conservative because, you know, long-term SIP strategy is a very slow strategy. You need a lot of time for your money to actually compound. So I would say if you have an SIP strategy, your choice of funds should be quite aggressive. If you want to pick a hybrid fund, I think aggressive hybrid funds is a good pick. Or if you actually want to go and invest SIP into a BAF, you need to pick a really aggressive BAF. Of course, depending on your goals, your time period, what it is that you want out of the investment, there could be some cases where an SIP into BAF can be a viable option also. But typically, if you pick BAF, it should be an aggressive BAF.
Okay, all right. Aggressive BAF is where you should go about it because with the longer term, that's where if you do an SIP, that would mean more investments in equity portion, right? So say if you've picked an aggressive BAF, what would that mean? Aren't these schemes largely similar to, say, a conservative dynamic asset allocation fund? How does it differ?
Okay, so see, reducing equity exposure when markets are risky, increasing it when valuations are more favorable, that's primarily how most of the funds are run, okay? So it's valuation based. Managers can use P ratios, PB ratios, they can develop internal valuation models, and that determines the outcome of the ratio of equity to debt. But because this is a no-holds-barred category, SEBI actually allows you to go from 0 to 100%. And there is a lot of scope for innovation and differentiation. Let me give you an example. There could be another school of thought which says, let me run the scheme and be even more dynamic. Let's position the fund in such a way that when markets are going up and markets are favorable, we will be aggressively in equity. And when markets are falling, we can get aggressively out of equity as well. So you want to try and add value by asset allocation. Now, with such aggressive posturing, why close to Nifty returns? You might be able to get significantly higher than Nifty returns. Of course, there's a flip side as well, that if the fund manager gets the call wrong, you can be underperforming significantly for periods of time also. But it gives newer AMCs, especially or smaller AMCs, a chance to make a mark and deliver outperformance. And you know, if you deliver outperformance, you are going to attract more money. Apart from this, also advances in techniques, so many different inputs now that are going into models. So it really is a hotbed of differentiation. And I think it's great for investors who want to invest in this category.
Okay, so I want a little more clarification on that because we spoke about it being used interchangeably at times, right? So you are here distinguishing between balanced advantage funds, which tends to be more conservative, and dynamic asset allocation funds, which are more dynamic. In that case, does it mean one is better than the other? How can one differentiate here?
See, unfortunately, the nomenclature doesn't work that way. You have some DAF funds which also run quite conservatively. But let me give you a couple of examples, okay? Typically, one of the larger funds is ICICI. They follow a valuation-driven approach, which means that when valuations are high, they lower their equity exposure and vice versa. And we've seen in the last maybe around 6 months, their net equity exposure has only been between 35 and 40%. So they've been significantly underperforming the Nifty, if you were to look at it that way. You have another fund like Edelweiss. Now, Edelweiss follows a different approach, not a valuation-driven approach. They look at daily moving averages, and they believe in a trend-following approach. So if there is an upward trend in the market, they tend to increase their equity exposure. If the trend is going the other way, they lower their equity exposure. So in the same period where a conservative or a traditional BAP might have been in the 40% region, Edelweiss was probably in the 60 to 70% range. And then you have newer AMCs, a Quant AMC or a Samco AMC. At the same time, they've kept their equity exposure at 80% and even 90%. So, you know, there's a big variance in terms of equity exposure across various funds. And this exposure, this aggression is not just limited in terms of what your equity exposure can be. There's even variation against caps. What I mean by that is the average seems to be that if a fund has, let's say, a 50% equity exposure, 70 to 75% of it is large caps, okay? But now you have some other funds like HSBC or Motilal or 361, over 50% of their equity exposure has been in mid caps and small caps. So, you know, there is going to be quite a lot of outperformance and underperformance, and you must really understand all these dynamics before you pick and invest in a balanced advantage fund.
Okay, of course, we would consider a lot of things. So in that case, Kushal, would there be any recommendation in terms of balanced advantage funds where an investor can invest?
See, I'm of the school of thought that there's no bad scheme. Okay, let me just put out that way. They're all being managed by very professional people and by very pedigreed AMCs. I think what we must understand is that every AMC will have a different approach that the fund managers are going to take. And therefore, your experience in the short term especially can be very different. At times, you will have valuation fund-based funds which are doing better than momentum. Sometimes it'll be the other way around. At times, you will have large caps doing better than mid caps and small caps. So, you are going to have a period where some funds are underperforming and outperforming and sort of taking turns in that. So I don't think it's the fact that one fund is better than the other. I think, as I mentioned earlier in the show, the behavior of the fund must work consistently according to the stated design. Okay, so you must be mindful of the design that you're comfortable with, whether it actually matches your investment objectives, because that's the only way that you can ensure that these selected funds will be successful for you and you can remain invested even through the down times because you understand why the funds are underperforming for certain periods of time. So, if you are investing through an MFD or an advisor, they typically will be able to help you out with this. If you are, on the other hand, investing in direct plans, then there is some amount of homework that you have to do before you go and invest in these kinds of funds.
Homework is always important when it is about your money. So definitely that's a sane advice. But are there any disadvantages or risks that you see around balanced advantage funds that you want our viewers to be aware of?
I don't know about disadvantages. I think one criticism which can come from some ends is that perhaps these funds are slightly more expensive. And especially if you compare them to passive funds, right? Because passive funds, your index and ETFs will obviously be cheaper. Balanced Advantage Fund is an active fund, and there is a fair amount of work that the fund management team is doing to be active in this front. And if you compare the expense ratios of BAF funds with other active funds, then there isn't much of a difference, actually. So, no, I don't see any serious criticism with this category. It's just that if you are investing in a BAF, you have to choose and select one that is appropriate and in line with your investment objectives.
Okay, so there's no one bigger risk, so to say, with this particular scheme. But of course, you have to align it with your risk profile and the overall contribution that you made to the scheme as well. Kushal, it was such a pleasure speaking with you today. Thank you so much for joining in and taking us through this deep dive into balanced advantage funds. Very interesting category, and we've seen a lot of ups and downs here as well. So thanks a lot for your time today. Okay, with that, let's move on and talk about the mutual fund data. We just got it a while back, and there have been some big changes that we've seen on a month-on-month basis, definitely. Let's talk first up about the equity flows that we've seen overall. They have come in at 38,212 crore rupees, which is a slight uptick on a month-on-month basis. It has come off, of course, from the June levels. That was a big number. We saw a massive rally in equities in June as well, post-elections. Now to the big number, and that's the large cap funds. That is where you saw an inflow of 2,636.9 crore rupees. And as you can see, it has been anywhere on a monthly basis between 600 to 700 crore rupees. June was higher at 970. But it has been on the lower side last year when large caps were seeing outflows and mid and small caps were doing well. So this has made a massive comeback in the month of August. And that's point number one, which stood out for me in this month's numbers. The second thing is that while large caps have done well, we were talking about these higher valuations for small and mid caps, even they have done well. So small caps on a month-on-month basis have seen an increase to 3,209 crore rupees. This is again at a multi-month high. Similar is the story for mid caps as well. So mid caps have seen a doubling of inflows on a month-on-month basis. They have come in at 3,054 crore rupees, which compares with 1,644 crore rupees. We were talking about balanced advantage funds, and generally the hybrid category, which has done really well in the past couple of months when there were outflows in debt funds, there were outflows in large cap funds, so this category picked up. In July as well, it garnered decent amount at 17,436 crore rupees, but now that has come off sharply to 10,005 crore rupees. So hybrids did not do so well. Sector and thematic, that continues to be the big theme. Now it has seen flows of around 18,117 crore rupees, flattish on a month-on-month basis, but from highs of the month of June, June, it has come off substantially. This is about sector and thematic funds. Let's talk about the SIP number, again at a record high. It's at 23,547 crore rupees, inching closer to the 24,000 crore mark. But of course, we need to understand these are the gross SIP numbers, right? So we need to understand the net SIP numbers, because the net SIP has been lower. In fact, there was a 50% differential that we saw earlier in the month of June. We'll have to see that has continued or not. That is the SIP number. And while we talk about the SIP number and the inflow number, we also have to talk about new fund offers, or the NFOs. Net inflows have ebbed to 13,815 crore rupees, and that compares with a number of around 16,565 crore rupees. But remember, there were more NFOs in the month of August, 18 NFOs, which compares with around 15 NFOs that we saw in the month of July. So that is largely the picture. Large caps have made a massive comeback. Sectoral and NFOs remain at similar levels. Even mid and small caps have done really well, and that's what the data suggests this time around as far as the mutual fund data for the month of August is concerned. Well, with that, we'll take your leave on this edition of MF Corner, but stay tuned for Closing Bell to take you through the last hour of trade.
मैच में एक और बहुत ही बढ़िया एक खूबसूरत चीज़ है कि आपके मैच में एक और आर्चर है जिनकी बहुत बात हो रही है, शीतल देवी। वो काफ़ी चीयर करती हुई नजर आई। सिर्फ 17 साल की है वो। उनके परफॉर्मेंस के बारे में क्या कहना चाहेंगे? कैसा माहौल रहता है पैरालंपिक्स विलेज में, पेरिस विलेज में?
जी बिल्कुल, टीम सेपरेट अच्छी है और शीतल तो सबसे यंग आर्चर है इस कंटिजेंट की भी, हमारी टीम में भी। तो हम आपस में जब भी हम कंपटीशन में होते थे, हम 2 महीने पहले भी चेक रिपब्लिक में कंपटीशन में थे, तो मैं उस टाइम भी वहां पे 3 मेडल जीता था। तो हम आपस में, शीतल सबसे छोटी है तो हंसी मजाक करते थे, तो वो कहती थी भैया मैं आपको चीयर कर रही हूँ, आप जरूर मेडल जीतोगे। तो वही चीज, क्योंकि उसने मेडल जीत लिया था राकेश और शीतल ने, तो वो मेरे साथ वहां पे थी पूरी टीम के साथ, और सबसे छोटी बच्ची है तो देख के और ज्यादा खुशी होती थी कि वो चीयर कर रही है और वो चीजें काम भी आई। तो अच्छी बात है, ये टीम स्पिरिट है कि आर्चर दूसरे को सपोर्ट करने के लिए ग्राउंड पे पहुंचते हैं, और क्योंकि वो उनकी अचीवमेंट इतनी ज्यादा है कि इस डिसेबिलिटी के बावजूद वो वर्ल्ड में अपना नाम बनाई है, तो डेफिनेटली उनकी जो मोटिवेशन है वो काम आती है एज ए टीममेट भी हमारी टीम में।
khênh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc xe.
Some of the markets, they're absolutely flat with some negative bias, be it Hang Seng, be it Shanghai.
The swing low of 24,753 will be an important downside level which should be protected.
Ather Energy, which is backed by Hero MotoCorp, has filed for DRHP just last evening.
Aims to reduce dependence on biotech companies from China over the next 8 years.
Bank Nifty is up 0.25%, 51,258.
Also, the rate rationalization, it seems that government is now in a hurry to kind of do that.
Motilal Oswal has come out with a note where they're saying the IT services sector could be on the cusp of recovery.
We are the only organized family jeweler in the country.
It's mild green on the Nifty and the Sensex. Mid-caps, though, are holding strong.
This is the right time if someone is looking for buying the car. Please go ahead.
The government has claimed that it has led to a drop in retail prices across India.
There's been a sharp recovery from the lows that we've been talking about of late, and that so far has converted into higher gains for the markets.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Welcome to the program. This is Closing Bell. The day so far, as was sort of snapshot for you earlier, shows you what has happened. 170 points higher on the Nifty. It's a super strong day once again. And we're above 25,100. Well, it's all boys show. Prashant with me, my colleague Mangalam. Mangalam, hi.
Hi, we're the bell closers for today. What does one say? But you know, what's interesting is that everything that didn't happen yesterday happened today. Yeah. Yesterday, yes, there was a recovery in the second half of trade, but Nifty Bank was outperforming and the mid-caps were underperforming. Today is the Nifty Bank which is underperforming and the mid-caps are outperforming in how? 850 points on that index. Extremely strong day of trade so far. And just when we, started the show, we saw two flashes come by. One was that of Kumar Mangalam Birla buying stake in, Vodafone Idea, almost 1.68 crore shares in his personal capacity. The other one was the Birla Family Investment Trust, which is another listed company, Pilani Investments, buying another 40 lakh shares as well. All of that has caused a bit of a spike on that stock, which has otherwise been a bit of an underperformer, especially over the last few trading sessions. So that's something we'll watch out for. Pilani Investments, of course, has spiked on that news, but the bigger beneficiary here would be, Vodafone. The other one is this comment coming in from the Maruti CEO will launch an EV with a high range of about 500 kilometers using a 60 kilowatt battery. Now, Maruti typically is a late entrant into any category which is emerging, but once it does enter, it eats into that category. We saw that with the SUVs, we saw that with the passenger vehicles, and now if they enter EV with 500 kilometers, average run right now is 250, 300 kilometers. What if Maruti with its might enters the space with a 500 kilometer range? I mean, all those range anxiety news pieces will perhaps be, vanished.
So Pune and back.
Pune and back.
One charge.
with enough juice to stop by Bombay, and have a vada pav.
Or maybe Bombay to Goa, right? One charge. I mean, anyway, but I'm not seeing a timeline to it, right? Because Maruti has said, and we've asked them about when this EV launch is going to be. They've said, from what I remember, sometime in 2025 or something is going to be the first EV launch. So this is a comment coming in from the CEO. We'll try and put more sort of shape around this in terms of when the timelines, etc., is going to be. And that idea news flow, and we'll go back to idea as well. So creeping acquisition by the promoter, right? That's essentially what this is. And stocks up about 2.83%. We'll have more, again, perspective on this in terms of holding and what this would mean, what percentage of equity. Should be very, very small. But more on this in a bit. Let me just quickly wrap out things on the index, right? Because we've got a strong day. And I just looked at what the rest of Asia is doing. And the market here is doing the best amongst what everything else is doing. Some markets are down, some markets are up. But here, you've got a pretty strong session through and through. Let's actually cut across to Delhi, where my colleague Parikshit is in conversation with Vijay Nakra, President Automotive Division in Mahindra & Mahindra, for a quick listen in. Okay. Okay, I think what we'll do is we'll just have that up in a bit. Well, things.
Automotive division of Mahindra Group, Vijay Nakra. Vijay, thank you very much for joining us right now. You had over 75,000, roughly around 75,000 dispatches in the month of August. How does the festive season look like as of now?
Firstly, thank you so much for having me on your show. We are pretty bullish about the upcoming festive season. I think there are a number of indicators that point towards that. I think the election is behind us, the budget is behind us. We have the indications of a great monsoon. We've had good rains. The long-term period average of monsoon is up significantly compared to last year. The water levels in the reservoirs are 72% plus. 90% of the sowing land has been tilled with the Kharif crop. The price of crop or the grain coming to the mandis is better than last year. So all of this are clearly indicating to us that, also basis talking to many of our channel partners as we get ready for the festive season, the mood is pretty buoyant and we believe the festive season will be good for us.
So your competitors, Tata Motors, they've announced a lot of discounts across EVs and ICE between yesterday and today. So how are you matching up to the industry when it comes to discounts?
Well,
are we going to see some strong schemes from Mahindra Group?
So firstly, it wouldn't be right for me to comment on, what the competition is doing. But as far as we are concerned, I think if you look at many of our models, if I look at the last 3-4 months with, the kind of interventions that we've taken, whether we talk about the 700, whether we talk about the Scorpio N, whether we, talk about the Thar, I think to a very large extent, we are seeing the demand come back up. We've also seen that the pipeline is pretty strong for these products as we get into the festive season. I've not spoken about the 3XO because that's a recent launch and we know that the waiting on that product is still reasonably high, and Thar Rocks we've not yet opened. But if I just look at the range of products which are already in the market with the interventions we've taken, we have not brought in any disproportionate schemes or incentives for the festive season, and we are confident with what we are doing.
Right. You had reduced the price of the XUV 700. Are we going to be looking at some more price reductions across the product line?
Well, for now, I don't think I would be able to comment with any certainty on that. Price correction schemes always depend from time to time. But I think there are also, we've spoken about this before, that one of, the XUV 700 over 2 years with the price increases it underwent, and with the commodity cycle giving us an opportunity to pass some of that back to the customer to bring back demand, especially in a scenario where we increased our capacity from 6,000 to 10,000. We believe that was the right move and we can see the demand having come back. Are we going to do that in the rest of the products? I think these decisions are taken from time to time. But for now, we are seeing a strong demand on many of our products.
All right. Okay, well, we'll cut back to it with more as and when there are comments made. But for now, Mahindra essentially saying very clearly they've got no plans to cut prices, offer festive discounts, and they think that, well, their products are priced at the appropriate level as they head into the festive season. So stocks on your screen. So just to get back to the market, we've got, as I said, the market here outperforming pretty much everything else around the region. Nifty has gotten to the 25,000. It did get to, actually now I should say, because we've slipped a little bit, but we were trading comfortably above the 25,100 level. Now, that is essentially the 61.8% retracement to the fall from the all-time high, which is 25,333. And we were trading above that level. We've just fallen under it as we speak. Logically speaking, I mean, the next target, I mean, you essentially looking at a takeout of the all-time highs, right? And above the 25,100 level, if we are able to hold it. Will it happen now? Will the market give it some time? Will it happen around the time of the Fed meeting, which is later on the 17th, 18th? Will we wait that long? Those are things we'll have to see. But with this kind of a day, it looks like perhaps the market is in strong hands. Bank Nifty is also trading above the 61.8% retracement of its recent fall. not from the all-time high. The Nifty Bank never made an all-time high. So it's a smaller price decline. And that is 51,222. We're at about 51,279. And sectors, IT is doing very well. Pharma as a sector is doing very well. And you've got mid-caps, which are also participating, in a pretty decent fashion. We've got Mitesh joining us now with a quick check on things in terms of specific index levels and trades that he'd want you to take. Mitesh, good afternoon. Your thoughts on what we're seeing out there and your fresh trades?
Yeah. So Prashant, I think, much stronger than I expected kind of a pullback. We were looking at 25,050 and then 25,150. We nearly tested the second supply pivot, which is a good thing that the market was able to show strength post that big decline. And 25,150 is an important area. That's, where the retracement comes in, intraday averages come in. So I think in case we don't clear it, then it might be another day of choppiness between 25,150, 25,800, 850. And then after 1 or 2 days of consolidation, we should start moving up. So trade with stock specific bias for the time being. I have a sell on REC with a stop at about 588 and a target of 555, and a buy on PVR Inox. It's a buy with a stop at about 1580 and look for a target of 1660.
Right, positive on PVR Inox. A lot of brokerages also incrementally positive on the fundamentals of PVR Inox, given the sort of box office collections that have taken place over the last couple of weeks or so. Mitesh, we'll come back to you in about 40 minutes or so. In the meanwhile, just keep an eye on a couple of these options. With the Nifty having moved to levels that it has, we've seen the 20-day moving average easily being breached in yesterday's trading session, and that now stands as a key support zone as we're looking at it. For the Nifty Bank, it's an interesting setup because it conquered the 20-day moving average yesterday, crossed past the 51,000 mark, around that 51,250, but the 50-day moving average stands in the way of an up move. So there's a bit of a resistance for the Nifty Bank at the 51,400 mark as well. In the last 30 minutes, we'll have the financial services expiry play out. So Fin Nifty options, if you're looking at it, the index is currently at 23,650 and 23,650 put is extremely active. So maybe close to around 23,630, 23,640 is where the support is. If it breaks that down, then maybe we'll see further long unwinding out there. But on the way up, 23,700 call is extremely active, talking about a resistance out there. For the Nifty, 25,000 call writers still holding on with a premium of 100 rupees, telling you that if the Nifty holds above that 25,100 mark for a formidable period of time, maybe there could be short covering. There already is short covering at the 24,900 call, but at the same time, there's writing at the 24,900 put as well, telling you support around 24,850 and resistance upwards of 25,100 as well. But let's go across to Vivek now. Vivek joins in with a bunch of stocks which are buzzing around. The one on his radar today is which one, Vivek?
Well, the one that we are looking at today is Tata Power. Last evening there was some news flow that the company actually reported to the exchanges. So what was the news flow? Number one, the company said that they've gone ahead and commenced solar cell production at the 4.3 gigawatt solar cell and module manufacturing facility that the company has in Tirunelveli in Tamil Nadu. Now, it's 2 gigawatt as of now. The company expects to ramp it up further to another 2 gigawatt capacity that will be added over the next 4 to 6 weeks. Now, remember, the module production line has already been commissioned and has been operational since October 2023. Now, why are we focusing on this particular piece of news and why are we analyzing this in detail? Remember, very recently you had a new kid on the block, a company called Premier Energies that got listed, and that business is very similar to the solar cell as well as module manufacturing facility of Tata Power. Now remember, Premier Energies launched its IPO. When you're talking about the cell line capacity over there, it's 2 gigawatt, and the module manufacturing capacity over there, it is 3.36 gigawatt. When it comes to Tata Power, capacity is 6 gigawatt and 4.5 gigawatt respectively. While Tata Power has much higher capacity, one thing to note is that as far as the entire solar value chain is concerned, Tata Power does most of its work for its own captive projects, while Premier Energy will mainly go ahead and sell it to other or third-party players. Now, talking about the order book, Premier Energy, the solar modules order book, when you're comparing it, is at 3,825. Solar cells is at close to 1,900 crore. Tata Power, while they do not disclose the internals, the total order book for the solar EPC business is close to 15,640 crore. Now, what essentially is driving the excitement as far as Tata Power is concerned is that so far, most of the analysts, on the street actually valued both the thermal as well as the renewable business at par. But very recently, analysts have started changing their stance. In fact, UBS had done an initiated note on Tata Power in July 2024. Over there, they had given a target price of 510, and very interestingly, they went ahead and valued the renewable energy part of the business at 20 times EV to EBITDA versus just 10 times EV to EBITDA that they were giving the thermal business. They expect 27% of the total EBITDA that the company saw in FY24 coming from the renewable energy to go to almost 50% in FY29, and that they believe deserves and warrants a much higher valuation multiple.
All right, take that point. That's about Tata Power, UBS view. We also have Hemang Jani joining us now. Hemang, good afternoon. Welcome to the show. Tata Power, big gainer. What are your thoughts on this one?
Good afternoon, Mangalam. I think Tata Power has underperformed in the last, let's say, about a quarter or so. And while there is so much of excitement about the EV and the solar cell and the investment that Tata Power has made in the last, let's say, 1.5 years, what remains to be seen, Mangalam, is what kind of numbers are we really going to see in the near term? Because globally, if you see many of these, new technologies, particularly EV, solar, and many more, they are going through a bit of a corrective phase. Even the pricing in China suggests that there is a, some sort of a downtick. So while we do get excited about these, newer technologies and green energy, I think it would make sense to wait and see how the numbers or the earnings shapes up. So I would, stay away from Tata Power and all the related names, at least in the near term.
No, got that. The sector of the day is, of course, clearly IT, right? The Nifty IT index, the last I checked, was up some 2%. So it's a big mover. Lots of stocks are jumping. And Motilal's note, I think, is what has done it, at least today. They've upgraded their rating on the entire space. Rima is here with details. Rima, over to you.
Thanks so much for that. So Motilal Oswal, as you pointed out, has come out with a very long thematic research in the technology sector, and they believe after a very long period when we saw discretionary spending getting depressed, cut back, we're now on a path of recovery. So they have 4 top picks in the sector. So they like the entire sector. They have no sell call, only buys in neutral. But the top 4 picks that they have are HCL Tech, LTI Mindtree, Persistent, and the 4th one is Coforge, where this company has, where Motilal Oswal has upgraded it to a buy with a target price of 8,100. As I said, no sell calls. They've got a few buy calls like TCS, Infosys, LTTS, Cyient. They've got a few neutral calls as well. Also, according to their deep dive survey, there are 3 sectors which will lead the recovery. One is healthcare, the second one is manufacturing, and the third one is BFSI. So healthcare faces no risk of disruption because of the rise of GCCs. GCCs are global captive centers. Secondly, BFSI benefits from the interest rate cutting cycle in the US, but there is that threat of GCC, and manufacturing we know has done well. So HCL Tech is a beneficiary because they've got a high exposure to healthcare. LTI Mindtree, another stock that they like, benefits because its data engineering capabilities position it well to capture the Gen AI spending. Persistent has strong exposure to BFS and the healthcare sector. And Coforge, they've upgraded the valuation multiple, and they believe that Coforge will be able to extract the cost synergies from its Signity acquisition.
All right, Rima, thank you very much for that. Hemang, in this space, the IT services, you heard Rima there. This is, of course, a Motilal note. So what's top of mind for you? What strikes out to you?
Prashant, post the quarterly numbers and some of the key indications, particularly the fact that the hiring is back, some of the verticals are showing signs of revival, particularly BFSI, healthcare, etc. So from that perspective, as far as the large cap IT services are concerned, clearly HCL Tech and LTI Mindtree are the 2 names that should do well, and there is a certain amount of valuation comfort also. Whereas on the mid-cap side, Prashant, we prefer some of the India-focused companies, be it Naukri, where you have, the core business, returning to normal phase. Plus, you have added trigger in terms of Zomato and, couple of portals that they have. Apart from that, I think Zomato as a platform company has consolidated post the block deal, and the quarterly numbers are going to be quite, interesting in terms of Blinkit. So Zomato is something that we've been liking, and we think that there is some more upside, about 18-20% even from current levels.
Wow, 18-20% from even current levels. What's interesting is the jewelry space. That's been a buzz in today's trading session. Titan has moved to the high point of trade, currently sitting with a gain of almost 1.5%. If you look at it over the last 2 weeks or so, Titan has rallied about 6 or 7%. Remember putting out this piece on Editors Roundtable, Prashant, that over the last 2 years, Titan has done okay-ish, but the others have done a lot better. So 2 years ago, Titan was trading at 64 times, whereas Kalyan was trading at around 20 times. 1 year forward, with the kind of move that we've seen on Kalyan, Senco, etc., and the underperformance of Titan, Titan's multiple was close to 60 times, whereas the others were close to 40 and 50 times each. So the valuation gap of Titan and the others narrowed so much that maybe a lot of brokerages also are now looking at Titan as an attractive bet. Hemang, do you track the jewelry space? There you have it, 158, 9% of the last 12 months for Kalyan Jewelers versus Titan, just about 17%, and most of those 17% have come by in the last 20 days or so. Great work by the director here. Hemang, your thoughts on this space, and also if you track PN Gadgil, because the IPOs open today. Wonder whether you've seen something about the offer here.
Yes, we do cover jewelries as a space, and first of all, this PN Gadgil, I looked at the numbers and the issue per se, and clearly it looks quite interesting because right now it is focused more in Maharashtra with about 38, 39 stores. But when I look at the overall growth, it looks quite interesting, about 35% kind of a growth, a very high ROC and ROE, about 27, 28%. The only thing when I compare this with something like a Titan or maybe some of the other companies, the operating profit margin is about 4%, which is not bad. So I do think that though the valuations are 42 times on the issue price, this should do well given the excitement which we're seeing in the jewelry space per se. And apart from this, we do think that something like a Senco Gold, which has done very well and which again has a very high return ratios, and last 3 to 4 years growth has been more than 21% with a fair degree of visibility on the expansion. So I think these stocks are extremely well placed given the growth trajectory and the valuation comfort.
All right, Hemang, we'll leave it there. Thank you very much for joining us. Good to have you with us here. Thanks for your time. We'll take a break as well. We'll come back with Tushar Pradhan of Hexagon Partners on the other side for some more market conversations. Stay tuned.
Trong nhà kia đang ngập nước mà nước bây giờ nó là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand.
Okay, welcome back. 120 on the Nifty. So there is a little bit more give back, right? Now from the day's high, that's almost about 60-65 points in terms of a sell-off that we've seen. It was looking exceptionally strong. I mean, it's still a strong market, just under 0.5%. But we seem to have, got to that 25,100 mark. The day's high is 25,130, and then that pretty much was the high, and then we've come off to 25,060 or so. Tushar Pradhan is with us, director at Hexagon Partners. Tushar, good afternoon. Good to have you with us here. I hope I got that pronunciation right. Just a quick view on things. There's no stopping this market, and 0.5%, 100 points. Globally things are looking a little more quieter. We were a little quiet early August and maybe a little after that as well. But I don't know if we've got a trend on the upside once again. What's your sense? Could we see a sustained move higher, or you think only once we have, the Fed decision around the 18th of September, will global markets really give a real sense of which way we're headed?
Yeah, I think there has been a lot of strength in our markets, and that's something which is known for a while now. While there may be some bouts of, I would say, stability or maybe even slightly negative in the interim, I think the fact remains that you have tremendous macro tailwinds, ensuring that, you're not going to really get, a big shock to your market at any point of time. And as you mentioned, I think if there is something to do with the Federal Reserve and the decisions there, I think there might be a little bit bigger surprise in November, which I think most of the markets may be unprepared for. So if you're really looking at a risk, I think beyond the Fed move, I think the November election in the US is going to be a very significant direction to where markets will go in the interim, because these are two very distinct doctrines in terms of where the economy in the US is likely to go. And as you know, where the US economy goes, the world follows. So it's going to be a very stark change if there is a very dramatic, outcome in the US, whichever it is. And I think that is something to really be a little wary of. But I think currently, I don't think there is anything in the Indian markets to dislodge it from the strength. You've got tremendous domestic liquidity. You've got slightly increased interest from the foreigners. You've got tremendous corporate earnings as well as growth coming through the economy. So really nothing to worry about from that perspective.
Well, tremendous domestic liquidity. You said it, nearly 23,500 crores in terms of SIP for the previous month. The data just came by, and while the street was worried about mid caps and small caps, so the money is going into large caps. Yes, the money did go into large caps, close to 2,600 crores, but it also went into mid caps and small caps, close to 3,000, 4,000 crores each in both those funds. If I remember correctly, Tushar, you've been a proponent of low ticket rural consumption names. Over the last few trading sessions, in fact, last few weeks, the FMCG sector has come on its own. Rural's doing, well. The expectation is that post-monsoon, ahead of festive season, things are likely to look up after what was a long-drawn summer, or rather winter, for this sector. What are your thoughts here? Is there any name in particular that you like?
Well, I wouldn't like to name any names, but as I said, the general concept is that rural demand has been very weak throughout the last year. And that has been, really seen in the fact that fertilizer consumption, cement, all of the industries which actually took benefit out of domestic rural demand were really suffering throughout probably most of last year. Now, what has changed is that we've got an above average monsoon. If you look at the reservoirs in India, I think they're at maybe 104 or 105%, if I'm not mistaken, in terms of the total reservoir reserve strength now that we have. And that makes for a very, very good Rabi season, which means that potentially the winter crop is going to be bumper, in addition to whatever you may have as a Kharif season coming through the harvest even now. Now that really spells for the fact that there is a tremendous amount of latent demand which was not satisfied last year, which is likely to follow through. And I think that it's a good, really portent of things to happen, because it really lifts a lot of sentiment across a very broad spectrum of the population. So it is not only urban centric that we are looking at demand, but we are actually now at the cusp of possibly having a very, very sustained across the board recovery in the economy. And that will, of course, lead to very significant GDP growth as we add that up towards the end of the year. So I think rural demand is likely to be very key to sustain market activity, because then it will now float to companies which actually serve that. And it's up to you to find out, some of the companies which are actually, out there, which are at the forefront of such consumption.
Consumption of another kind, right? Global spirits is up 14%. Stocks are about 1243. And look at like something like Tilaknagar Industries, 7%, 7.5% higher. That's been a big mover actually last few weeks.
We had Tilaknagar Industries on our channel yesterday. In fact, they did say that the new liquor policy that would come by in Andhra Pradesh would help increase their volumes on a compounded basis of close to 8 to 10% over the next 3-4 years. And their new business, which is flavored brandy, they call it Flandy, that has done extremely well. Just one launch and it's about 10% of the mother brand. So all these factors are playing out for them, and they are obviously turning debt free this year.
So 7 to 8% incremental on top of what they were already doing.
Yeah,
just because of Andhra.
Just because of Andhra. So basically 85% of their revenues come in from South India, nearly 30% comes in from Andhra. They were looking at the delta between Andhra and Telangana. Andhra volumes have been largely flattish over the last few years, and Telangana, because of this excise policy, has compounded at around 10 to 12%.
I see.
So if you look at Andhra's base, then maybe it's not out of whack to assume 8 to 10% compounding if the new policy is in place. Of course, all of this is subject to the new policy coming into place with effect from October 1st.
But it is coming into place from
That's
the
what
1st of October.
That's what
Or is there
everyone...
Is there a...
I mean, it is a when, but we don't know until it's done, right? That's policy.
Okay. But because these things would be notified. I mean, there'd be a starting date, implementation date effective. But we don't...
We don't have anything official. We don't have anything official yet.
All right. So expectations at this point in time. But yeah, I mean, this is a really nice large move that we're seeing. Stocks up, I think, about 35-40% for the year so far. And this month is turning out to be pretty good as well. Tushar, do you track any of these companies, alcohol companies?
Not particularly, but I think there is a tremendous demographic dividend that I think we should look at from looking at these companies as well. Though I'm not particularly interested in them as such, but I think one of the things that India will clearly graduate to is increased penetration of consumption which are income related. So I think most of the bottom of the pyramid kind of stories are already covered. But I think what we are really looking at is premiumization. So within that pack, I think what I would be interested would be, how much of that is really impacting the higher end. And because the higher end has not really been penetrated as much, there may be reasons to believe that there might be some more interesting longer term trends which are coming out in that field. When it comes to some of the more basic liquor products, I think that's something of a story which is normally not that exciting from my perspective.
All right, take that point. Always a pleasure speaking with you, Tushar. Short, but a very insightful chat that we've had on the market so far. Speaking about the markets itself, the 3 p.m. move for the Nifty Financial Services has been on the downside. So we were talking about some support coming in at 23,650 that actually has broken. Now the Nifty Financial Service Index is just 30 points above that 23,600 mark. 23,600 put writers are also fairly active. So will it support? Will it take some support at those levels or not? Is one of the questions that we'll get an answer to over the next 10 to 15 odd minutes. But that's reflected in the Nifty Bank as well, which now is holding with gains of just 125 points, and the Nifty 2, which was closer to that 25,100 mark at the start of the show, is now just above 25,000 by the skin of its teeth. It's fallen a fair bit from the highs as well. So we'll keep an eye out on the markets. But as we do that, also let's listen into some exciting conversation that is coming from the management of Ashok Leyland. They expect a big pickup in the demand for the CV industry starting October. The MD and CEO Shenu Agarwal spoke with Parikshit Luthra.
We are in a situation where there are conflicting views coming on the CV industry. And from our perspective, I just want to give you a little bit of background before I come to, the whole year's view. At the beginning of the year or before the beginning of the year, most of the people thought that H1 would be very, very down. Some of the agencies were even forecasting H1 with a 15% degrowth. Even for the whole year, I think most of the industry was of the view that we will be doing less than last year. However, I think with the Q1 behind us now, which has seen significant growth in CV industry, I think the view has changed. Even some of the recent reports from the research agencies are now suggesting a positive growth in the CV industry for the whole year. I think more or less we think that it will be a positive year, not just overall, but also for MHCV, even for trucks, it should be slightly positive. Buses are doing already very well. I think light commercial vehicles should also start doing well. I think the only argument that we are having right now is July and August have not fared that well. But I think we believe, at least at Ashok Leyland, we believe that it is a temporary phenomena, and it has been caused because of two reasons. One is inordinate rains. Because of that, I think the momentum has slowed down. And the other is that post the elections, the uptick in the construction projects and infrastructure projects has been slightly on the slower side. But I think both these things are going to change very soon. And we are very hopeful that from October onwards, the industry will see an uptick.
Okay. Any ballpark figure or percentage in terms of growth that you're looking at?
I don't want to guess a number exactly right now. But I would say that on the truck side, we are hoping it will be single digit, maybe somewhere between 3 to 5% on the heavy duty truck side. I think buses are doing very, very well, so bus will continue to do well. And LCV also, I think, would see some growth in the second half of the year.
What is the current capacity utilization?
Capacity is not a constraint. At Ashok Leyland, we are roughly at about 70 to 75% capacity. So we have a lot of headroom. But I think at the industry level also, capacity is not a constraint.
Right. When it comes to capital investment, give us a sense of where is the bulk of your capex going for this fiscal, and could you give us a sense of how much would you like to invest over the next 2 years across technologies?
See, most of our investments would be in the area of the new technologies centered around alternative fuels and electrification. That is for sure. We know that this industry is going to adopt electrification or alternative fuels in due course of time. And it is very important that not just we invest in the technologies for the future, but we also mature these technologies to a level where they become very affordable so that adoption can happen. Right, so most of our capex, not just in the year, but also in the next few years, would be in this area. Other than this, there would be just normal capex, which would be just sustenance capex. I don't think the industry or Ashok Leyland, I can say for sure, would have to invest too much on the capacity side in the next few years.
Now, when it comes to the FAME scheme, have you faced any kind of issues with FAME 2, and has there been any recommendation from you to the government either to widen the scope or maybe make some policy tweaks for the CV industry specifically?
Nothing of any significant nature from the CV industry point of view. Of course, the buses, the city buses and the LCVs were already part of FAME 2. We would like that to continue because I think the industry needs support for next few more years in these two segments. In FAME 2, we did not have the heavy-duty trucks included last time, and therefore we are hoping that the government would also bring in heavy-duty trucks under the FAME.
Okay, we'll take a break here. That's the management of Ashok Leyland in conversation with my colleague Parikshit. We come back with D Street Chatter. Nimesh joins us for that, and some trading ideas after that. Stay with us.
Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
We've been underweight banks for a very long time, almost 2 years, but now we are gradually closing underweight positions because we think probably we are in the last leg of cyclical slowdown in the loan growth. Probably we see loan growth picking up from next year onwards, and probably once we have few rate cuts in place, we'll see some initial margin pressures on banks for the next few quarters. But we don't see that as significant. And the fact remains that in a market which has moved pretty sharply over the last 18 months, banks is now one segment of the market where valuations are far more reasonable compared to the overall market or the broader market. And more importantly, asset quality for the banking sector seems fairly benign. Large banks are in a very sweet spot in the sense credit cost is extremely low or very benign, and growth is reasonable. And on top of that, as I said, valuations are pretty reasonable. So sum total of all of it, we are turning positive on banks, as you said, some of the larger private sector banks and including SBI as well. And probably But from our point of view, we as investors take a view which is slightly more medium term over the next few years. And from that point of view, banks certainly look much more attractive than some of the other pockets of the market at this point of time.
Okay, welcome back. I mean, this is a bit of a drop down from the day's highest point, as we've been telling you. So from 25,130, the markets dropped off by about 80 points or so as we trade with about, 20 minutes to go for market closing. Well, let's get you what's happening on in dealing rooms. And Nimesh has been working the phones as always to get us a real-time sense of what's going on. Nimesh, take it away. What are you picking up?
Hi, Prashant. Marginally off days high, but still a good day for the market, largely backed by institutional buying. So I understand there are very strong buy flows today. The indication is the buy-sell ratio is close to 3:1, which means 3 buys for 1 sell. So that's the kind of momentum which is there from the flow perspective. Technology has done well today, largely on back of multiple upgrades which have come in the last few days, and also the Oracle numbers were quite strong. So that's one leg which has actually helped the markets do well today, and that's one space which is well bid as well from larger FIs. Even the broader market has done well today. The index is up 1%, but again there looks like it's very concentrated to few sectors. So even in the broader market, technology has done well, select pharma has done well today. So as I said, a strong day backed by FI buying, and looks like the momentum seems to be clearly with tech and pharma stocks.
All right, so that's about the market setup. Nimesh, what are the individual stock news pieces that you've picked up?
Well, so the first stock on my list today is Polycab. That's been buzzing in trade. The volumes are on the higher side. I understand there are very strong buy flows from larger HNIs, and also the street is anticipating a large order win for the company very soon. So that's the first name. The second stock is Vindhya Telelinks, a small stock, 2,700 crore market cap, thinly traded as well. In fact, the stock has done nothing since the beginning of the year, just up 8%. But I understand a leading PMS is an active seller and can be cleaned out very soon. So that's something to track in Vindhya Telelinks. The third name is Brainbees Solutions, First Cry. Again, that's been consolidating post the listing, been pretty much flat off late. But again, I understand the accumulation has started at a leading FI desk in Brainbees for a long only fund. So looks like some bit of delivery-based buying happening there. And the last one is Coforge. Big move in that stock. Rima explained on the back of big upgrades coming in. But in general, there has been very strong buy flows across technology names, and Coforge stands out. So expect very high delivery volumes in Coforge today.
Absolutely. Nimesh, on this Voda idea, that creeping acquisition which we flashed, which we put out, it's a small amount, but how is the street taking it?
Well, as you rightly pointed, it's a small amount. If you just add the number to close to 2 crore shares, even if you assume at 13 rupees per share, which was the low on Friday when the stock ended 10% lower, it's amount to just 26 crores. But it's all about statement, right? On a panic day to come for the promoters to come out and make the statement that they're looking to buy. And also, if you remember, Prashant, the preferential to the promoters was done at a much higher price, around 1480. So again, it makes sense from a promoter point of view that they did the pref at 1480 and to come and buy at 13 odd rupees. So I guess that's the more of a statement to me than anything else. A small buy of 2 crore shares, both by Kumar Mangalam as well as Pilani Investments. And we were aware of it, right? This was part of my chatter list yesterday, that watch out for a creeping acquisition announcement which can come very soon.
Oh, no, absolutely. That's bang on. Nimesh, the other one I want to just quickly run by you is Z. Was up, I think, 4-5%. Not sure if there's any news flow or any buzz around this one.
Well, again, the stock is buzzing in trade today. The volumes are on the higher side. Then, the chatter on Z keeps coming every now and then that again, the deal has resumed, the talks have resumed, and there could be a potential deal and all. I'm not too sure on the deal part, but just to highlight the management, which is Puneet Goenka, he is actually in person attending the CLSA Hong Kong conference. So 2 days is going to be there, and he's going to meet a lot of investors. So maybe that's created a bit of excitement, but not sure on whether there is any deal which is around the corner in Z.
All right. Z is never short of any sort of news coming by around that stock itself, and currently buzzing around with a gain of almost 4.5%. Typically, news follows the stock price move as against other way around. Let's welcome Mitesh Thakkar now to tell us about the tomorrow trade. Mitesh, you're back with us. What have you made of the market over the last 1 hour? Anything that stands out?
You guys are discussing Tata Power. I think if somebody missed a long trade there at lower levels, it tends to be taken as a BTST. Keep a stop at about 441, 454, 455 could be a good target for tomorrow. So that's one. And the other stock is NTPC. In a stock which is corrected a fair bit, is trying to bounce back from oversold levels. Here, keep a stop below 394. Look for targets of 401.
All right, take that point. So there's Tata Power and NTPC as buy today, sell tomorrow. If in case you've tuned in just now and looked at the market doing extremely well, let us tell you that the sector of the day clearly has been the pharmaceutical space. A big move coming by on names like Divi's Lab, which has been extending its gain. Also, was a recent underperformer, will be exiting Nifty. Typically, when that happens, stocks tend to bottom out, and from there itself, it's seen a decent rally up around 5% for Divi's Labs, and we've seen some traction in a lot of these other pharmaceutical names as well. Case in point, Alembic and Loris Labs, Ipca Labs, etc., which are seeing a lot of long positions being added. And the biggest reason that can be attributed to this is the US House of Representatives on Monday passed the Biosecure Act. And how will this impact the pharmaceutical companies in India? Ekta joins in to explain. Ekta.
Well, thanks for that. The US House of Representatives has passed the much discussed Biosecure Act, which now heads to the Senate for a vote. The act seeks to reduce American dependence on Chinese biotech companies over the next 8 years and has specifically mentioned 5 Chinese firms, including the likes of Wuxi Biologics. Now, pharmaceutical companies doing business with Chinese biotech companies have already been exploring ways to diversify their supplier base. Indian companies such as Divi's Labs, Syngene, Loris Labs, Piramal Pharma and Newland have become focal points of possible beneficiaries. Mostly all the companies have already witnessed increased exploratory discussions but are still to see conversion to business. However, they do expect possible business over the longer term and expect it to possibly start with smaller projects first. Loris Labs, for example, anticipates a gradual shift, while Piramal Pharma has noted an uptick in discussions. Syngene and Divi's Labs seem to be at the forefront of the opportunity. Syngene has said that they are participating in pilot projects related to the China switch and have seen a 50% rise in requests for proposals in the quarter gone by. Divi's Labs says that they are seeing opportunities in phase 2 and phase 3 and the possibility of being a second source in already commercialized drugs on the custom synthesis side. However, would take 3 to 4 years for everything to go through. Lastly, challenges for Indian companies include lagging behind in technology, experience, trust and competition from non-Chinese, non-Indian companies. So while positive, one has to see the opportunities materialize on a more tangible basis.
Take that point completely, Ekta. We had, Mr. Dagli coming in the afternoon as well, said that year 1, nothing happens. Year 2, little bit is what you hear. And it's the year 3 where you can actually see the opportunities being played out on a tangible basis, even though the opportunity is about 5 to 6 times what the largest player in the country is right now. There's only some part of it that we can benefit from. We'll keep an eye out on the space as it develops. Take a short break. On the other side, we talk about the market technicals. Jay Bala of Cash the Chaos joins in with his views. Welcome back. The Nifty holding around the levels that it fell from and to, so not falling further. The financial services index as well holding at lower levels as well. So no real problems for the market. Yes, there was a bit of an downtick from the highs, but not doing particularly badly. Jubilant Foodworks, that's a stock which is up nearly 4%. It's been one of those sleeper hits of the season. It's up almost 60% from March levels. In March, it hit its 52-week low, and from there it's rallied about 58, 59 odd percent. So pull up a 6-month chart, you probably realize the kind of ferocity of move that has happened in the 3 months. 28%. Things are coming together for this pizza maker. But how the things are placed for the market itself? We have Jay Bala from Cash the Chaos joining in. Jay, we saw a bit of a rally all the way to a record high in the previous week, and the last week, the week thereafter it was a lot of profit taking. Point to point on a 2-week basis, we were absolutely unchanged. Now as things stands, what are your thoughts on the market, and where do you think are the risks and the opportunities?
Yeah, good to be here, Mangalam. See, the market is trying to build a theme, in my opinion, into food, clothing, and chemicals. Not shelter, food, clothing, and chemicals. And we'll get to that in a bit. But whereas support for the Nifty comes at about 24,770, which it tried to break in the previous session, but just touched it on an intraday basis and recovered from there. And as I pointed out last time, weak seasonality is the headwind for the market. And also, I pointed out on 20th of August that Reliance coming rejection from 3,100 will also be a problem pocket for the market. So the market is doing that. Reliance has come off from 3,100 and trading about 2,900 and change. So that's the headwind for the market. But as long as 24,770 is protected, the market seems to be in a safe spot. Once 24,770 gets taken out, we're likely to see the market drop somewhere close to 23,800, and the volatility is likely to kick in further.
So then on the downside, what levels, Jay?
Yeah, after 24,770, I'm anticipating the market to go back and test the August lows of 23,800 and change, and that is an intermediate support at 24,400. So that's the midway point. It's a stop for the market. And likewise for the banking index, as long as it stays above 5,800, it seems okay. But the banking index is shade weaker. The only strong stock, in my opinion, is ICICI. Like I pointed out last Tuesday, it was not a breakout, and the markets have behaved in a weaker fashion, particularly the banking sector. So only above 51,960, you can see strength in the banking sector.
51,960. We're at about 51,300 at this point in time. And the recent swing high was 51,750. And you're watching 51,960 here as far as the banking sort of breakout is concerned. Okay, all right, got it. Now, just a quick word on the US indices as well. Jay, what's your sense, both the S&P and the NASDAQ?
Yeah, if the NASDAQ were to bounce, it must bounce today. It's come to a very important support and pause over there. The S&P has got a support somewhere about 5,300. So probably, if the markets were to crack, it's going to crack today. If it were to recover, it's going to recover today. So it's going to be a very important session for me. So watching it very closely. Still with the view that there is one final higher high pending for the S&P. May not be for the NASDAQ because there's tremendous amount of weakness in the stocks indices. So it might be the new high for S&P, or if there's a new high for NASDAQ, it might be a new high that falters. So, all right. So probably the last leg of the move for the US markets.
All right. Thank you for joining in. Just hang in there. We'll come back to you after market close in our special Markets Forward segment and perhaps explore more into this food, clothing and chemicals space that you're talking about and seeking ideas there. So viewers, just stay tuned. We'll address the market close, and thereafter in our special program, every day post markets, Markets Forward that is, we will continue our conversation with Jay Bala as well. But let's recap, Prashant.
No, absolutely. And, good session, right? I mean, 100 plus points on the Nifty, although could have been better, but, that's all relative. But nothing to complain really, because yesterday was a strong day, 200 points off the day's low. Today, of course, a little bit off the day's high, but still 100 good points day on day. The Sensex ends about 400 points higher. The Nifty Bank ends about 1/3% higher as well. Actually, technically, it's a pretty classic day because, I mean, we put out that the target at about 21,100 in the morning on the Nifty. The high was 21,130, so touched that, moved above that intraday for a very brief while, and then it respected that, and we've moved back down once again. Sectorally speaking, IT standout sector of the day, about a 2% pop, almost just under 2% by close. Yesterday, the PSUs were a big laggard. They were not a big participant one way or the other today, but managed about 0.5% higher kind of a close. The other sector were the FMCG and consumer areas, which were big outperformers yesterday. Today, I mean, on your screen, little quieter in those parts as well. Market breadth pretty solid. Long list of big volume-led gainers is what you had today in terms of trade. As far as losers on the Nifty are concerned, actually two stand out, which we've not discussed that much. We'll talk about them in just a bit. Life insurance names, actually. HDFC Life, SBI Life, both cracked 4%. And you also actually had ICICI Lombard, which was down in a trade. I think there was a brokerage call. For life insurers and general insurers, we've seen monthly sales, monthly numbers, premium numbers which have come through. And there seems to be, at the margin, a bit of a slowdown which has been observed vis-a-vis the prior month, which is July.
Additionally, no relief coming in on the GST front as well. The GST Council referring it to an expert panel as well. But no problems for the mid-cap end of things. In fact, the mid-cap index did extremely well, ended 700 points higher. Nearly 3 stocks advancing for every stock that declined. And that distance between the advance and decline was maintained through the course of the session. We had Tata Power, which was up about 7% among the top F&O gainers, started its solar cell production. First Source was up 5% as well. Rima spoke about Coforge, brokerages positive on that front. Indian Hotels continues to do well, and we did see some traction on Z as well. Among the top F&O losers, optically Vedanta was lower by 4%, but remember the stock went ex-dividends, so not a decline, so to say. Oil India was lower, as was PFC, Canfin Homes and JK Cements. From the broader markets, the pack that stood out today was definitely the Alcobev pack, where you did see some traction in names like Globus Spirits, also Tilak Nagar Industries, GM Breweries, all of them gaining anywhere between 8 to 13 odd%. So we'll keep an eye out on all these things. All said and done, great set of a session for the mid-cap end of things. The frontline indices, of course, we did see a triple-digit gain on the Nifty off the highs of the day, but definitely well off yesterday's close as well.
All right. Well, I think, we're going to say goodbye for now, because you're going to see us on the other side in just a bit. From now, markets forward, we'll pick up on all the action, and we'll touch upon some of these specifics from today and tell you what you need to know as we look forward to tomorrow's session that's coming up in just a bit.
मैच में एक और बहुत ही बढ़िया एक खूबसूरत चीज़ है कि आपके मैच में एक और आर्चर है जिनकी बहुत बात हो रही है, शीतल देवी। वो काफ़ी चीयर करती हुई नजर आई। सिर्फ 17 साल की है वो। उनके परफॉर्मेंस के बारे में क्या कहना चाहेंगे? कैसा
Market ends off the day is high, but Nifty reclaims the 25,100 mark intraday and closes below that by 3:30. Sensex rises almost 400 points. Significant outperformance by the broader market. IT stocks lead the up move with the index clocking in almost 2% gains.
The US House of Representatives has passed the Biosecure Act, which seeks to curb biotech imports from China by 2032. The move presents an opportunity for Indian pharma companies to fill that gap. Stocks of likely beneficiaries rally.
Tata Motors is calling for FAME 3 to be extended to light, medium and heavy commercial vehicles, while Maruti says it will launch a 500-kilometer range electric vehicle. This even as Ather Energy rides towards Dalal Street with an IPO filing. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need as you look forward to a fresh new trading session. I'm Prashant. With me, my colleague Mangalam Malu. Mangalam, hi.
Hi, it was a good day of trade, right? I mean, the Nifty did hit that 25,100 mark, give or take a few points. It ended with a 100-point gain as well. The mid-caps, after underperformance yesterday, came back to the party.
No, they came back to the party and, we'll sort of talk about all of this. So let me just quickly run you through the indices, right? I mean, the Nifty will come up on your screen. At the day's high, cruising above the 25,100 level, 25,130 was the mark. And it seemed an exceptionally strong day. It was a strong day. I think you could cut off the exceptional part by close because we did give up about 80 points from the day's high. So that's the index, the Nifty. The Bank Nifty ending above an important sort of technical level. That's 51,222. That is a retracement of the recent fall, about 1/3% there. The clean winners were the mid and small cap indices. Those were both with 1% plus gains by close today. Now, in terms of sectors, IT with just under 2%, and Hormuz, of course, will outline all the stocks which moved in the IT space and, of course, otherwise in other parts of the market as well. So, all in all, a pretty decent session is what we had. And, of course, later tonight, there's the big event, which is the US presidential debate. It's not expected to move markets in any significant way. But remember, it did cause Joe Biden to step down. I mean, by all accounts, that's the debate after which calls for him to step away increased and Kamala Harris stepped in. So that is, of course, later tonight for us. I think it's going to be early morning when we are coming in. So that'll be closely watched. Market moving or not, I mean, I think an important cue. So there are two things. One is, of course, the rate decision by the Fed. The other is, of course, in 2 months, you'll have a new administration in the White House. Mangalam.
Well, the decline from highs today can perhaps be attributed to technical factors as well. There was a lot of call writing at the 25,000 mark for the Nifty, hoping for resistance at 25,100, which is why maybe the Nifty could not sustain above those levels. And then the Nifty Bank as well, closer to 51,400 thereabouts was the 50-day moving average, which could have been a bit of a resistance. And the third factor was the Nifty Financial Services expiry. So if you pull up the intraday chart of the Nifty Financial Services, the street was poised for a range between 23,650 and 23,700. The Financial Services Index did go below that 23,620 mark as well at one point, but recovered from those levels to end at the lower end of that range of 23,650. Tomorrow will be the Nifty Bank weekly options expiry, so to that extent, that will be important as well. What was heartening, however, was the way the mid-cap index came back after yesterday's underperformance. In fact, yesterday, that was the only index, the frontline index which ended with a cut of almost 0.25%, was off lows, but also an underperformer. And today, the crisscross lines come up for you. They did not criss or cross. There was a railway track sort of parallel distance maintained between the advances and the declines. There you see it, 1,700 stocks ended higher for about 700 stocks which ended lower. For most part of the day, the 3:1 distance was maintained with a lot more stocks moving higher. But let's tell you what we've lined up in today's show for you. We started the top movers and shakers of the day with Hormaz as always. Stock of the day is Tata Power, and IT and pharma stocks were also in focus. So stay tuned as we tell you the key reasons why these stocks took the spotlight today. CNBC-TV18's popular segment, D-Street Chatter, also on the show with Nimesh telling us why Polycab was buzzing today. And last but not the least, we prepare you for tomorrow by telling you all the key events to watch out for tomorrow's trading session. So, as we said, at the top itself, the first segment of the day, Hormaz Fatakia joins in from the big wall to talk us through all the top stock movers of the day. Hormaz.
Well, if the advanced decline ratio was a railway track, there were lots of stocks that were moving on those with absolute green signals, and starting off with the IT names as the sector of the day, you could call it that, and almost every constituent of the Nifty IT index ending higher today, starting off with Coforge with that upgrade that came in for the stock, LTI, Mindtree, Emphasis, Persistent, Infosys and TCS, the heavyweights, not in percentage terms, but substantial contributors to the Nifty upside in today's session. There was also some significant buying seen in a lot of these Tata Group companies, and that is where TCS finds a mention. At one point, the stock was up almost 2%, but Tata Power led the charge for the Tata Group company, 6.5% higher, ending at the highest point of the day as well. So good going for Tata Power. Buying also seen in Tata Communications, Indian Hotels and Titan as well in today's session. Pharma had a good day. It was also because of a lot of news flow related events that came in for these pharma companies, with the passing of the Biosecure Act as well. Laurus Labs, Divi's, Piramal Pharma, Syngene, almost all of them related to that. Piramal Pharma ending with gains of 10% in today's session, and Granules also having a good day in the office. A lot of stocks won orders. There were pacts that were signed. All of them had an impact today. ITI won another order today, another 5% added to that. HG Infra ending 7% higher. Good day for that. And IREDA and SJVN among the PSUs had a good day at the office. And lastly, volume buzzers in today's trading session. Stocks that did well on the back of very strong volumes. Paytm, Geo Financial. Prism Johnson was the one ending at the highest point of the day, almost 20% higher for Prism Johnson, and Suzlon along with Bharti Airtel also find a mention in the volume buzzers. Back to you guys.
I mean, thanks very much. Paytm came off from the day's highest point. At one point was up about 8%. Piramal Pharma, as Hormaz mentions, rocket. I mean, actually starting about 315, it moved up very, very sharply. I mean, I think about a 5% move coming in the last 5 minutes, last 15 minutes or so of trade. So a fair bit of action and activity. Let's welcome in Jay Bala, who's of course with us to run us through some of the price action. Jay, thanks for waiting. Why don't we quickly summarize? Deepan is also with us. Deepan, hi. Good afternoon. Good to have you back.
Thank you.
Jay, quick sort of summary of the price action and what's the road ahead according to you? Nifty, Bank Nifty.
Yeah, I'm anticipating volatility to come in, and 24,770 would be the trigger point for me. And the Bank Nifty is weaker. As long as it stays above 58.70, I think it should be okay. But only above 51.950, I will anticipate strength for the banking index. And the emerging theme for me, as I said in the earlier section, is food, clothing, and chemicals. So the broader market seems to be signaling that. So and the weakness probably, if it were to come through, it will come from Reliance. And reality is already an avoid for me. And autos and capital goods are middling. We don't want to see auto below 24,400 for bullishness, and we don't want to see capital goods below 69,200 for bullishness. If that were to sit in, we will see further weakness for the markets.
So the view is Bank Nifty needs to take out 51,960. The Nifty, you think, has got a retest pending at the recent low, swing low, which is 24,750 or so. So some volatility basically is what Jay is alluding to. Deepan, coming to you with some specific stock questions, but Tata Motors is what we want to address first. Stock was up about 6%. Vivek is here to tell us what's happening and what the market was making of this one. Vivek, over to you. Vivek, take it away. Tata Power.
Good afternoon. That's right. So Tata Power was in focus today, one of the top gainers in the entire power pack, and was amongst the top gainers even in the F&O space. So, basically last evening, the company gave an update to the exchanges where they said that they've commenced solar cell production at the 4.3 gigawatt solar cell and module manufacturing plant that the company has at Tirunelveli in Tamil Nadu. Remember, in October 2023, the company's module production had already been commissioned and had started. Now, just to give some perspective as to what exactly this means as far as Tata Power is concerned and how exactly are analysts looking at this particular development. First up, remember, there was a recent listing of a company called Premier Energies, which is present in a very similar line of business, and we did a quick comparison of Tata Power's capacity and Premier Energies' capacity. Tata Power, remember, total capacity, cell line of 6 gigawatt, module line of 4.5 gigawatt, Premier Energies cell line 2 gigawatt and module of 3.36 gigawatt. Remember, when you're talking about Premier Energy currently trading at a much higher valuation, when you're looking at it at EV to EBITDA compared to what analysts were penciling in for Tata Power in their SOTP valuation as far as the renewable energy business is concerned. Let's have a look at the volume. Let's have a look at the order book. When you're talking about Premier Energies, the solar modules order book at a little over 3,800 crore, solar cell order book at around 1,900 crore. Tata Power, while they don't give a breakup, the solar EPC business order book at well over 15,600 crore. Now, given that particular fact and the kind of visibility, analysts, in the past have already started penciling in and giving a much higher valuation multiple as far as the renewable energy business is concerned. Remember, in July, UBS had initiated coverage on Tata Power. They'd given a buy rating. They have a target price of close to 510 rupees a share, while they go ahead and expect EBITDA share from renewables to reach around 50% in FY29 from just around 29% in FY24. And on the back of that, they actually value the growing renewable energy value chain at close to 20 times EV to EBITDA, while they go ahead and value the thermal part of the business at just around 10 times EV to EBITDA. On the back of that, you saw a strong surge, and people have now started giving a much higher multiple to the renewable part of Tata Power's solar energy business compared to what they were giving earlier, and that explains the kind of up move we saw in the stock today.
Absolutely, Vivek, up nearly 7% for today. But remember, Tata Power being, 1/10 the price that it was just about 4 years ago. So it's been a big mover. Nearly 10 times in the last 4 years. It continues to move higher. Brokerages continue to see reasons to be positive on that. Dipan, on this entire power space itself, Vivek did allude to the Premier listing. Over 140% was, the sort of listing that we saw on that stock as well. Obviously, on the IPO side of things, there have been a few extremes. But do you think that should be something that one should take note of when they value the solar business of Tata Power? And what are your thoughts on Tata Power?
No, I think I was also surprised with the kind of presentation brief one which was made. It looks very impressive from that point of view when you look at what Premier has to offer and what Tata Power already does. And do keep in mind that Tata Power has the advantage of a lot of captive business as well. And certainly the brand and execution will ascribe a premium to that as well. So definitely one should look at Tata Power more closely. The thing about Tata Power is it's a complicated company. It's got coal mines in Indonesia, has got that coastal power plant, which has not been Mundra, which has not been functioning optimally and has been surging losses over there. It has a distribution, transmission. So it's got many moving parts, which is why getting a perfect handle on the valuation of Tata Power is a bit difficult. But I think if more and more revenues are going to come from the renewable side, and that's going to grow at a significantly higher pace, then eventually you will have more stability in earnings, and that will mean a higher PE multiple. And considering the size and the kind of Tata brand corporate governance standards it brings to the table, this stock certainly looks very interesting and definitely worth going deeper into.
Okay, fair enough. Let's talk about IT as well, right? Because IT as a sector was the big gainer today. And I'm going to get to both Deepan and Jay for their views. But Reema is going to summarize the reason why the sector jumped. There was a report from Motilal today. Reema, take it away.
Thanks so much for that. So Motilal Oswal, as you pointed out, has come out with a very long thematic research in the technology sector, and they believe after a very long period when we saw discretionary spending getting depressed, cut back, we're now on a path of recovery. So they have 4 top picks in the sector. So they like the entire sector. They have no sell call, only buys in neutral. But the top 4 picks that they have are HCL Tech, LTI Mindtree, Persistent, and the 4th one is Coforge, where this company has, where Motilal Oswal has upgraded it to a buy with a target market price of 8,100. As I said, no sell calls. They've got a few buy calls like TCS, Infosys, LTTS, Cyient. They've got a few neutral calls as well. Also, according to their deep dive survey, there are three sectors which will lead the recovery. One is healthcare, the second one is manufacturing, and the third one is BFSI. So healthcare faces no risk of disruption because of the rise of GCCs. GCCs are global captive centers. Secondly, BFSI benefits from the interest rate cutting cycle in the US, but there is that threat of GCC, and manufacturing we know has done well. So HCL Tech is a beneficiary because they've got a high exposure to healthcare. LTI Mindtree, another stock that they like, benefits because its data engineering capabilities position it well to capture the Gen AI spending. Persistent has strong exposure to BFS and the healthcare sector. And Coforge, they've upgraded the valuation multiple, and they believe that Coforge will be able to extract the cost synergies from its Cigniti acquisition.
Right, that's about the IT space and why Coforge in particular was buzzing on the back of that Motilal Oswal note. But Jay, technically speaking, what are your thoughts on the IT index and what is it correlated to? Are there things that we need to keep in mind?
Yeah, I think the IT sector is running into an exhaustion point. I've been pointing out for the past few weeks that it's got important resistance at 4,300 to 4,400. The July or the last week high was about 43,200. And if there's going to be a new high, I think it will be a bull trap, but it's too early to preempt the market. The first warning sign will come if the Nifty IT index were to trade below 41,000. Although the reversal for the sector is about 37,700, but 41,000 will be an early warning signal for me. And obviously, I anticipate the frontline IT, which I have not been so bullish on, but I've been very bullish on the mid-cap and the small-cap IT names. I expect frontline IT to falter, and that will be the drag for the market. But watch out, 41,000 is an important warning signal.
Deepan, you have a pick here? IT services?
No, I think I like the list picked by Motilal Oswal, especially HCL Tech and Coforge. These are two companies which have generally outperformed the last cycle, upcycle, and Coforge especially, I think, very aggressive when it comes to marketing and pretty diversified revenue stream from various verticals. And, these are cyclical businesses as well. There's some cyclicality, and if eventually spending is going to pick up, then these companies will certainly benefit. It's just where I'm stuck on an IT is the exact opportunity of artificial intelligence. And that's not getting very clear. Is it the size of that Y2K or internet of when companies went on the web or remote infrastructure management? How big is the opportunity? That is not very clear. And if that opportunity is really huge, then I think next 3-4 years will be extremely positive for IT companies. But if it's just a passing phase like what we saw in blockchain, then certainly I think there could be a few challenges. But by and large, it is a safe space to be in. The IT services companies, they're reasonably valued, good corporate governance standards, great distribution in terms of profits to dividends and buyback, and great value creators, I would say. So at a time when a lot of stocks are in the domestic side, industrials are trading at such rich PE multiples, this is one sector where I think the risk return certainly favors the investor.
All right, that's your view on the IT space. HCL Tech also has the benefit of relatively low valuations as against the other four peers on the frontline index itself. Let's talk about the next sector, which was clearly the sector of the day. We had Divi's Lab, Loris Lab, Piramal Pharma, all of them surging today. The pharmaceutical stocks were in focus as the US House of Representatives passed the Biosecure Act, which seeks to curb biotech imports from China by 2032. Does India benefit from it? Well, Ekta Batra joins in to tell us more. Ekta.
Well, thanks for that. The US House of Representatives has passed the much discussed Biosecure Act, which now heads to the Senate for a vote. The act seeks to reduce American dependence on Chinese biotech companies over the next 8 years and has specifically mentioned 5 Chinese firms, including the likes of Wuxi Biologics. Now, pharmaceutical companies doing business with Chinese biotech companies have already been exploring ways to diversify their supplier base. Indian companies such as Divi's Lab, Syngene, Loris Labs, Piramal Pharma and Newland have become focal points of possible beneficiaries, Mostly all the companies have already witnessed increased exploratory discussions but are still to see conversion to business. However, they do expect possible business over the longer term and expect it to possibly start with smaller projects first. Loris Labs, for example, anticipates a gradual shift, while Piramal Pharma has noted an uptick in discussions. Syngene and Divi's Labs seem to be at the forefront of the opportunity. Syngene has said that they are participating in pilot projects related to the China switch and have seen a 50% rise in requests for proposals in the quarter gone by. Divi's Labs says that they are seeing opportunities in phase 2 and phase 3 and the possibility of being a second source in already commercialized drugs on the custom synthesis side. However, would take 3 to 4 years for everything to go through. Lastly, challenges for Indian companies include lagging behind in technology, experience, trust and competition from non-Chinese, non-Indian companies. So while positive, one has to see the opportunities materialize on a more tangible basis.
All right, Ekta, thanks a lot for that. One has to see the opportunities materialize on a more tangible basis. On that note, we'll thank both Jay and Deepan for joining us today with their valuable insights on stocks and sectors. Take a short break, come back. On the other side, we have the popular D Street Chatter segment along with top market events to watch out for tomorrow.
पैरालंपिक्स विलेज में, पेरिस विलेज में?
जी बिल्कुल, टीम सेपरेट अच्छी है और शीतल तो सबसे यंग आर्चर है इस कंटिजेंट की भी, हमारी टीम में भी। तो हम आपस में जब भी हम कंपटीशन में होते थे, हम 2 महीने पहले भी चेक रिपब्लिक में कंपटीशन में थे, तो मैं उस टाइम भी वहां पे 3 मेडल जीता था। तो हम आपस में, शीतल सबसे छोटी है तो हंसी मजाक करते थे, तो वो कहती थी भैया मैं आपको चीयर कर रही हूँ, आप जरूर मेडल जीतोगे। तो वही चीज, क्योंकि उसने मेडल जीत लिया था राकेश और शीतल ने, तो वो मेरे साथ वहां पे थी पूरी टीम के साथ, और सबसे छोटी बच्ची है तो देख के और भी ज्यादा खुशी होती थी कि वो चीयर कर रही है और वो चीजें काम भी आई। तो अच्छी बात है ये टीम स्पिरिट है कि आर्चर दूसरे को सपोर्ट करने के लिए ग्राउंड पे पहुंचते हैं, और क्योंकि वो उनकी अचीवमेंट इतनी ज्यादा है कि इस डिसेबिलिटी के बावजूद वो वर्ल्ड में अपना नाम बनाई है, तो डेफिनेटली उनकी जो मोटिवेशन है वो काम आती है एज ए टीममेट भी हमारी टीम।
Okay, welcome back. Let's tell you what D Street Chatter looks like. And Nimesh, of course, gets you a sense of what's happening in markets, what happened in markets, and what to watch out for. Nimesh, what's on your list today?
Prashant, markets gave up marginally towards the end, but nevertheless, a strong day of trade. The mid-cap index is up 1%, and a lot of sectors like technology and pharma were buzzing in trade. In terms of individual names, the first stock is Polycab. That was buzzing on good volumes. I understand there are some strong buy flows at HNI desk, and the city is anticipating a large order win for the company very soon. So that's the first name. The second stock is Vindhya Tailoring, a small stock, thinly traded as well. Again, the stock has been pretty much flat throughout the year, but I understand a leading PM is an active seller and could be cleaned out very soon. So that's the second name. The third name is Brainbees Solution, First Cry. Even that stock has been consolidating post the listing, but now I understand there is some accumulation happening from larger FIs in Brainbees at these levels. And the last is Coforge. Big move in that name within the IT name was the biggest gainer today. There were multiple upgrades as well, but I understand there was very strong buy flows from larger FIs. So it looks like the FIs are quite active buyers in Coforge at these levels.
All right, Nimesh, thanks a lot for that. With that, we have come to the close of today's show on Markets Forward. And as we wrap up, here's our favorite events to watch segment. All the events you need to keep an eye out on for tomorrow's trading session. Ekta brings you all of them.
Well, yes, the most important data point to watch out for tomorrow would be the US August CPI data, which will be released, but we will be reacting to it come Thursday. But separately, in terms of the global space, we will have the Reuters Tankan survey from Japan. We will have vehicle sales as well as the new yuan loans coming in from China, as well as the M2 money supply. From the UK, GDP as well as industrial production to watch out for. And the ECB member McCall's speech will be held tomorrow as well. Back home, Saturn Credit Care, there will be a board meeting for proposal for raising funds via NCD on a private placement basis. And Bajaj Housing Finance's IPO will close for subscription tomorrow as well.
All right, Ekta, thank you very much for that. Well, it's goodbye on this edition of Markets Forward. From Mangal and me, everyone on the team, thank you for staying with us. More news and updates after a quick break.
Sản của mình lên, hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc xe máy của bọn cô là trong nhà kia đang ngập nước, mà nước bây giờ nó là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The bulls continue to reclaim lost ground on the Lal Street. The Nifty moves back above 25,000. The Sensex gains over 360 points. Mid-caps outperform. Mutual fund investors turn towards large caps in August as inflows rise nearly fourfold. Hybrid funds see a decline in appetite. SIP contributions hit a record high of more than 23,500 lakh crore rupees. Congress makes fresh allegations of willful concealment against SEBI chief Madhavi Puri. Butch claims her husband received nearly 5 crore rupees from Mahindra & Mahindra in a 3-year period when SEBI issued 4 orders in matters related to the conglomerate. M&M terms the charges false and misleading, says Dhaval Butch was hired by the group in 2019 for his expertise in supply chain and sourcing. 67% of Indian bankers expect the current and savings deposit growth to slow further, according to a survey by the Banks Association and industry body FICCI. Majority expect credit growth to remain stable. 52% expect bad loans to stabilize in the next 6 months, but flag agri, textiles and MSME among potential sectors where stress may rise. More than 1,000 workers at Samsung's plant near Chennai on a strike for the second day demand increase in wages and recognition of the workers' union. Sources say more than 50% of the plant's workers are on strike currently. Tata Motors announces discounts on electric cars and ICE vehicles as the festive season kicks off with rising inventory. Maruti and Toyota bet big on hybrid vehicles as the industry remains hopeful about strong sales growth in the coming weeks. The US House of Representatives passes a new law to restrict biotech imports from China by 2032. The move presents an opportunity for Indian pharma companies to fill the gap in supply. Violence flares up in Manipur as 7 people are dead in the last 2 days. The state imposes a curfew across 3 districts prohibiting large gatherings and the movement of people. Tech giant Apple loses a 10-year court battle in Europe over its tax affairs in Ireland. The court orders Dublin to recover more than $14 billion in tax dues. Europe's top court also upholds a penalty of nearly $3 billion imposed on Google for abusing market dominance in the search business. Well, first half the day's market action, the Lal Street extended gains with the Nifty and the Sensex ending nearly 0.5% higher. The Nifty was back above the 25,000 mark and the mid-caps outperformed the blue chip with the index ending over 1% higher. So that's the story. The Sensex up 360 points, the Nifty Bank higher by about 150 points and 700 points of a gain coming in there for the mid-cap index. Prashant is standing by to wrap up the day's trading action for us. Prashant, green across the board today. What does Tuesday look like?
Well, a pretty decent day and the market bouncing once again. By 3:30 at close, we had come off about 80 points on the Nifty. So at one point, it looked like the index would end above the 25,100 level. Actually, the high was about 25,130. But then there was a bit of a give back which happened in the last 60 minutes of trade and the Nifty ending with gains, decent 100-plus point gains, but not at the day's highest point. Bank Nifty also about 1/3% higher. Mid-caps and small caps clearly much better. Each of these indices ending with gains of over 1% apiece. Now, I'll start with, what did well as far as large caps go. Divi's was a standout mover, large volumes as well. And IT, the IT index was up at one point about 2% plus, but ending with nearly 2% gain. So LTI, Mindtree, Wipro, HCL Tech were some of the other gainers. You also had a Bharti on the large caps front, which participated. Insurance stocks were on the back foot and financial services, a few others as well. So HDFC Life and SBI Life, prominent losers, 3.5-4% cuts. Bajaj Finserv was down. Actually, so was Shriram Finance, which was just pulled back after a recent run of strong performance. Broader market, because mid and small cap part of the market did well. Advanced decline was positive. So in terms of stocks, Tata Power, big mover. Piramal Pharma, Sumitomo Chemicals, Century Textiles, which is a real estate play, SJVN, Jubilant Engraver. You had Global Spirits, Tilaknagar Industries from the alcohol beverages space. Motisans, the jeweler, yesterday, of course, was a big day with all of them doing well. Today, there was one. You had Linde India, All Cargo Logistics, EPAC, Shriram Pistons, Suprajit Engineering, Bector Foods, NIIT Limited, and Latent View, just to give you a sampling of what did well. All of these backed by decent volumes. Some pullbacks, Premier Energies, which of course has been the blockbuster recent run-up IPO, that pulled back a bit. Oil India, you had Uno Minda, New India Assurance and Blue Jet were some of the other names which actually saw some amount of pullbacks today. Back to you.
All right, Prashant, many thanks for joining us. And staying with the markets, mutual fund investors turned towards large caps in August as inflows rose nearly fourfold compared to the previous month. Now, this comes even as inflows into mid-cap and small-cap funds remain steady. Investments through SIPs strong, hitting an all-time high of over 23,500 crores. However, hybrid funds have witnessed a decline in appetite as inflows fell 42% month on month, so the strong run for mutual funds continues. The annual convention of the Society of Indian Automobile Makers is kicked off in the national capital. The industry is entering the festive season with rising inventory and is dishing out discounts to spur sales. Tata Motors has cut the prices of its electric vehicles by up to 3 lakh rupees. Yesterday, the company announced price cuts for its ICE vehicles by up to 2 lakh rupees. Tata Motors has also called on the government to provide subsidy for medium and heavy-duty commercial vehicles under the FAME scheme. Maruti and Toyota are betting big on hybrid cars as the industry remains hopeful of strong sales growth in the festive season.
We are now looking at FAME 3 being rolled out, and we are also expecting as a commercial vehicle industry that the FAME 3 also includes N2 and N3 trucks, because it was limited to N1 category, which is up to 3.5 tons. We want N2 and N3, which is light, medium, heavy, to be included. We also want private buses to be included. And since for long distance haulage, I think hydrogen internal combustion engine is a good technology. Maybe we are also requesting the government to include this in the FAME incentive.
Be the market leader, give all the technology offering to the customer and let the customer decide. That's what we are trying to do, being the market leader. Now, coming to the hybrid, yes, the share of business of hybrid is going up as compared to the EV. You all know that hybrids are now, customers are preferring it. We are presently offering the strong hybrid only in 2 models. That is the Grand Vitara and the Invicto. So of that total sales, it is 16%.
We believe that there is no one single technology, be it hybrid, be BEV, that can address this overriding national goals. So as Toyota, we will continue to prioritize a multi-pathway wherein on top of complementing BEV, we believe in the role of hybrid electric vehicles, plug-in hybrids, electrified flexi-fuel vehicles and biofuel vehicles, and all of them we believe will have a significant contribution towards 2030.
And staying with the SIAM annual convention, Union Road Transport Minister Nitin Gadkari said the country needs to double the number of vehicles scrapping and automated fitness test centres. Gadkari also urged industry to help set up more scrapping centres as the national scrappage policy he believes is a win-win for all. Take a look.
For scrapping center, for fitness center, we need your cooperation. I feel that it is an economically viable venture which is going to support you to get more profits. Because by scrapping, you will reduce the cost of your components by 30 to 40%, 90% of the material which can be recycling, and because of that, your profit margin will be increased and you can reduce the cost of your final product.
Chinese electric vehicle maker BYD has raised its annual sales forecast courtesy a surge in purchase of plug-in hybrid vehicles. The EV giant has upped its annual target to 4 million units. Now, this compares to a previous guidance of around 3.6 million units. The positive outlook comes on the back of Chinese consumers flocking to buy EVs and hybrids in bigger numbers. The Congress party has made fresh allegations of willful concealment against the SEBI chief Madhavi Puri Butch. Addressing a press conference, party spokesperson Pawan Khera claims that the SEBI chief's husband received nearly 5 crore rupees from Mahindra & Mahindra between 2019 to 2022. During this period, SEBI issued 5 orders in matters related to the conglomerate. The Congress also alleges that Butch's consultancy firm Agora Advisory received income from M&M, Dr. Reddy's Labs, Pidilite, ICICI Bank and 2 other organizations while she was holding a position as the market regulator. Mahindra Group has responded to the allegations made by the Congress party, calling them false and misleading. The company said Dhaval Butch was appointed to the board of the group company in 2019 before Madhavi Puri Butch was appointed as the SEBI chief. Mahindra Group said that Dhaval Butch was roped in for his expertise in supply chain and sourcing. Take a look.
She earned through Agora 2 crore 95 lakh rupees between 2016-17, 19-20 and 23-24. All this while, she was whole-time member initially and then she became the chairperson of SEBI. अब आप पूछेंगे वो कौन सी कंपनीज हैं? नेक्स्ट स्लाइड. ये जो मैंने आपको फिगर दिया 2 करोड़ 95 लाख का, ये कमाया गया महिंद्रा एंड महिंद्रा लिमिटेड, डॉक्टर रेड्डीज, Pidilite, ICICI, Sembcorp और विसु लीजिंग एंड फाइनेंस। सबसे ज्यादा 88%, ये जो 2,95,00,000 का 88% महिंद्रा एंड महिंद्रा से कमाया गया, उनसे लिया गया। अघोरा ने लिया। द हस्बैंड ऑफ सेबी चेयरपर्सन माधवी पुरी जी, द हस्बैंड इज धवल बुच साहब, he got 4,78,00,000 rupees from Mahindra and Mahindra Group between 2019 and 2021.
Well, that's the latest set of allegations the Congress party has levelled against the SEBI chief, Madhavi Puri Butch. Now, Kenyan court has suspended a $2 billion deal between the country's government and Adani Airports Holding until it rules on the matter. The deal allows Adani to operate Kenya's Nairobi airport for 30 years. A slew of petitioners, including the Kenya Human Rights Commission, has argued that leasing the profitable airport to a private entity is irrational and unconstitutional. Well, here's the latest banking survey by FICCI and IBA, and it says that the resilience of the Indian economy and the banking sector is likely to continue, but it also warns of looming liquidity concerns. The 22 banks which participated in the survey have highlighted a key issue. They point out that with credit growth outstripping deposit growth, banks are facing pressure to raise deposits while keeping credit costs low. Ritu's here with the other highlights of the report. The chase for deposit growth, that of course continues to be the big concern and the big worry, Ritu. But outside of that, what else does the survey highlight?
Well, there are two prominent takeaways from this bankers survey. Number one, of course, the customer